There we go. That should do it. Thank you. There we go. Thank you, Andrew. One little thing that I need to click in the morning, adding myself to the stream as a presenter. Sometimes forget to click that or whatever. You can hear me now? Good. Thank you. Thank you, Andrew. Thanks. All right, got less than 3 minutes to go. All right. GE is at the top of yesterday's range. You can see that right here. Pre-market GE looks like it's going to continue. Bollinger Bands are starting to open up, so that's a good sign for GE. Okay, RSI is rising. GE RSI is rising. MACD, stochastics, everything is pointing higher. Okay, let's look at the 20 EMA on the 60-minute. Okay, we need to see this start to trend. Okay. Need to see it start trending more. GE Vernova also. Okay, that's trending. GE Healthcare. That's also trending. All right, so GEH, GEHC, GEV as well. Okay, so that looks good. Let's see. All right, let me get everything loaded up here. Okay. Walmart has a 5.8% expected move, at least at the close yesterday. We'll see if that increases at all. Okay. Alcoa also seeing some activity. All right, we're open. We're open. Okay, first 15 minutes, all I'm doing is taking profits off the table if it makes sense to do so. Okay. Snowflake, Micron, New York Fangs are off a bit. All the New York Fangs are off. Futures. Now let's see what futures are doing here. Futures off the best levels. Okay, dropping off here. Okay. GE pushing a bit higher. GE. Okay, Microsoft is off. Apple is off. Looking for some shorts to cover. All the New York Fangs are lower except for Google at the moment. Google trying to push a bit higher. NVIDIA is trying to catch a bid. Google, NVIDIA trying to catch a bid. Excuse me. Okay. Give it a few minutes for the markets to settle down. We're looking for a trend. Now let's see what hedge flows are saying. Hedge flows for now. By the way, let's see. Here we go. 6,800 to 6,900. That's the range we're still in. Okay, hedge flows are temporarily moving a bit lower. Hedge flow still pointing lower at the moment. Okay, let's look at some of the indicators like junk bonds. Let's see how that's doing this morning. All right, we're still hanging out near this 50-day. No signal here. Bonds, TLT. Okay, consolidating at the highs. The 10-year yield dropping off with that cash infusion by the Treasury. 8.3 billion. Okay. RSP. Equal weight S&P 500 sitting right where it was yesterday. New York Stock Exchange, not much movement at the moment. New York Stock Exchange is grinding a bit higher. Larger contingent of stocks, 2,400 components. About 70% are U.S.-based companies, high quality. About 25% are ADRs, American Depository Receipts, and about 5% are real estate investment trust, REITs. Okay, so this is grinding a bit higher at the moment. Okay, the New York Stock Exchange looks okay. Let's see what IWM looks like. IWM, a little choppy at the open. The Qs, a little choppy. Qs right now don't have much direction. S&P, we definitely want to stay above 6,800, else things get very sketchy. Okay, so I want to stay above that 6,800. All right, so Netflix is dropping off back to 76 and change. Microsoft dropping off a bit. Google's trying to bounce. So is Amazon. Amazon, pretty decent probability that this finds a footing down here. Amazon. All right, I might buy some Amazon down here. It's a little early. I'll go out a couple of months. Amazon. Let's see. Amazon. AMZN. Amazon's trying to push a bit. All right. Amazon, May 7th. It's got like a 21 forward PE. Walmart has like a 45. That was mentioned by, I believe, Russell a couple of days ago. Okay, Amazon. What can you do for us, Amazon? Let's see. Maybe out in March. 210s. Let's see what a 210s look like. 210. Yeah, can we get to the top of the range? 210 is a 210's a 40 delta. I might buy some of these as a spread buy. 210 vertical. 210, 215 are $180 right now. What's the probable outcome? 150 for $300. So it's about 2 to 1 risk reward on Amazon. 210, 215s, 210, 215s, Amazon. All right. I'm going to look at 210, 215s for about $1.70 or so. Let's see if these catch a bid here. I'm going to start some here, perhaps. Amazon. Okay, Amazon. Okay, watching this one. It's early. Give it a few minutes. All right, so all right, watching Amazon for follow through. All right, Amazon looking for a push here to 210. Sorry about that. 210. Amazon. Looking for a move back to 210. Okay, so that would be 210. So buy the 210. Buy the 210. Sell the 215. Okay, 210, 215. All right. Okay, Amazon. Let's see what you're doing. GE still pushing. GE looking good. Okay, New York Fangs. Everything's down except Amazon at the moment. Amazon, GE looks good. Futures turning back up. All right, let's keep an eye on Trace as well. Trace trying to turn back up. 6,800 support, 6,900 resistance. IWM looking good. IWM, Mondo's in IWM. Okay. Okay, IWM looks pretty good, actually. I like it. IWM. Let's look at the 60-minute. Okay, 60-minute IWM. It's above the 20 EMA, so that's a bullish trade. Somewhat sideways, but we could see 268 again, probably. All right, IWM looks good. IWM 268 is a 34 delta. The 40 deltas are 267. Maybe I'll get about a couple of those for now. Okay, looks good. IWM looks good. Watch IWM looking pretty good here. IWM. Nice follow through on IWM. Keep an eye on this for a minute. IWM. Okay, what's going on here on CNBC? Let's see what they're talking about. Okay, Nokia. Nokia, I know my son has the 5 call. Nokia. Amazon, looking good. Nokia. 7. Nokia is climbing the upper half of the Bollinger Bands. Nokia, NOK, NOK. IWM, looking good. IWM's on the move at the moment. Okay, coming out of a Bollinger Band squeeze on the 5-minute. All right, let's keep an eye on IWM. Futures are climbing at the moment. Okay, Amazon, GE, top of the NASDAQ 100, Cadence Design. Let's take a look at some of these. Cadence Design, CDNS, Cadence Design. Okay, Cadence Design moving higher. Cadence. Number 2 is VRSK, Verisk. VRSK. VRSK. It's only 9:46. We're 16 minutes into the trading day. Verisk fading from the gap up this morning. Verisk. We've got DoorDash coming up off the low. DoorDash. Palantir coming up off the low. Palantir is number 4. Palantir looks like a buy down here. Palantir mean reversion. Double bottom. Watch Palantir here. It might be a nice trade. Stop under stop under 125. Wow, it got all the way down there. Wow. Oh, shut up. Shut up with the advertising. I mean, they're heavily advertising these stupid games that people play on their phones. I mean, that's just dumb. Dumb waste of time. I have a hard time watching a football game. I mean, 3, 4 hours out of your day, unless I'm with a bunch of friends. Okay, Amazon watching that one. GE Palantir looks pretty good though, right? Palantir put a stop underneath 125. Maybe buy something out, say in June, July. Okay, S&P. S&P. Trying to get something going. We're below the 50-day. Trying to follow through. Okay. IWM looking better. IWM coming off of the low. Okay, IWM. Okay, markets are choppy at the moment. All right, what's the VIX doing? VIX Wednesday. VIX Wednesday. Okay, a little pullback to the 9 EMA. VIX still pretty elevated. VIX. Okay, I ran a scan. Let me take a look at some of these names. Before I do that, though, let me just finish up with the NASDAQ 100. Dexcom pushing higher. Dexcom looks good. Dexcom follow through. Dexcom follow through day rising. Okay, 200-day next. 200-day is next. Or Dexcom, DXCM. Okay, Synopsys, SNPS, Synopsys. That's okay, I guess. AppLovin, that had been running higher into the end of last year, then went sideways. AppLovin probably pushes a bit higher there. Synopsys, Palantir. Okay, those are okay. Shopify, that one took a deep plunge last week, Thursday, Friday, similar to what we had with Apple. Apple's trying to bounce, trying to get back above the 50-day. Microsoft, okay, Amazon, still watching Amazon coming off the low. Thinking Amazon by March, April, this could get back to 210. Pretty cheap spread, 210, 215, $170 per contract. Stop 75 cents if this reverses and rolls over. I don't see it doing that, but so yesterday was day 8 after earnings. Is that what that was? Okay, earnings for Amazon last time around, February 5th. Yeah, February 5th. Okay, that makes sense. That's February 5th. Okay, so they're still making money. 21 PE versus 45 forward PE for Walmart. So is this a opportunity? Well, we'll know pretty soon. I'd start off small. That's why I like doing a spread. This starts to get going. I'll sell, take profits, and maybe buy in the money options on this one. A synthetic shares for synthetic shares on this one. Amazon. New York Fangs are still mixed. Let's look at RSP again. RSP Doji inside day. No direction yet. RSI is still above 50. Volume was above average yesterday and on Friday. Stochastics turning up. MACD is grinding higher. Let's see what the Appel 3 times MACD looks like. I don't want to do that. I want to go here and do that. All right. So all MACDs are above their signal line except the short term. That needs to turn up for that. Okay, let's look at Amazon. Amazon. Okay, Amazon, the short-term MACD is turned. Okay, Amazon, this looks pretty good, right? Amazon, the idea here is uh, Gerald DePel, who designed MACD, he liked to look at a short term, a intermediate term, which is what people use as a default, 1226. 1226 is the intermediate time frame. He would use a short term for entry, intermediate to stay in the swing, and a long term to give us even a longer term view of what the momentum is currently, starting to work on Amazon. So this looks pretty good for a trade back to the 50 and the 200-day. It's a little early, so I would start small. If you're going to do like 25 options, 50 options, maybe you do 5, something like that. If you're going to buy 1,000 shares, maybe you buy 200 shares. If we're wrong, we get stopped out on 200 shares instead of 1,000 shares. You could also do, I think there's some derivatives that you could do at 2 times long. That's probably at a discount to this one at $200. But it's looking pretty good so far. I think this is a bargain down here for Amazon. Okay, let's do this. Amazon prospects, specs, considering the current oversold conditions. I can't type word the crap, so it's probably misspellings here. Look at options, open interest, changes, and assess probabilities for a move towards overhead 210, 215 zone, and the 200-day. Okay, we'll come back to that in a minute. Okay, IWM still pushing higher. IWM looking good. IWM. Amazon definitely on the move. Amazon working. Amazon is working. Amazon's working. Okay, Frano's on it too. She's looking at a few of those names. Good morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is a glorious Wednesday. I woke up and saw myself in the mirror. That was one of my father's favorite sayings. You see yourself in the mirror in the morning, that's a start to a good day. He had such a great attitude towards life, very optimistic. He would talk to everybody. He was constantly trying to set me up. What does that have to do with trading? Well, it looks like a good day. We start to a good day. It's Wednesday, February the 18th. Futures are starting to move higher. IWM being pointed out by Mondo. I like the idea as well. I'm going to stop doing the Friday trades that I usually do. Okay, this is like the second time I've gotten assigned IWM shares. It was last week. I think it was over the weekend. I found out that I had 500 shares of IWM. I don't like holding that many shares of something like a major index, because you never know when a news item will come out and it'll crush you. Hard to make up a $50,000, $100,000 loss if you get one of those gap downs. So what I've been doing is, if I like what I'm seeing, I would normally take a Friday option. I'll just go to Monday. That way I don't have to worry about it. If I lose track and I'm not following, for now, I'll follow IWM and see how this goes today. Amazon's going. We took a look at Amazon for a trade, the 210, 215 call spread. If this continues and we can get up to 210 here by the end of this week, I would look at March options, March or April. If we get up to 210 and beyond, if we get into the gap, I'll take profits, and then I'll take that money and I'll put it into either shares or in the money options as a synthetic options trade, looking for Amazon to regain lost ground. Okay, so that's a swing that I'm thinking about months out. Okay, RXT, you buying, Mr. Tuccini? You've been on a roll lately. Which HSAI is it? HSAI. Okay, that looks like it's going to consolidate some more. RXT, you looking at? RXT. RXT. Sounds like a Supreme song. RESPCT. Oh, that's a big move there. RXT. Penny stock. Good luck with that one. Not crazy about penny stocks. Some people love them. You need a good scanner that gives you the float and how many times the float flows you're seeing on the day. All right, futures continue to move higher. Let's see. What's Mondo talking about? Jim. Okay, so we got a bounce in the banks. On what? On what, Mondo? A Palantir? Okay, Amazon looking good. IWM looking good. These two are working. You only need one good position a day, right? Some of you have tuned into this. A couple of the new members. Ensel, I think. I'm not sure if I'm pronouncing. Oh, RXT. Okay. Oh, right. Yeah, I saw that earlier, pre-market. Okay, so they're doing a deal with RXT. BITX coming back a bit. RXT. Tesla bouncing, Amazon looking good, IWM good so far. Futures continue to rise. Let's take a look at hedge flows. Okay, that looks good. Let's look at IWM. All right, Tesla's on the move. Tesla off the low. Okay, RXT, you bought calls. All right, that makes sense. Yeah. Okay, futures continue this climb. Futures. Okay, IWM. All right, so the alarm I set off, the alarm I set off yesterday, I didn't like what I was seeing. We kept testing that Kept testing this 6,800 level. It's still a concern. We're back up to 6,900 or getting there pretty quickly anyway. So it was a do or die situation yesterday. So I didn't want anybody to get caught flat footed. If we had lost 6,800, it could have got ugly very quickly. Could be in the operative word. What actually happened was a nice bounce. Dealers came in later, not dealers, institutions came in late yesterday, started picking up some shares here and there. Market's looking better. Okay, so this looks a lot better than yesterday. So it looks like we're going to move back up to the top of the range again. 6,900, above 6,900, we get into the top of the range. Looks a lot better now. Okay, all the New York fangs are turning up now. All the New York fangs are starting to turn. Okay, New York fangs are turning up. New York fangs are all turning. New York fangs catching a bid now. Let's get to the market this morning as well as stocks trying to build on yesterday's comeback. The Nasdaq is up almost a full percent. We're about 15 points shy of 6,900. Anastasia Amoroso. New York fangs look a lot better. I find it's good to have this grid. Good grid to have. Sort of Vanguard ex-US up almost 10 for the year. Yeah. We're up less than 1 for the year. I think one of the phrases I heard today is ex-US is rallying, US is churning. And I'm wondering what changes that. Right. Well, I think there's definitely okay, there goes Microsoft. Microsoft on the move. Microsoft, Mr. Ensel, Microsoft. Microsoft on the move. Okay, with the New York fangs moving higher, it's kind of hard to New York fangs higher. All right, so the New York fangs are higher, looking good. There goes Tesla. Amazon. Okay, Apple, Microsoft, Tesla. Very nice. NVIDIA. Okay, Mr. Dollar loves to dollar loves. NVIDIA. Okay, looking pretty good here. All right, IWM still going. IWM looking good. Looking good. All right, looking good. Looking much better. KMB, Kimberly Clark. KMB. KMB trending. All right, VST, VST. VST rising. Okay, 200 days overhead. Vistra Energy. All right, so again, with the NASDAQ 100, the leaders, Cadence Design. Okay, that's a doji for now. Spending top. DoorDash. Damn it. DoorDash looking really strong here off the low. DoorDash catching a bid. DoorDash off the low. Okay, number 2, NDX. Palantir off the low, looking good. All right, so a lot of things are working. I see people posting in the trading room, looking good. All right, tick cumulative is green.
gross margin for software, which means that if you're a software company, and if you're worried about agentic AI coming for you, you're likely redeploying some of that extra margin into innovation.
Anastasia. She should be like a Disney princess. Amazon looking good. All right, so just about everything is working now. Looks like everything is working.
You really have to think about whether there's a moat. Is it an infrastructure layer software?
Everything's working now.
Plays well in the era of agentic AI, or it's an application where somebody built a user interface, and the problem I have with that is that can be immediately disrupted with an agent.
Everything's bid right now, almost everything.
I do want to add, Carl, that this has been an asset-light story for the markets. That's what propelled the markets higher, it seems like, for the last 10
Okay,
years.
Amazon looking really sharp here. Amazon with a nice follow through. We're going to get to 210 before you know it. GE, let's see what GE looks like. Microsoft, a little profit taking. GE off the high of the day. It's okay. Looking for a follow through. Micron, STX, a lot of tech is up. Intel bouncing. Schlumberger, energy taking a little break. Is Bitcoin moving? Let me just pull up my Bitcoin chart here. All right. Hope everyone's having a good morning. It's a little bit after 10 o'clock. We're 38 minutes into the trading day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. I trust you're having a good Wednesday, February the 18th. All is well.
You've actually seen similar development in Germany, the fastest increase in about 2 years. You've got the Empire, manufacturing surveys that are all pointing to a capex rebound. Some of that is going to come from the hyperscalers still allocating that $750 billion in capex, but some of it is going to come from energy, defense, industrial. So I would actually look at those categories. And again, if there are also companies that are embedding AI, I know there was a rolling fear last week about industrials perhaps being disrupted by AI. But those companies are thinking about what they can do with things like digital twins and AI software to improve themselves as well. Yeah. So physical assets with AI transformation potential.
Interesting. GDP is going to be fascinating on Friday because consumption's been led by healthcare spending, and we'll see if that continues going into the Q4. Anastasia, thank you.
Thanks so much.
All right, let's get to NVIDIA this morning. The stock is up over 2% as the company announced an expanded partnership with Meta around what else? AI chips. Mackenzie Segalos is here. She has the details for us. Good morning, Mac.
Hey, good morning, David. So yes, NVIDIA shares higher this morning after Meta significantly expanded their chip partnership, committing to millions of Blackwell and Rubin GPUs across a multi-year deal. Now, one that's tied to its ambitious $600 billion data center build-out. No dollar figure was disclosed, but analyst Ben Heron of Creative Strategy says it's almost certainly in the tens of billions, and that he expects.
Okay, nice move on Amazon's part. Okay, Micron is taking off to the upside. Amazon looking strong. IWM pushing higher. Back up to the top of the range. Amazon, IWM. Cadence Design, DoorDash off the low. Shopify, Palantir.
Both those stocks under pressure this morning on the news. Meta, it's also incorporating NVIDIA's networking gear and Ethernet switches, but it's really that shift to NVIDIA battling it out for CPU.
Microsoft looking better.
And going into earnings next week, Meta.
Okay, New York Fangs look a lot better. Could see a little bit more bid in Netflix. That would be nice.
Meta had been reportedly exploring Google's TPU chips as an alternative. Sarah, back to you.
Broadcom moving a bit higher. Grover, Broadcom. I'm sure you're watching it as well. Broadcom on the move, Grover. Okay, Palantir taking a little break up here, a little profit taking. IWM flagging out at the high. Okay, looks good. see what these guys are talking about. Okay. IWM flagging at the high. IWM. Tesla, nice follow through. Broadcom pushing higher. There goes Amazon. Amazon looking good. Okay, Bitcoin still diddling down here. Okay. BITX. I'd like to see that get something going here. Nothing yet. Okay, Microsoft, nice pop. There goes Amazon. I think Amazon's going to be at 210 early. Maybe this week. Let's look at the options volume on Amazon. Let's see, Amazon. Okay, let's look at Amazon. Amazon. Okay, let's see what's going on with Amazon here. At the bottom, down, it's the bottom of the screen. Okay, Amazon. Sell calls at 205. Amazon. We're at 205 now. Oh, that's only one. Let's go to size. Okay, Amazon. At the open, we had buy calls 210 calls. We had, looks like about 450,000 in premium on Amazon buying the 210 call this morning at 9:54. Right at the open, we had somebody selling calls at 205. Sell a call, buy a call. They don't look related. Buy a call. The 215 calls. 400,000 of that. All right, so Amazon looks pretty good. Amazon. All right, so we want to see both of these lines rising. S&P. Let's see what S&P is doing. S&P. All right, so we got puts being sold, calls being bought. That's positive gamma. So hedge flows will move higher. Hedge flows. I don't know why I keep getting Amazon. Manjaro in Spanish. I don't speak Spanish. I'm one of those dumb Americans that don't speak. I can speak some. No habla español. Buenos días. Gracias.
We spend our time, we're a long only fund. We do deep research. We spend our time looking at quality.
Market's looking pretty good, though. Futures continue to rise. Okay, looking pretty strong. Nice tailwind so far. We got some resistance just overhead at 69.10. Okay, 69.10, 69.20, all the way up to 69.25. Okay, Chevron, nice little gap up on Chevron. Looking for that to follow through.
For a terrific company. And so I do think companies like CarGurus with strong network effects, where they provide a lot of value to the dealers, I believe the markets are being particularly indiscriminate.
Bitcoin, trying to catch something. Not a whole lot going on with Bitcoin. People are too busy trading everything else. Tech is pretty well represented in the top 10, top 20 of the NASDAQ 100. All tech. Everything is tech. Shopify, a little bit there. Shopify, Mercado Libre, little retail, I guess. But everything else, NVIDIA, Applied Materials, ASML, Dexcom, Booking, ADI, Analog Devices, Verisk, Intuit, Synopsys, Micron, Shopify, Palantir, AppLovin, DoorDash, Cadence Design. That's the top 20. There goes Microsoft. Amazon's still pushing. Amazon is still pushing.
Times like these are absolutely terrific for value-oriented investors and thoughtful investors. Whenever there's an overreaction of some kind, generally, the sort of when you're seeing bubbles where things go up, they become overvalued. But in periods of panic, it actually works to your favor because things become absurdly cheap, or they become, if they were reasonably valued before, they become cheap. And so if you look at companies, for example, like Paychex or ADP, these are just phenomenal companies. They're payroll processors. Much more likely that AI will be a net benefit to them. And so, these are very clearly situations where it's a wonderful thing if you're a manager to be able to find, cheaper investments. So a thoughtful manager should welcome when markets are rational, because that's what gives you bargains.
Yeah, look, volatility can be your friend. Have you got any sort of areas of the market where you would be looking to snap up a bargain?
Is behind the scenes, be constructive, lay out potential solutions that can be a good win-win outcome for crypto and the banks. I feel confident that
Is it moving forward with these rewards in place for stablecoin?
Yes, there's a small list of remaining open items, and I think that if a compromise can be found, this will get to the president's desk for a signature.
What about the price of Bitcoin and the fact that it was down last year in an up year for the overall market and has started out really rough this year, down more than 20%? Does that impact the sort of broader movement to get more done here?
Not really. I mean, crypto, sometimes it's up, sometimes it's down. It's all, Bitcoin is still the best performing asset of the last decade, right? So we try not to take a short-term point of view on that. When crypto prices are down like this, actually Coinbase is buying Bitcoin. We're buying our own stock back. We're just continuing to build in these down markets. So there's an opportunity where the market is up or down, and we try to just take it.
Why do you think it's down so much?
People have a lot of Monday morning quarterback type theories on this. Whenever the market moves, they'll say, Kevin Warsh is an inflation hawk, or they'll say that quantum computing is on the horizon. In my view, the markets are a little bit more psychological than that. People say, I don't think there's any substantive issue, but I think other people do.
Okay, watching hedge flows. Amazon's still pushing here. Amazon.
Quantum is going to break the blockchain. Is that true?
No, that's not true. I think that's a very solvable issue. And actually, Coinbase has been very front-footed on this. We put together a quantum advisory council, and we're in regular contact with the major blockchains about a path to upgrade to a post-quantum cryptography world. So we're going to stay engaged on that, and I think it's very solvable.
Senator, I'm curious about what your vision is here for the future of crypto, stable coins, and getting them into the U.S. system in a regulated way, but also not threatening the U.S. dollar.
Well, it actually is the opposite of threatening the dollar. This is the best thing that could happen for the U.S. dollar because it dollarizes the world. It creates massive competition for treasuries, which is going to drive down our debt cost to the tune of hundreds of billions of dollars per year. And by the way, put more money in the hands of consumers. Ultimately, that's what that is. When you have people who are depositing money and they're not getting the kind of return they should get or rewards that they should get for having those deposits, that hurts working Americans. They're the ones that are suffering as a result of that. You can also have, by the way, imagine a world in which you have instantaneous payment for payroll, where payroll doesn't settle twice a month, it settles every single solitary day. You have velocity of money. The idea is very simple. Money should move at the speed of information, and that is going to happen. Let me just be clear. This will happen. That's not the question. The question is happening in the United States.
Okay, we're trying to push a bit higher. We're running into resistance at the moment, as you would imagine. There's a lot of gamma just overhead. This is resistance for now. Okay, Amazon's at the high of the day. Individual stocks maintaining a bid for now. Broadcom still pushing 330, 335.50. Looks good. Chevron, Robinhood, nice pop on Robinhood.
This is about investment decisions over a longer period of time. And the reality is Bitcoin is just getting started. You're going to see.
Do you think Bitcoin is a safer bet than gold?
I would absolutely buy Bitcoin today instead of gold. And by the way, just be clear, I don't own any of that because I don't want anybody give me grief about whether I'm objective or not objective. But if I had money to put in the market today, I would buy Bitcoin.
Well, we know, Brian, that you've been buying back Bitcoin. I do want to just, in the minute that we have left with you, just hit on what we got from the CFTC this week, which was big news on the prediction markets. The commissioner is actually here at this conference, and they announced that they're coming out swinging against these states that are trying to go after prediction markets as gambling. That this, I would think, helps your business a lot, and you're part of this new council. What's your reaction?
Yeah, well, Coinbase has been building out what we call the everything exchange. So we have every asset class there, crypto, stocks, commodities. We also launched prediction markets. And you're correct, Commissioner Mike Seelig has been great on the leadership front here, coming out and stating what is already in the law, which is that the CFTC has exclusive authority over these types of contracts. And some folks in the state level are unhappy about that. This might go to various courts, may even go to the Supreme Court, but I think ultimately the CFTC chair is right on the law and they'll win.
Okay, we're still kind of consolidating here at the highs. Watch your index trades.
And I know you were also
Okay, let's get back to IWM is still going. All right, we want IWM. We want small caps to lead. We also want the regional banks to break out. This would be a good signal. Okay, so the S&P small cap 600. Okay, not the 2000, but the S&P equivalent of small cap index is the SML. All right, this looks really good. Okay, so this is heavily weighted to regional banks. Okay, let's look at SPX small cap index top 20 stocks.
He was the first crypto executive to run for the Senate. So
you were all about it.
Yep.
Brian Armstrong, Senator Bernie Moreno, thank you both very much. And still ahead this hour, do not miss World Liberty Financial co-founders, the hosts here, Donald Trump Jr. and
S&P 600. Okay.
Berkshire making some big moves in the fourth quarter. We'll bring you up to speed on some of Buffett's last trades as CEO. A read from the ground on AI demand and the impact on software when the CEO of Cadence as well joins us off of those results. We're back in a minute.
Okay, so here we go. Financials, 18%. 18% of the small cap S&P 600, small cap 600 S&P. 18% are financials. That's a lot of that is regional banks. So we want to keep an eye on regional banks. Okay, this is the SML, small S&P 500 small cap index. This looks good. It looks good for IWM as well. As IWM is doing something similar, it's in a range. So a break above 267, 268 or so. Testing that upper Bollinger Band is what we're looking for. RSI is rising, MACD stochastics turning. Let's take a look at the Appel 3 MACDs. We got the short term is crossed over, similar to what we saw with Amazon. You can see what Amazon's doing right now. Okay, intermediate term, that's the 1226 that everybody uses. Default and 1939, which is what Gerald Appel recommends for long-term swings. Okay, you buy initially, you add you add with the 1226 and swing as long as this is pointing higher. You can see January, beginning of January, all three of these were turned up. The long term said swing it, and we had a nice run up from 245, 246 to 271. It's a good system to use. Gerald Appel, he's got a great book, by the way. I have the book in PDF if you're interested. Gerald Appel, PPEL. MACD. Okay. Gerald Appel's MACD. Images. This is it. This is the book I have right here. If you're interested, it's a good book. Very good book. All right. He and there were three. You had Lane who designed stochastic. You had Gerald Appel, who designed MACD, and then of course you had Marty Zweig, which was really good with the New York Stock Exchange and breadth indicators, advanced decline percent, which is what we should look at right now. Okay, so this is the book I'm talking about right here. It's a good book. Gerald Appel departed this earth. Okay, Amazon still pushing. Broadcom is looking really good. Let's take a look at Broadcom. Broadcom for the swing. Broadcom for the swing. You can see short term crossing over. Everything else is bullish. Need to get above the 50-day. NVIDIA.
But he accused Russia of deliberately delaying a deal to end a 4-year-old war.
It's hard to believe it's been 4 years, huh?
President Trump's Board of Peace. The denial comes just one day before the board is set to meet for the first time in D.C. to discuss the rebuilding of Gaza. The Vatican was invited to join the group in January, but said today efforts to handle crisis situations by the United Nations.
Ukraine-Russia war. That's equivalent to what the United States was involved in World War II, right? We were involved, like, I think it was 3 years and 8 months. 3 years and 8 months, something like that rings a bell. It was under 4 years, I know that. The U.S. And we were on 2 different oceans. All right, so anyway, that's NVIDIA looking pretty good. It's still a range, NVIDIA. Amazon looking good. Amazon. Looking for Amazon to get to fill this gap in the future. Okay, what's Chevron doing? Chevron, short term. Said take a little profit there, short term, watching CVX. Bolero. Okay, let's take a look at the materials sector, communications sector. All right, these are starting to turn. Communications, that would be Meta, Google, Netflix, Charter, Fox, etc. Disney, even Disney. Disney with a nice crossover. Disney looks good for a swing trade. You can see this using this system. Very good. Short term is crossed over. Intermediate term is about to turn. And the long term is also changing direction. So a swing on Disney looks like a good idea. Put a stop under today's low.
People understand. I mean, I think we have such credibility because of what we went through, what Eric was talking about. When you wake up one morning and there's 300 bank accounts that, the operating accounts of businesses that pay the waiter at a restaurant, just gone, canceled. We didn't get into crypto because we were on the leading edge. We got into it out of necessity. They basically forced us into it. And so, to Eric's point of retribution, to be able to come back and now work with the best in crypto as well as the best in TradFi, get these people together to create efficiencies in a system that's otherwise been totally undemocratized and broken and inefficient and slow. To be on the leading edge of that is just really
Nokia. That one's on the move. Nokia. Gapping up. I had this Frano when we were over here. I've been sitting in this forever. I had the 5s, bought the 5s on the dip. I have the 7s left for April. Okay. Nokia. Let me just let my son know. What is he doing? How is he doing on Nokia? Nokia. Nokia. He has the 5 call. He has a 5 call. He still has the 5 call. Antoine.
And so we said, listen, there has to be a better way. They're used to being able to do that to people who have no ability to fight back. We had the balance sheet. We had the following. The big soapbox.
Nokia looks good. Okay, let's see what's actually moving today. Let's see what is on the move. Okay. What's that, Groupon? Global Payments. GRPN is Groupon, right? Are they still in business, Groupon? Yeah, that one's Don't often hear about Groupon.
We just realized we were sort of the top of the Ponzi scheme that was
Hit a high of 43. Now it's 25% of that. So it's lost 75% of its value, Groupon. All right, so GPN Global Payments, that one's looking good. Double bottom on GPN.
That didn't exist for everyone, and we're really glad to be able to bring that to the forefront of the market.
Still think it's going to $1 million. It's having trouble holding 100,000. It's been a rough start. This was supposed to be the golden dawn of crypto.
Well, Bitcoin is low right now, but what we're talking here with World Liberty is stable.
Global Payments, gapping up. Let's see what the 60-minute looks like. Okay, got a ways to go. Okay, Amazon looks like it's starting to regress a little bit. Amazon. Okay, IWM looks good. IWM. Okay, it looks like it could follow through some more. It was a pretty decent day yesterday. 60-minute looks good. IWM dipped the last 3 trading days prior to today. Okay, Friday. Oh, wait a minute. That's Thursday, Friday. We had Monday off. Tuesday, Wednesday. Monday, Tuesday, Thursday, Wednesday. From The Godfather. The Godfather Part 2. When Michael goes to Italy. Gets married. His new wife gets blown up in a car. Okay, watching, looking pretty good though. Market's looking pretty good. People jump. It felt like people jumped into the markets. Bitcoin's trying to make a little move here. Bitcoin, that might have something. IWM looks good. IWM.
I do think it hits $1 million. I think it's one of the greatest performing asset classes. I mean, go back 2 years. Bitcoin was at what, 16,000? Where is it at right now? 70? Yeah. Right. I mean, if you look at the last 10 years, Bitcoin has gone up 70% a year on average, year over year for the last decade. Name an asset class that has performed better than Bitcoin. And now, obviously, you have lots of volatility. If you don't want volatility, don't invest in.
Who is this guy pumping Bitcoin?
You're going to have volatility with something that has tremendous upside. I've never been more bullish on Bitcoin in my life. I've never been more bullish on.
Okay, Broadcom, Taiwan Semi, ASML, LRCX, Intel's up 0.5%, more than 0.5%. Micron's up 5%. Analog Devices up 3.5%. CLAC 1.3%. So the chips look good. NVIDIA and Meta expand the chip partnership. Okay, let me see if I can get this before they take it off the screen. Shit. Oh, okay. This guy's like yapping away. NVIDIA. Okay.
Is into and loves, and we're just getting started. We're on the 1 yard line.
I do want to ask you about the World Liberty Corporation, which has been in the news, and there was this big Wall Street Journal report about the 49% stake that was sold to an Emirati royal family member after your father was elected president, raising questions.
NVIDIA and Meta expand a chip partnership. All right, that looks good.
A, my father has nothing to do with. B, it has nothing to do with AI chips. And C,
oh, that's
we met in the Middle East.
That's the Trump brothers.
There's not a person in that room. There's not a banker. There's not a fund manager that doesn't go to the Middle East and to the.
I'm like, who are these guys? I didn't even realize. I couldn't see it because it was on my phone. IWM still looking good here. IWM looks like it's starting to show some signs of profit taking. IWM at the highs. RXT.
We've been dealing with the conflict of interest stuff for years. I mean, they tried all this nonsense the first time around. Frankly, it's gotten old. They were the ones that put us into this position by creating legislation to try to put us out of business. We just fought back. We weren't willing to sit in the corner, curl up in a ball and die like they would love us to do. That's not how we function. That's not how we operate. You can see that whether it's my father or us, that's never going to happen. We're going to do what we need to do to fight back.
Right?
It's Gray's law of like unintended consequences. If you look at what they tried to do when they threw my father off of Twitter, and they did the same to Don and myself and pretty much everybody else in our family. They took us off of Twitter. They took us off of Facebook. They took us off of Instagram. They took us off of YouTube. They took us off of Google.
RXT, baby. Find out what it means to me. RXT, baby.
whole banks, they start canceling us left and right.
All right, so Amazon's still lifting. Amazon, IW. Whoops, sorry about that.
You know, the great irony is half of the very executives that called us back in those days to cancel us are actually in this room right now. It's kind of, it is a law of unintended consequences. And I think, you know, for a long time they fought it. And I think at this point they realize they can't fight it. The train has left the station. This is happening worldwide. The whole world is adopting crypto in a very, very big, fast manner. And they'd much rather be on the side of something that's clearly the future than be trying to fight it in perpetuity.
Well, I don't think the Democrats
Sorry about that.
I mean, Senator
Don't know
Warren
what I
was
just did, but
investigated by Treasury under CFIUS.
I know. Senator Warren also said he was millions of dollars teaching Harvard for
IWM.
$4 million.
IWM having a good day today. Thanks for the early update there, Armando. Okay. Okay, IRE.
Now that they realize that this is the future, that this is an avenue where people are going to go because it is better to transact, it is faster.
IREN is still basing down here for the last, looks like 9 trading days. All right, today is day 9. All right, we're trying to turn IREN, IREN.
This is leading edge technology. It's going to change the way things are, and those who are willing to adapt are going to survive, and those who won't will not.
Do you guys have conversations, friends? I mean, there are some regulators here. There are members of Congress here. There's an important market structure bill we were just talking about that needs to get through the Senate, you know, and that and needs to be passed by, you know,
Because America has to win. America has to win this because you better believe China wants to win it. All of Asia wants to win it. You know, the countries in South America want to win it. South Korea wants to win it. You know, the entire Middle East wants to win this race. We better win the race of modern day finance.
KRE. I'd like to see the regional banks go too, not just the big banks. KRE, looking for that to follow through. Big banks like JP Morgan with the bounce. JP Morgan with the bounce. Sorry about that. This interface keeps messing me up. JP Morgan, nice bounce. Wells Fargo. Okay, those are bouncing. Goldman Sachs bounced early.
There's nothing in the world, there's nothing in finance that can't be done better, cheaper, and more efficiently and more transparently, frankly, on blockchain technology. And that's what everybody's realizing. And it's going to save the consumer tremendous amounts of fees. It's going to democratize finance. And again, we're on the 1-yard line. This is, you know, the best is yet to come for this industry.
Okay, so you're a full believer. So now we talk crypto. I just in the final moments want to ask about some of the other interesting business ventures because there was big news yesterday about your.
Okay, there goes Bitcoin. BITX just pop. Bitcoin's popping here. BITX popping. CNBC interview. Trump bros. Bitcoin on the move. Watch that.
That's what I did in the company that I believe in, and I'm really excited about it. I think it's great. And we have the greatest real estate portfolio in the world. I think right before we went on air, you said this is the most beautiful room.
It's the most golden room.
It's the most beautiful room. You said you have ever done an interview out of it. So you know we have the greatest hospitality assets in the world. The Trump organization.
Okay.
6 projects going up around.
How's business?
We are doing incredible. The brand is hot. You know,
the brand is hot because your father's president.
Yeah, the brand is hot because
The brand's been hot for 40 years. In all fairness, my father was on the leading edge of everything in real estate. He was the first person to monetize.
They just cannot handle it.
He's the guy that's done that.
What's this lady's name?
For the last decade, Eric and I have been doing these things and perpetuating the thing that he started. He's not involved. He hasn't been. Frankly, he has much bigger things to worry about. And
Okay, Robin Hood. Watch Hood. Hood's on the move.
Relative to the stuff that he gets to do, you know, these days. And he didn't get into politics because this was, you know, the thing to do. Remember, he got into
BITX. Nice move there.
They frankly set up a scenario that he's basically almost killed to do this. He's doing this because he believes in America. He believes in the American people. He wants them to be able to experience their American dream. And frankly, most politicians for the last few decades have done nothing but basically ship that American dream abroad. That was our only export for the last half a century, was the American dream, as we've enriched those who hate our guts. That has to stop. To Eric's point, preserving dollar hegemony by crypto coming in there and having treasuries in these crypto companies buy U.S. treasuries, that's going to stop the BRIC nations and the others who are trying to get away from the petrodollar and U.S. dollar hegemony. And frankly, to the Democrats' point, that's going to allow them to spend the ridiculous things on the nonsense that they want to fund, because we'll actually still have the money to be able to do some of these things and have a base to borrow from. So this is about America first, and to lead the way in crypto is going to be the leading way in the future of
Bitcoin.
I do just want to end on
All right, there goes Amazon again. Amazon's on the move. IWM at the high. Here's Amazon. Amazon breaking out. Okay, if you bought some Amazon this morning, congratulations. This is looking pretty good. Amazon.
Listen, I got involved in the prediction markets a few years ago, back when we had no chance of ever even coming back from the dead. We were written off as always because I saw what was going out there in the political sphere, actually. We'd see polling. Kamala Harris is going to win Iowa by 12 points. I'm like, man, I was in Iowa. I didn't see a single sign. I think this is nonsense. But you understand that the polling, traditional polling, was bought and paid for. It was designed to demoralize one side and invigorate another. It had nothing to do with actually telling the truth. The prediction markets, when people had real money behind an idea.
Microsoft looking good. Microsoft still looking good here. Microsoft. Okay, so you know what we're looking for on Microsoft. We need this base to hold, obviously. And we need to build on this and push through the 420 area. If we can get through 420, this should be good. Does this, yeah, there we go. Oh, no, it doesn't. Okay, so let me add another one here. Okay. Okay, so we can see where we got some resistance overhead. Okay, Microsoft, it's building. I'd rather buy Microsoft down here than up at the highs. Obviously. What do you think institutions are buying? You think they buy up here at the high and sell down here? Obviously, rhetorical question. Sarcastic as well. Microsoft looking pretty good here. Microsoft.
Who is also here, has had a great relationship with this administration and is gearing up for the World Cup in what are we, under 4 months, David? So we'll talk about ticket prices. They even have a coin, a FIFA coin.
Microsoft, Amazon going, Amazon ripping.
Yeah, big summer, of course, with World Cup, 250th birthday of the country as well. Thank you, Sarah. Also ahead, the CEO of Cadence Design right here. The shares are up. Strong results.
Amazon.
Designer of chips. Thanks to what else? Demand for AI-related chips. He'll join us next. And New York's Mayor Mamdani considering a property tax hike. He can't get help from the governor on one specific initiative. We'll have that story a bit later on.
Okay, Amazon. Amazon. Amazon looks good. Amazon. Amazon. Okay, what are they talking about on Yahoo? Okay, Amazon, Microsoft looks good. These New York Fangs, they caught a bid today and they just keep going. Amazon. Let's see.
Something you would compare to a hedge fund and a family office in their hands. So you'd have quants, research analysts, all agents measuring 24/7 what's happening in the markets, understanding your interests, your personality, by the way, also your expenses, your goals. So you'll have an army of family office and hedge fund quants working for you, all driven by AI. AI will become the best tool a retail investor can imagine. The gaps that we started bridging between institutional investor access back in 2007 to retail investors by lowering the costs, by making it simpler to access. Now that bridge is, it's not only about the access, it's the tools. A retail investor is going to have the same tools like the most sophisticated hedge funds in the world and capabilities like what the wealthiest families in the world have in their family office. So I think that's where the market is going to consolidate all of that to be agent-led, and agents are going to be your family office.
I am truly blown away by this moment. If I'm right, I just want to switch gears to the crypto.
Okay, Bitcoin still pushing a bit higher.
And a person in the space, if I'm right, you got involved in crypto in 2013. You've seen a lot of different market cycles.
Okay, Amazon, we got Kumo overhead. Thank you, Dollar. Kumo overhead. If you're not familiar with Kumo, let me explain. Kumo. Okay.
Welcome back. You can see shares of Cadence Design up almost 9% this after the company reported very solid fourth quarter results.
Talking Cadence Design on CNBC.
Cadence has now reversed much of the stock's drop this year amidst the broader sell-off in software or software-related names. Joining us exclusively is Cadence Design CEO and owner Deb Jen. Good to have you this morning. AI seems to be in part powering your business. I'd love to get a view from
Amazon.
in terms of whether this is kind of
What are you looking at? The 60-minute there? Yeah, you're looking at the 60-minute. Okay, so we got a nice reversal here. Let's go to the 60-minute. Okay, yeah. So Kumo, that red area, that's the cloud. That is resistance. You've got two moving averages, 926, and you've got a moving average that follows. It's called Chiku. It follows by 26 periods. When Chiku, the green line, moves up against price action, look for resistance. When it gets above price action, which is what it looks like right now, we're above price action. We will have some resistance up through this area. Once it gets through the cloud, it's pretty substantial overhead. RSI rising. So that's a trend following system right now. We're running into resistance at Kumo. Looks good. Amazon's still pushing. Meta coming off the low, partnership with NVIDIA.
We talk a lot here about the hyperscalers and what seems to be a more focused effort to design their own chips in some way, whether it's Amazon or Alphabet or even OpenAI at some point as well. You're a part of that. I'm curious as to how you see it both.
Okay, yesterday, NVIDIA and Meta announced a massive multi-year, multi-generational strategic partnership. AI infrastructure spend is not slowing down. All right, that's been the topic lately is, how are they investing? How much are they investing? Are they doing it in some sort of Ponzi scheme? All of these concerns. Markets are managing to move back up into the range, holding above 6,800. 6,900 is resistance. A lot of moving parts at the moment. Amazon's still pushing higher. So is Microsoft, Broadcom, Apple.
System companies, initially initiated by Apple and what they have done on the phone, and recently, for example, Google and TPU. So this system companies, doing their own chips is only going to accelerate, in my opinion.
I know you fielded some questions from analysts about this whole era and whether the innovation is moving so fast that it almost has to involve some portfolio management or bolt-on M&A.
Amazon's AWS business thrives on inference demand from enterprise.
35% of our revenue is in R&D. 90% of our always say, organic is delicious. We want to invest in organic development. That's our main focus. And from time to time, we will do targeted M&A, but our focus always is organic innovation, and that also is the most profitable.
Okay, Amazon looking good.
Edward, I'm sure you're well aware there was a debate in the capital markets and the stock market about what AI agents are going to do to many software companies in particular. I think on the call you made an argument that AI agents may actually increase the usage of your base tools rather than replace them. So expanding workloads rather than compressing them. Can you sort of fill us in as to why you think that's the case?
Oh, absolutely. Because first thing you have to remember is that not all software is created equal. Our software is used to design the most complex things humans have ever built, which are these advanced semiconductors. So these are like 100 billion, 200 billion transistors at 3 nanometer, 2 nanometer in these complex systems. So our software by nature is highly scientific. It's physically accurate, because when these chips come back, they have to work first time, and it's highly mathematical. So it's a whole range of software out there, and the software we write.
All right, Amazon.
Is actually one of the most complicated software.
Apple's still going.
So in that
Apple.
software, it is important to embed AI together with it. I've talked about this for a while. The way I look at AI is a 3-layer cake. With agentic AI at the top, the middle layer, which is this physically accurate scientific software, the classical kind of mathematics, and compute and data at the bottom. So any successful product has to be optimized across these 3 layers of the cake.
Okay, Broadcom going.
AI makes
Looking good.
software much more prevalent, because the AI agent can do more
Bitcoin.
than humans can.
Got a little excitement there for a few minutes. Bitcoin. Okay, what time is it? 10:54. I got to take a 2-minute break. I'll be right back.
Force multiplier on top of this kind of complex software, and this is what our customers want because their workload is exponential. The chips are only getting bigger and bigger, so they want this productivity that AI provides.
And we're going to leave it there today, but certainly look forward to further conversations. Thank you.
Thank you.
Let's turn to some tax news this morning out of New York City. Mayor Mamdani threatening to raise New Yorkers' property taxes in an effort to balance this city budget. Robert Franks here at Post 9 with that story. Hey, Robert.
Carl, good to see you. Well, Mayor Mamdani is saying if he doesn't get an income tax hike on the wealthy, he will raise property taxes. Mamdani floating a 9.5% property tax hike on both residential and commercial properties. It would affect about 3 million residential units, about 100,000 commercial buildings. The tax rate would increase for 4 property types from 12.28% to 13.5%. So it's actually a 1.2 percentage point increase, not a 10 percentage point increase. It's very important to make that point. He said it would raise about $3.7 billion a year. Mamdani prefers to raise income taxes on the wealthy to fund his programs, but income tax changes, of course, require approval from Albany. And so far, Governor Kathy Hochul has opposed any income tax hikes. A property tax increase would need approval from the city council, which right now also uncertain as to how they would view that. Mamdani says the city faces a budget deficit of $5.5 billion. That came after last month when he said the deficit was $12 billion. His new budget calls for spending $127 billion. That will be an increase of $5 billion from the current budget. And by the way, New York City's budget would be larger than the entire state of Florida.
As it has been for quite some time, actually.
Yeah.
A budget that was in the low 70 billions when Mayor Bloomberg left office. That is a while ago, but that gives you a sense of the increase. It has been faster than inflation.
And Bloomberg also increased property taxes. We can't forget that. And there are times property taxes are the largest source of revenue in the city.
Yes.
It's about 30 to 40% of revenues. Income tax is about 15 to 20%. So, income taxes, we talk a lot about them, but in terms of pure dollars, property taxes are where the money is. The question of what impact that would have on commercial stores in New York City, and not to mention, is it in keeping with his affordability promise if everyone in terms of renters, landlords ends up having to pay this more tax?
Also, how much coordination between the state and the city in this case, do you think? Is this something he just does on his own?
He has to do it with city council, and the statements we're seeing from city council right now are very skeptical about a tax increase on property taxes. So, we'll see whether he gets either.
Give landlords at least something back. How about repealing Local Law 11? That would save them some money.
And put all those union workers out of.
How about stopping us from having to walk through tunnels throughout the city of New York, unlike any city in the world?
Keeps you dry on rainy days, David.
Yeah, that's Carl. I'll never give up this issue. I'm getting nowhere on it.
Robert, thanks.
Thank you, guys.
Speaking of real estate, coming up this morning, an earnings exclusive with the CEO of JLL, how they're combating the potential AI disruption to the commercial real estate sector. That's when Money Movers begins in a minute.
EOAS. EOAS. EOAS.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision.
Okay, Amazon. All right, it's starting to top out a little bit. Nice run up today. Okay, Amazon starting to see a little profit taking. Nice run up this morning. IWM, small caps. Okay, Tesla's still pushing here. Tesla looking good. Tesla. Really need the critical metals to get moving. All right, NASDAQ looking good. We have almost 80 stocks advancing out of the 100 for the Qs, 329 stocks on the S&P 500, 329 out of 500 advancing. Advanced decline percent, everything is rising at the moment. S&P 500, mid caps, small caps, NASDAQ in descending order. These are all moving higher. Let's take a look at junk bonds. J&K, junk bonds. Okay, junk bonds. Looking a little better. Junk bonds, if we can get above 97, 98, that would be good. Junk bonds. What's VIX doing? VIX. VIX with a fade. VIX fading. Okay, we're back to 6,900. We got the top of the range. We could pop above this. Hedge flows are turning down now. 0 day, non-zero day. There's a lot of positive gamma overhead. That's going to offer resistance to any move to the upside. We got negative gamma below. And negative gamma up there north of 7,000. So that could increase volatility.
Rotation kind of for rotation's sake last year in 2025. We're after a couple of years of outstanding outperformance. People said, oh, maybe we should put a little more money in ex-US equities in particular. Noted that wasn't happening in the market. You know, being able to
All right, Bitcoin did pull back a bit, watching hedge flows at the moment. S&P. Tesla's still pushing. Microsoft doing well. Microsoft doing well. Amazon looking strong. Bitcoin coming back to earth. Brief pop this morning. Tesla consolidating at the highs. Broadcom still looking very strong. Chips are doing well. Apple's seeing a little profit taking now. Apple.
really critical is that we think all of this spending, all of this investment is existential, not just for the hyperscalers, but frankly for the overall growth of the U.S. economy. And all of this spending from the hyperscalers and the tech companies is actually spreading itself out into other sectors and other industries, benefiting the industrial, benefiting materials. These are places that we've had kind of thematic overlays in the portfolio. And I think there's considerable upside, not just in the U.S. and its resource and kind of industrial names, but outside the U.S.
Well, what about though? I mean, circling back to the banks for I mean, as we know, part of that psychological hit has been, oh my gosh, AI is going to come in and replace. I mean, you're in that business. I am in the business, and I don't think two AIs are going to be talking to each other in front of people like this anytime soon.
I can say most of our clients do want that high touch experience.
Yes, I would think so.
Don't want to keep avatar.
Maybe they will. But I mean, but there are, you're obviously in the high net worth business, so that is
Yes, the wealth business actually runs all the way to consumer. So it is an incredible spectrum of clients we have globally. There is obviously ultra high net worth, and we have not space all the way to consumer.
Gotcha. So what, I guess, to what degree can businesses like that, or asset management much more broadly, be, dislocated as a result of this?
Look, I think, again, like any industry, I think the investment in AI tools and technology and training up people to leverage these tools is existential. Like, this is a make the investment, make the time, and make the sort of focus on the people to use these tools like your number one priority. And we talked about this a lot in terms of our leadership team, but it's about upskilling people, but also not just replacing what they're doing on a daily basis with just an AI tool. And trying to figure out, how do I disrupt everything I do? How do I disrupt the way I analyze companies? How do I disrupt the way, I'm taking in economic data? And so there will be naturally some shifts in headcount. Some of it will be people moving into different types of jobs because new things will open up. And some of it don't mean as many people, coding data, for example. And so that's left to be seen. There are other things really great for the banks and all these professional services firms, I think, that can really leverage AI, which is that, there's a regulatory cycle here that's quite positive. Deregulation is obviously very supportive of the banks. That's why we saw that big push in the second half of 2025. And then also deal activity. Despite the fact that consumers feel a little bit uncertain and there's like that itchiness in the market, we see much better deal activity, more mergers, more companies come to market, more debt deals, all these different things. And that's obviously very supportive of the banks. And frankly, like a lot of other, like fewer other sectors, I would say, the banks have done a lot of work to get their balance sheets.
Okay, just watching markets chop around. IWM off the highs, S&P at the highs of the day, just below, just above 6,900 rather. Okay, watching the S&P, just kind of consolidating up here. The New York Fangs are supportive for now. Bitcoin, we could see a little bit better performance from Bitcoin. Generally speaking, things are good. We have more stocks advancing than declining. We have 240 stocks, 240 out of the S&P 500, 242 out of the S&P 500 are rising, 80 stocks out of 100 on the Qs, and IWM is about 50-50. We need to see We need to see KRE follow through, not just the big banks, but when you see regionals continue, that's still working. Emerging markets have been pretty active lately, so we want to keep an eye on emerging markets. Okay, emerging markets are trending. It's another place to put your money. SPHD, SCHD, these are starting to consolidate at the highs. Chevron, looking okay. Valero, ExxonMobil, the GEs, GE Aerospace, Doji, GE Vernova, spinning top, GE Healthcare, pushing through the 50-day. That looks pretty good. This is still giving you opportunities to reduce your risk. Looks a lot better than yesterday, but we still have this situation where prices aren't moving much. We're above 69. We're right at 6,900, 6,901. We could get rejected and roll over. If we follow through again tomorrow, especially if we close above the 50-day today, that would bode well for the bulls. I still like this idea of the 6,600, 6,500, 6,400 put fly. Basically, you buy a 6,600, you buy a 6,400, and then you sell two to balance that out at 6,500, the middle strike. So if we eventually get that 7% pullback from this point back to 6,500, this put fly it was $300 per fly yesterday. It's probably about $250 now, $250. So a better value as a hedge, cheap way to hedge with a pretty decent payout if the markets do start to grind lower below 6,800. For now, we're holding up very well. Okay. I'm not sure why I have a headache. Maybe because I haven't drank enough water. I need to drink more water. Okay. Robinhood off the highs of the day. Robinhood had a nice run up this morning. All right, S&P is starting to fade. All right, we're back below 6,900. That's resistance for now. You see that on hedge flows. And the positive gamma, the purple positive gamma overhead, you can see hedge flows are dropping. The lines are dropping. Okay, Apple, what are you going to do, Apple? What is Apple going to do? Apple's trying to push a bit higher. Apple needs to get above the 50-day moving average. Apple. Apple. 50-day. We need to get back above the 50-day. We've got resistance just overhead. Bollinger Bands are starting to contract. Chevron. Consolidating at the highs. Okay, let's go do a rundown. Let's do a rundown of the sectors real quick and see who's doing what. Okay, let's see who's doing what at the moment. Market. Okay, so it looks pretty good today compared to yesterday. Early yesterday, same time, this was a lot more red. Today we're seeing all the tech side catch a bid, which is good for the bulls. Late yesterday, we saw some buying in some of these stocks as well. The banks look good. Some of you are in the big banks. Those look good. JP Morgan, Morgan Stanley. Consumer staples, consolidating a bit. Walmart, we got earnings on deck. Oh, Jesus. Can't take it. Can't take it.
75 calls against it for $1.15 debit, as I consistently do. I like to use spreads. And I like to use spreads because not only is it defining my risk from $1.15,
Starbucks
but it's also
looking good as this guy is talking Nike.
Look, this has been a rough run for Nike. It's got a bit under it.
I've never seen him trade. He's always bearish. Nike looking pretty good.
Rick, so as we look at some of these areas of support, are you seeing the same thing around 60-ish for Nike and perhaps a move to the upside in its future?
Yeah, 60 stands out. Also 70 stands out to me too. I'll start with our lower end here. Backtrack 59 to 60 is about here. We had our green line that was resistance and then support. This is that same area here, 59 to 60. We've found our footing there a couple times. We didn't quite make it there during our most recent declines, which actually seems a bit more positive for a bullish outlook here. You can see we have a upward sloping trend line, but we also, I think you could argue, have a downward sloping trend line that we're potentially breaking through to the upside. We haven't quite reached 66 yet. That was another repeated stopping point. Old highs.
They're talking Nike right now.
So 66, but then on the road to 70, that's a high water mark here. That was part of Don's strikes that he mentioned there. But 77 as well to the upside gap area and high point. So that would be another major area for the longer term to consider. When we look at our moving averages, the thing that stands out is that our blue, faster moving EMA, our 5-day weekly EMA, is starting to cross over its slower moving peers here as price does the same. So signs of trend improvement here. Our 250 one-day EMA up here near 68, 80 or so roughly. That would be another potential resistance point to watch out for. Meanwhile, RSI is starting to break to the upside as well, crossing above the 50 midline, making new relative highs and breaking through its downward sloping trend line. So some interesting bullish developments from that
Nike
as well. Finally, volume profile point of control. Right about here, near 62, 63 or so. So we have heavy volume at a significant low point on a chart. We're kind of crossing through to this other lighter area, 66 to 65. Then there's not a whole lot to stop us until we get all the way up here. Things start to pick up again near 72. Contrarian plays can be very interesting, as Don said.
Nike. Let's see. Triple MACD. Okay, these are all bullish. Triple MACD. Nike. Nike looks good. 25th today, trying to cross over. Bullish. It's been in a downtrend, Nike, since August of last year. Looks like it could get going. Nike. Nike looking good. Nike.
Google, and we're seeing rotations in products like Nextera. That's exactly what I think we're seeing right here, except that this rotation appears to have actually ended. So have we actually seen a top, at least kind of a short-term top inside of NEE? And that's, as I said, that's the bigger question. This is a stock that has reversed violently off the 96 region. It's all the way down to like 91. At this point, again, I think that's it. You know, we're going to pull back for the near future, and I'm going to hop on board that one. So, the irony of here is, I call myself a contrarian, but in this particular case, I'm not sure I'm on, the contrarian side of the trade. I think I actually might be on trend in this one, being a little bit bearish. But again, the big point here is this isn't about need. This is not about the cyclical rotation.
Apple breaking out. Apple breaking out. Watch Apple here.
Buying Costco, I'm buying, knee, and that's exactly why I'm all bared up in this trade. This one I'm going to go a little further out. I'm going out to the March 20th expiration.
Apple breaking out.
The 90 puts, buy the 90 puts, sell the 85 puts. Once again, just a $5 wide put spread here, okay? Just over a month to expiration, and this one's done for exactly $1 pivot. So cheap shots to the outside. I call it a cheap shot because never you pay $1, okay, for a spread that can be worth.
All right, so you're looking at Cisco, Tony? Cisco.
And that is inherent in the cost of this particular spread. So it's a lower probability trade that we're kind of banking on the idea that this reversal kind of has teeth and is going to continue.
All right, Rick. So as we look at the reversal, I can certainly see the strong upward channel that we see. Does it look like it has any teeth?
Possibly. I mean, as Don said, technical analysis is trying to get in on the trend as soon as you're sure it's shifting. In this case, we could be seeing that right now today. We're breaking through our trend line, very slightly so.
What's up?
But we are now.
Sorry about that. I was talking to my son. Let's see. Apple. Apple looking good. It's above the 20 EMA. So when this happens, we're looking for that 20 EMA to continue and for prices to go as well. Looks really good. Apple is a buy on the 60-minute. Okay, stop underneath.
Now was greater this morning. What were some of your key takeaways?
Well, I think, you see some pressure here from acquisition. And, I'm coming to you
from Zurich today, and I've got to tell you, with respect to cybersecurity, few things,
Apple.
few companies have the platform that's been built by Palo Alto that could rival Palo Alto's platform approach. And I think that when you look at their guidance, it indicates, some of the pain of integration. And when you create a platform, obviously there is some delay always.
Apple looks good.
Systems integration, and in cybersecurity, you can't just leap forward. You must kind of build and then deploy. And I think you see some of that here. I like the earnings per share. Obviously, the earnings per share is a miss in the reporting here. But in terms of
You did all of that?
Yeah.
with ARR, annual recurring revenue, I think 6.2 billion.
Is that the right
Yeah,
one?
6.3. I apologize, but
Yeah, that's the only thing.
That's
That,
it?
have
Okay.
a ARR indicator there of the future. And here's a company that decided to.
when did you submit the last stuff?
The guidance,
February 14th, before deadline.
their platform.
I think it's just
They know that they have
his application got checked earlier.
Yeah, that's what I think too.
Recently. It happened at like 11:32 or something.
I think you're good, man.
You see this coming recurring
We'll check later.
revenue at such a great number there that I feel that the dip is.
Son's all excited about this governor's school, #1 school in the state. I hope he gets in. He's really excited about it. STEM school. Okay, Apple's still looking really good here. Apple looking really good.
This is a company that's poised to make a great, unabashed contribution to the cybersecurity of major corporations that simply need this product.
So, Nathaniel, if this is some short-term pain for a positive long-term position here, what's giving you the confidence that this integration risk is manageable? Because, I think we've seen more than 20 plus acquisitions under Aurora.
Yeah, you have, and when you look at that, it's difficult to take technology and integrate them and then deploy them in a platform that is a live system that's securing so much important data, important product of their clients. And so I think that's what we're seeing here is some of that pain. Now, in terms of why this is bullish and long term for me, is that if you looked at similar companies or companies that were absolutely identical, but I told you one had a liability in their cybersecurity of X and the other Y, one higher than the other. I believe cybersecurity is a missing indicator in public filings. It's a missing indicator in companies. And when you're dealing with any company, whether it's a retail or any company, the idea that their product is secured against users, that they have properly secured their apparatus, their software as a service, their systems, even your data. These become liabilities, as we know, when they are hacked. Things like
LITE. LITE.
other
All right, trending.
communications in our government and otherwise.
All right, let me run a scan here.
Look at cybersecurity as a missing indicator. I think that we're
Okay, this scan picks up these 6-minute approximate scan. Let's go run this scan. Okay, let's sort these by highest scooter score. Farmers National, Bank Corp, Farmers National. Okay. And nothing there, nothing there. Garmin. Garmin with a big gap up. Okay, that looks good. Okay, so Amazon. Amazon moving above the 20 EMA. This is key to the way I look at things. There's a lot of ways to look at momentum, but this momentum shift most likely will continue as we move above the 20 EMA, being below the 20 EMA for the last few weeks. Once we shift above the 20 EMA, what we want to look for is the next dip. If you didn't buy this morning's pop, as we were starting to move, if you didn't take profits already, look for the next dip. If it bounces at the 20 EMA as it's turning up, we see a follow-through candle similar to over here. Okay, so once it moves back above the 20 EMA, Once you see that bullish follow-through candle, you take the long after that little pullback to the 20 MA. Take that long there, put a stop underneath that doji. Price action moves higher and just keeps moving higher for a short-term swing. That's what it looks like right now. Apple still pushing. What's Supermicro doing? Supermicro's been dead money for a while, right? Supermicro. Yeah, that's still below the 20 MA. Cisco, Tony's looking at Cisco. So once it moves above the 20 MA, you start paying attention. That 20 MA needs to turn up. There's no hurry here, but once it starts to trend like it did over here, once it gets above the 20 MA, that's your heads up. Okay, you can create alerts for these types of moves. Put an alert on Cisco if it moves above 78.50. Over the next couple of days, if it gets above 80 or so, that'll more than likely be a nice trend reversal still underway. Cisco looks pretty good. Let's look at NVIDIA. NVIDIA, we've been waiting for it to get above the 20 MA. It finally did. Notice the higher low. It is in a range, so there's that. Broadcom, another one in a range. Micron, consolidation for the past couple of weeks. Consolidation looks like it's going to keep going. Okay, what's Robinhood doing? Robinhood just pulled back. Okay, so it's trying to turn the corner. Robinhood looks like a good candidate as well. Let's see. DoorDash coming off the low. Okay, that's first time above the 20 MA in many weeks, as you can see. Brief attempts to get above, but the 20 MA never really made a big turn. It's at the low. Looks like DoorDash could continue. You don't need to buy the high, obviously. Okay, so a dip here back to 167. All right, that's a $5 move. If it does come back here, one of two things can happen. We can move sideways and the 20 MA catch up. That's fine too. Or it could pull back, say to 170, 20 MA catches up. That would be a better entry. Right now it's at 172.38. Hit the high at 175 today. This looks really good for DoorDash. Let's look at the weekly time frame. Okay, it's you can see how you would want to scale into this. It's at an area where we look like we have a bottom. Could be a head and shoulders top. Okay, here's your left shoulder over here. The head, the neckline. Okay, the neckline would be along this area. Now, if we start to bounce, this neckline could be a little bit upward sloping. That's fine. But we'd be looking for, let me just, let me do this. Okay, so I have a little bit more room. Let me go add 20. Let me add 20 here. Okay, so I have some room to trade, to mark this up. So this could be the neckline. Okay, this could be the left shoulder. Left shoulder. Okay, the head up here. Head. Up. Try spelling it right, Benny. Okay. Head. Okay, that's the head up there. And we'd be looking for the right shoulder now. So what would that look like? If it in fact does this at all. All right. So we'd be looking for price action to do something like this. Bounce. And then roll over. If it doesn't roll over and it keeps going, that's great. But for now, it looks like a head and shoulders top. A break of the neckline would give you the depth of the head to the neckline as a measured move. So you'd have this down to here, and then you would project this down here. So hopefully that doesn't happen with DoorDash. I don't think it will. That would line up with previous lows after the 2022 bear market. I don't see that happening. So that's probably not something that we need to worry about, but it's something that you need to just keep in the back of your mind. DoorDash could be a head and shoulders on the weekly. For now, though, it's coming off the low. Watch the volume, MACD's turning, and I think the best way to trade this is use your 60-minute 20 EMA for an effective entry and trailing stop. Okay, we got Chevron. Looks like it wants to continue. Chevron's been on a nice trend. This is the power of the 20 EMA. Okay, you already know that energy stocks, in particular Chevron, ExxonMobil, Valero, Phillips 66, all these different companies that are going to be affected by the Venezuela negotiations with crude and processing that crude. The 20 EMA very strong. So you know when you're wrong, or you know when you get stopped out, it drops below the 20 EMA closes. In this case, we're right back up. So that's telling you there's buyers still interested. We'll look at the weekly time frame. Weekly. All right, so multi-year breakout on Chevron. Multi-year. Okay, multi-year breakout. Okay, the last time we had a multi-year breakout, this went from 94 up to 164 before starting another base. No need to chase it, but there's something that definitely looks good. All right, looks like Chevron wants to go a little bit more. Chevron. Now, what did I had something here on Chevron. Chevron. Where was it? Chevron. Chevron rose 2.5%. Blah, 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 blah. All right. Let's see what else has got here. Chevron. Chevron.
That we're seeing, but the stock is actually holding up quite a bit better than some of the other names out there. I mean, it's still down about 19 or so percent year to date. But if you look at Mizuho, they are actually quite constructive on Palantir, considering that the price has come down substantively over the last 6 weeks, at least year to date. They're still maintaining a $195 price target, but they moved their rating on the stock.
Okay, let's look at Chevron. Let's see, Chevron total increase 617,000 contracts. Like Exxon, Chevron saw a stronger bullish bias with call open interest rising 4.2% over the last 5 trading days. On February 13th, call options accounted for 99.24% of the day's total transaction volume, highlighted by unusual activity at the 170 strike. Okay. Conoco. Chevron, open interest. It's contracting nearly 50% right now, based on adjusted earnings for fiscal year 2026. At $1.32, it's trading at 100 times this year's earnings, but next year at 73 times. Now, these are still quite large earnings multiples, but they are significantly lower than where they were just. Okay, Chevron. January 27th. High volume at the 170 strike for this week. Okay, so we're much higher than that right now. Deep in the money, trading at like synthetic shares. Okay, S&P is still chopping around. I want to keep an eye on Trace. Okay, that's just moving sideways. We got a substantial amount of open interest, or rather gamma overhead, that's resisting price action for now. You can see that this has gone away. A lot of these trades have been taken off, closed, with 69.30 as a major resistance level just overhead. Chevron. Okay, let's take a look at Chevron. Let's look at ExxonMobil. These are all consolidating, right? ExxonMobil. Okay. Exxon open interest and climbed 2.1% to 1.2 million contracts. Current open interest is above its 52-week average of 999,000 contracts. Over the last 252 days, total open interest has percentile rank of 100%, meaning that this is the highest open interest has been in ExxonMobil for the past year. A lot more demand for the trade and carry options positions in XOM than normal. Most notable increase was the 20 February, this Friday expiration with 6,566 contracts added. ExxonMobil. Okay, let me take a look at that. ExxonMobil. For this week. Yeah, I see them. They are the 125 strike. Oh, man, they have a lot of open interest here at the 155 strike for Friday. Those are 28 cents. A lot of people betting on a move here.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. Brothers today. The home builder reported solid earnings for the first quarter, beating analyst expectations on the top and the bottom lines. Want to bring in our panel to take a closer look at the numbers.
Okay, we're starting to climb. ExxonMobil.
President and founder at Housing Research Center. Alex, we'll start with you. Toll Brothers beat their revenue. They beat on EPS, $2.15 billion in revenue versus the expectation, $2.19 a share, better than the $2.11. But we are seeing a downward move now. Why isn't the stock responding more positively?
Well, I think if you look at the valuation of the stock, it's already kind of near the historical high end of the price to book range. So it's already in some ways discounting a lot of good news going forward. Given that the stock is performing well, I don't think people are projecting there's a ton more upside here. But usually the range historically for the builders
ExxonMobil.
is 1 to 2 times book, and it's kind of hitting up against that top end of that range. But overall, they had a great quarter.
And Aaron, what were your thoughts on the quarter and this post-report price action that we're seeing? When we were taking a look at writing the show beforehand, everything was up, and as I refreshed before talking to you, we're now trading lower.
Yes, I mean, that's the story of the real estate market in a nutshell right now. So really what Toll Brothers has going for it is that it is servicing the luxury market, and their backlog is much smaller than it was previously. However, their contracts signed are pretty consistent year over year. They went up slightly
ExxonMobil looks good. Moving above the 20 EMA on the 60 minute. Can we get a nice follow through? Moving above the 20 EMA.
Generally speaking, Toll Brothers has been outperforming. And Alex, I want to touch on what Aaron just brought up, that Toll targets this more affluent customer. That's been their long focus, these affluent
Chevron.
buyers. Is that
Okay.
information starting to
Let me put Exxon here instead of STX. XOM. Okay. Yeah, XOM looks good. XOM looks good. Check out the 60 minute 20 MA and also check out the 1 minute, 5 minute. All of these look good. Okay, rising. The 155s are a 15 delta. Those are pretty far out there. But at the money is $160. Offer 155 bid. The 50 deltas, 150. So this could go a bit more. ExxonMobil, the oil and gas names catching a bid at the moment. Okay, S&P is pulling back a little bit. S&P. ExxonMobil. Okay, let's see. ExxonMobil. Okay, looks good.
For your modeling, and you're modeling about 10,400 orders next year. That would be up about 5%, but deliveries down 9%. Is this a normalization story from your viewpoint?
Well, usually, there's a delay between an order and a delivery, and the only thing that's happened is that Toll Brothers in some ways is pulling back towards the more balanced.
Okay, RXT was mentioned earlier by Mondo and Mr. Turcini. That's continuing here, RXT. RXT, higher. On the move. Nice. Thanks for the share. Early. Mondo.
Looking for these big moves and for it to be a buyer's or seller's market. I think right now we're pretty balanced, and actually we have taken care of a lot of that inventory that needed to be built, and lots of the big builders ramped up production. They pushed out a lot of apartment complexes and townhomes, multifamily opportunities versus what Toll Brothers
Palantir.
component. So it caught us up to where we needed to be. So I expect things to be flat going forward. I don't think that's a bad thing. I think that's just the reset that we need this year. I will continue to look at that backlog number, though, because that's the best indicator we have for future contracts right now. All right, well, Toll Brothers
300 million shares trading versus 2.5 average.
I want to thank you both for being with us to take a closer look at the numbers we got from Toll Brothers. Aaron Sykes, the founder at Sykes Properties, and Alex Barron, president and founder at Housing Research Center. Also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on SchwabNetwork.com. Stay with us. Fast Market with Diane King Hall is coming up next.
Okay, that looks pretty good. All right, Rackspace will run Palantir software in private cloud and UK sovereign data centers, targeting highly regulated industries, government finance that can't use public cloud AI. Scale, Rackspace already has 30 Palantir trained engineers and plans to scale over 250 in the next year. That's pretty good for Palantir and for Rackspace. I hadn't realized that Rackspace had gotten down to $1 per share. That was a little bit of a surprise. 40 cents. Nice move there on Rackspace.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob, last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, but then I met over 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
300 million shares trading hands versus 2.5. Big spike there.
Here on Schwab Network, I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange, the stock holding on to a gain ahead of the latest minutes from the Fed. Let's get right into a check of your scorecard as we hit the lunch hour on Wall Street. We've got the S&P 500 better by 0.75%. The Dow has a gain of 0.5%. The NASDAQ 100 started the show today. It is up more than 1%. We've got NVIDIA staging an advance today, and again in the S&P 500, information technology is the top of the leaderboard, followed by energy and consumer discretionary. So we've got some strength here today, and more sectors.
Okay, so Rackspace, S&P just kind of fading from the high. NVIDIA doing the same, Microsoft. All right, so stocks got a little ahead of themselves. People chased it up there. Chase prices up higher. Now we're seeing a little bit of profit taking. It's 12 o'clock. Let me shift gears and see what CNBC has to say. Who's on? Okay, I'm going to take a 2-minute break. I'll be right back.
Whether 1 week from today is the whole key. especially for the mega caps, and that's NVIDIA. Right. Reporting its earnings 1 week from today. Barclays today with the masters of the obvious statement. NVIDIA, sorry, but it's true. I mean, NVIDIA, here's what they say. This is deep, so pay attention. NVIDIA could make or break big tech so far mediocre season. Never heard it before. You go, Barclays. You go.
So, couple things with NVIDIA. Obviously, today was the announcement of the Meta deal, $50 billion deal, multi-year deal. I think NVIDIA obviously hasn't done much over the last 6 months, only up 4%, up 2% roughly year to date, but it's bouncing today. And I think part of it is obviously this Meta deal, but I think a lot of the talk for me, or kind of the digest, and I have kind of with our analysis is, there's a lot of talk early on about these TPU chips and what's going on with Gemini and other LLMs. And I think the GPU chip still is the most important beltway chip for many of the technology and innovation that is continuing to come. So clearly, like many other shareholders, I'm very much looking forward to the print. I think it will be, of course, very important for the IT space and the entire ecosystem.
You feel confident going in, right? We know it's important, obviously. Do you feel confident about it? And do you feel, as Barclays suggests, that this is the key now to turning this group around? Year to date, every stock's down except for NVIDIA, which is only up 1.5%.
You got it. No, I do feel confident coming into this print, because I think the other thing I will say that I think has been important for me to see is all the circular spending, all the CapEx that we've been talking about for months and months and months, and looking at the ROI and what that story is. And that's what obviously the market has kind of grabbed hold of. That's the narrative, right? What is the ROI story? But if I look at this deal with OpenAI, the $100 billion deal a few months ago, they actually pulled back that spend to $20 billion. So I think there's been prudence with their spending, and I think that's important with the whole CapEx narrative.
Carrie, Wells Fargo says buy it into the print. Cantor today says stay calm and trust in Wong, as in Jensen Wong, as we remain at the cusp of a rack scale super cycle.
Yeah. Well,
they reflect what many others say. Is it time to buy this stock into the print?
Yeah, I think it is. And we've seen people buying. The stock's up 11% in the last couple of weeks. And remember, we had $1 trillion worth of selling that came primarily out of software companies over the last few months. That is enough to buy 3/4 of all small cap stocks that are listed in this country. And all of those small caps did not go up 65%. There's a lot of money that was on the sideline. It has to go somewhere, and much of it is now coming right back into what was sold. So I think it makes sense that you start to see Microsoft move higher, Booking Holdings, that's one of the stocks we had owned, move higher across the software spectrum, and NVIDIA, which is the powerhouse, and they are powering AI. I mean, if everyone's getting disrupted because of AI, and software is going down because they won't exist because of AI, which isn't true, it's NVIDIA that's selling those chips. So yes, it makes sense.
So Liz, let's see. And these other names start to ramp into that print in anticipation of something good. I'm not necessarily sure the sector's going to wait around to see what they deliver, because I think everybody assumes, how could they not deliver a good quarter in guidance if the spending ramp from these other names continues to escalate the way it does?
Yeah, I don't think the sector will wait around, and I think software probably does gain into that print. Look, over the last month or so, software's been at various levels of oversold. So we're at a place where I think it's well into the bottoming process, and there's an opportunity, especially from a technical standpoint, for upside here. And we all know that NVIDIA is the bellwether for sentiment, particularly in the AI trade. If things go well, it's just further justification that this AI spending bender, the CapEx spending bender that companies are on and still surprising to the upside on, is going to continue and should continue. And I think that's what investors need right now to feel calmer. That being said, I don't think this will end up being rising tide lifts all ships and that we've got somehow, everything goes up from here for the rest of the year. I still think that the rotation that's been in place will stay in place, and we need some signals from sectors like financials for that cyclicality to really take shape.
All right, this looks good. RXT. You guys are familiar with this one. Mondo mentioned earlier. RXT doing a deal with Palantir. That's a good confidence vote in the company. I mean, Palantir is no slouch. Okay, let me just. Why is this? Oh, I know why. Because I have too much over here. Huh? Too much over there. Okay. RXT. RXT.
So the challenge has been in the fourth quarter that the financial services industry is focused on concentration risk in portfolios. If you extract that and you have an equally weighted strategy, you don't have that concern. So that is what we're running. We don't have that. At the end of the fourth quarter, with literally nothing to do with Apple, with Microsoft, with NVIDIA, you saw a large component of the financial services industry reduce the holdings in a lot of these passive ETFs specifically related to the concentration risk. And if you believe the concentration risk is real, then you're going to carry names like NVIDIA at an underweight. And you're going to carry them at an underweight beyond the earnings of next week.
Okay, RXT is taking off again. I just posted something on StockTwits. RXT. Good catch this morning, and Mondo.
NVIDIA 8%, Google, and you really want to have diversity because you have explained to your clients that that's what matters. In fact, there's a big study, and it was discussed in the Wall Street Journal last week, that if you had followed a policy of just owning the weight, the index, or even more concentrated over the last 15 years, you would have done better because those concentrations really paid off with technology stocks and communication services.
All right, S&P bouncing too. That looks good. Okay, I have to take another couple of minute break. I apologize. I'll be right back.
The value of your holdings, and therefore people own less than the weight.
Companies are defending their business models and so forth. So, the overweight's tricky because we make one quarter calls, and so we'll have to readdress this at the end of Q1. But we think on the setback, we think we're in pretty good shape from here, certainly into the end of Q2. What we have been suggesting, Julie, is that, again, this issue is not going to go away. The overhang is going to be there. So we're expecting ongoing volatility within the software sector, but we do think that the Q1 earnings season will probably be the next time frame at which we see companies, I think increasingly defending their turf, if you will. Last point on this, when we look at software in terms of our ratings, is through an S&P 500 software industry lens. What I would point out on this, and your heat map showed this earlier, Microsoft is over half of the industry group within the S&P. It's about 55%. Essentially, you have to weigh in on that one in particular. More or less, as it goes, so is going to go the industry group or the sector, the way we think about the S&P 500 lens.
Gotcha. We're showing that heat map again, indeed, so that market cap is a lot bigger than most of the other market caps. So, point well taken on that. Something else I want to ask you about when it comes to software is kind of the AI models that are out there. And I was just looking at, just kind of for fun, looking at Polymarket odds this morning, and which company's going to have the best AI model at the end of March was one of the bets that's on there. And you see it's kind of split, but Google right now is in the lead. Obviously that keeps changing. Anthropic just came out with a new model. does it matter for the software sector which one of these is going to end up being the dominant model or models?
That's probably a little bit beyond my pay grade on this particular discussion, but what I would say here is that, I think we do have to allow, and this kind of gets back to a broader AI discussion in terms of how we're thinking about the equity landscape. There's been a lot of talk around this bubble notion. We said, hey, look, there's as much of a boom thing going on here as anything right now. But what we've been arguing for several months now is that you have to allow that this is becoming a much more idiosyncratic playing field, okay? Whether you look at the software sector or whether you look at it more broadly across U.S. equities, the way the AI enablers are going to unfold here is going to have its own version of idiosyncrasy, if you will. So how you think about Google might be a little bit different than the way you think about Meta, the way you think about Broadcom might be a little bit different than the way you think about NVIDIA here. So, we think that this is actually an element that gets overlooked in this bubble talk. But what I would allow here, to your question, is that there's still, the way this is setting up, plenty of room for many actors to survive and prosper in this. So I think as we look at this coming back to the software discussion going forward, we just have to allow that these companies are not going to be, sitting still on this, and they're going to be looking for ways to augment their product offerings. Time is going to tell in terms of the degree to which they're able to monetize that augmentation, if you will. But it's going to happen. These are very embedded franchises with very strong margin profiles. And I think that there is going to be an element here that, the market's priced in a lot pretty quickly. But as we go forward, we're going to find out that there's actually still room for these companies to show pretty persistent growth over the next couple of years.
That's all. Thanks so much. You can check out more from Yahoo Finance's Prediction Markets Hub, powered by Polymarket, and scan the QR code on your screen.
ExxonMobil continuation, ExxonMobil. Sorry about that. All right, so I'm not usually doing a whole lot during lunchtime. Good time to take a walk, take 10 minutes, push away from your trading desk, come back refreshed, and looking for B and C pivots. This time of day, we generally drift a bit lower. What's the S&P doing? S&P hedge flows currently watching, just not doing a whole lot. Okay, we've got about 3 billion, about 3 billion in 0 day, 3 billion in GEX have traded today, 3 billion. All right, you can see that hedge flow line that hit a high of about 1 billion. It hit a low of about minus 2 billion, a $3 billion range there in gamma. Okay. So futures, I really like what I'm seeing with Exxon. Futures, S&P cash hanging out at 6,900. That's resistance. February is one of the weaker months of the year. We all know that. Okay, we got resistance here. Overhead, 6,900's right there. So for now, we've got resistance overhead. Okay. Right there. 6,900. Okay, can we get something going here? Supply. We hit the 1 day expected move for the S&P cash. You can see that right there. 1 day expected move. Anticipated move, expected move. 6,900. Okay. Okay, we're currently trading 69.03. Let's see if we can't get some lift here and push a bit higher. Bitcoin's not doing much. Got a temporary little pop there when the Trump brothers were on CNBC, but that's since dissipated. Pretty decent day for chip stocks. Pretty decent day. S&P, we need to get above this level. Can we run this? I doubt it. I doubt we get above this level. We got a lot of resistance overhead, a lot of resistance, positive gamma, whether it's above or below. If it's below, it's support. When it's above, it's resistance. The red, that's negative gamma. That's where we could see higher volatility. You can see there's a lot of red overhead and down below. Okay, I'll be watching this. I'll be tuning into this shortly. Okay. Looks like it's what, on YouTube? Yeah, it's on YouTube. So you can check out Brent. It's on YouTube. Always good to hear what he has to say. Derivatives trader for, I believe it was Credit Suisse and UBS. I forget. But he's really very smart guy. Pays to listen to people who are a little smarter than you in certain areas. Still learning about gamma and how all of this affects our trading. Just got a nice little update this morning from Grover and Mondo on VIX expiration, how that affects things. Some of it I already knew, but there are some things in there that I wasn't really tuned into, which is really good. So I appreciate that. Share. Okay, HSAI, we're looking for a pop on HSAI. It's a Chinese stock, obviously in the AI business. Okay, HSAI. Looking for the breakout. Looks like a big cup and handle. Earnings growth is underappreciated, according to the Chiron on the bottom of the screen on CNBC. Earnings growth underappreciated.
Second largest ever. Industrials tech discretionary also saw large outflows.
All right, ExxonMobil are at the high.
Paints a picture that many would totally agree with. Yes. Why are people selling stocks? And in fact, if profit margins are strong, it helps the narrative surrounding tariffs not being inflationary because those corporations are going to absorb the cost of the tariff in the actual profit margin. I'm surprised by that report, quite candidly. I think I would say the selling that I've witnessed is more institutional in its nature. We spoke yesterday. They are talking about institutionals. It's B of A's clients. I mean, they're talking about their clients. They're talking about institutional flows, not retail. Yeah, okay. Because let's make that clear. Because yesterday we talked yesterday about the fact that retail was actually buying. That's true. That's why I said retail.
Oh man, he is so much a pain in the ass. Why doesn't Wapner just shut up and let people talk? See what I mean? The guy just keeps interrupting people. God, I can't stand him. Can't stand this guy. I mean, I tune in to Halftime Report to listen to what money managers have to say, portfolio managers, not Wapner criticizing everything that comes out of their mouth. It just aggravates the hell out of me. I love when Frank is on. Frank is really good. Black dude. I think he's black. He might be. Well, he's black. He's darker skin. Melissa, occasionally she's on, or Mike Santoli. He's really good too. They don't come across the same way. I don't like people talking over me. You know, when you're trying to make a comment and they ask you a question. I have a couple of friends that do this. They ask you a question. You're about to finish. You're about to start your sentence, and they're already on to another subject. They want to change the subject or whatever. Especially if you say something that they disagree with. Anyway, Benny, what are you talking about? Wapner just gets on my nerves. I just want to watch the show. I wish they would have Santoli on. I know he doesn't want to be on all the time, but he's much better host. Him and Frank, Melissa, they ask a question, they let them finish. They don't interrupt, especially the ladies. He's constantly up. He asks Jenny a question, and then he interrupts her halfway through her sentence. Same thing with Stephanie. Stephanie doesn't put up with any bullshit, though. I like Stephanie. She just like keeps talking. Oh boy. Anyway, all right. We're stuck at resistance right now. S&P stuck at resistance. I don't see us moving through this area presently. If you're betting on a move higher, I don't think it's going to happen for now. What happens in the evening session is another story. I'm just looking at these bars right here. Okay, 69.25, 96, almost 97 percentile. So that's a pretty large area. That's 0 day, non-zero day. You can see from this point all the way up here to 7,000. Lots of purple. That's resistance. We got hedge flows moving lower, so we could see a little fade here, but S&P is holding up fairly well. I gotta hand it to the markets. They're looking pretty strong today. I was a little alarmist, if you will. I was a little bit of an alarmist yesterday. I see that Money Magic's also talking about puts being bought. Okay, So I was alarmist because they had the 6,800. 6,800 is a line in the sand. We hit this level like 4 times. The last 2 times, actually last 3 now, last 3 times we hit this level, we bounced back into the range, which is great. We're doing that today. But yesterday, we were diddling below 6,800, and I said, oh man, if we lose this, very possible we could see the 200-day. The probabilities were like 50%, 50%. But that's if we lost 6,800. Since then, we bounced, and now we're back up into the middle of the range. So that was the other caveat. We could get a bounce and move back in the top of the range. So looks better. Now, let's see if he interrupts Bren. Watch this.
Repeatedly about from sector to sector to sector to sector that these AI fears have, taken down. Real estate brokers, etc., are caught up in that to some degree. You bought CBRE, which Josh Brown did the same in the midst of all of that upset. Real estate hit a 52-week high today. Tell me more about this name.
No, it didn't hit a 52-week high today. It hit a 52-week high yesterday.
For last week, so dumb. And these single stock moves are so extreme, and we see what's happening. The CTAs are coming in, shorting these names. It's so ridiculous. And what's ironic is CBRE had earnings last week, and they crushed it. It's like all-time earnings. They were pretty aggressive on their earnings for 2026, up mid-teens. And actually, the CEO talked about, Scott, how great they are already getting about 25% cost savings from research from AI. And over the next 2 years,
let's see. Vornado, VNO, VNO.
All because of AI. And so if you think about a company that's just embedded in the economy, this is
VNO bouncing. Jones Lang LaSalle. Okay, that also got hit. Jones Lang LaSalle. O. Realty Income. That one didn't. Airbnb. That got hit. Now bouncing. All right, he didn't interrupt her this time, the first time.
I mean, I've talked about Blue Owl's OTF many times. I think that also makes no sense. You're issuing debt to billion-dollar revenue, 300 EBITDA per year companies, and you're not looking at the terminal value. These companies don't need to go public.
S&P.
And so I just think I like the debt side on the software side. I think, ServiceNow, we're seeing obviously all of those insiders buying their shares.
Higher highs, higher lows.
Those companies are more complicated. But
S&P, okay.
The CBREs just continue to take advantage
Let me
of
take a look at this.
Those CTAs when they're shorting these single stock names, because it does get just so extreme and they're very overdone.
Let me ask you real quick before I let you go, since you're an NVIDIA shareholder, and we discussed as our lead today, whether in fact this report 1 week from today just holds the key to
S&P
the market right now, especially what's been a very fragile tech space.
I don't think it does. I mean, Jensen has been out and about. He's, so talkative. You had him on your show.
Sell calls at 69.90.
He's going to say, I think the market right now has just moved on.
Buy calls at 70.50. That looks like a spread. Yeah, that's 2,500 each. You see that? 2,500. So this is probably a spread. Buy a call, sell a call. Okay, so they sold the call closer to the money, and they bought a call out of the money to create a spread. All right, 76,000 in premium.
We get a little upset every now and again. We need the market security blanket, and in some respects, maybe he and it being NVIDIA.
760,000. Sorry, 760,000 in premium.
We'll see you soon. Brent Talkington. Let's get to your moves because you have several. Let's start with American Express. Why did you trim some of that?
It was a big position. We've owned it for years. The stock has gone from 11 times earnings where we bought the large position to 19 times now. And we just decided to move some of that into other names. That's all.
Okay, you bought more S&P Global. Is that one of the names? You take some of the profits, you buy some more of that?
Yes, exactly. I mean, S&P down 25% with this wave of hitting software companies. Mm-hmm. And this can't be totally disruptive. They are the rating giant, particularly in fixed income. And
was it SPG, S&P Global?
So their business
No, it's Simon Property. Simon didn't pull back that much. SPGI, or SPGI, Simon. Gotta hate it. SPGI, SPGI. S&P Global.
That's a new position? Yes, it's new, but it's a name we've owned in the past. Okay. And it's a utility, it's a water utility. It went as high as 40 times earnings on the wave of sustainability.
AWK.
And as a water utility, it's the largest publicly traded
Weekly.
water utility, and they've been expanding. And we believe
Yeah, those are okay.
their earnings,
These
11%,
range bound.
2.5% dividend yields, and the stocks come down. So we thought it was an attractive entry again.
A new name for you, and I think for the show, for that matter, FlowServe.
Yes.
New buy.
Yeah, so
Record high today, by the way, as you look at the chart.
Exactly. But we think there's a lot more opportunity.
Yeah, FLS. I saw that the other day too. FLS. FlowServe. No position. Trending. A little flat base here back in December. This broke out and started to retest it, then took off at $74. Now it's at 92, almost up 20 bucks. Look at the muscle in RSI. It shows you strength of trend is persistent.
Thank you. Let's get the headlines with Pippa Stevens. Hi, Pippa.
Hey, Scott. Billionaire Les Wexner is denying any wrongdoing in his relationship with the late convicted sex offender Jeffrey Epstein. In a statement released this morning before a deposition with the House Oversight Committee, the former owner of Victoria's Secret and other brands said he is eager to set the record straight. He claims he was conned by Epstein and never witnessed nor had knowledge of his criminal activity. Epstein victim Virginia Giuffre previously claimed Wexner is one of the men Epstein trafficked her to. Crews in California are searching for 9 backcountry skiers who remain missing a day after an avalanche near Lake Tahoe. 6 others have already been rescued. The group was on the last day of a 3-day trip in a popular skiing area in the Sierra Nevada mountains as a massive winter storm hit the West Coast.
ExxonMobil, nice bounce.
Boycott the Milano Cortina Paralympics next month in protest of a decision allowing a handful of Russian and Belarusian athletes to compete under their flags. Ukraine's athletes will still take part. Scott, back to you.
All right, Pippa, thank you for that. Pippa Stevens coming up. ETF
Okay.
How you can keep the income flowing during market pullbacks. Don Chu has some answers in today's ETF Edge, which is next.
All right. So I'm going to take a couple-minute break. Just going to get some fresh air, and I'll be right back. Give me about 5 minutes at least. I'll be right back. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is 12:35 on the East Coast. It's Wednesday, the 18th of February. Okay, so I'll put the hedge flows on here so you can watch that. Keep an eye on it. S&P, looking for S&P to turn back up. It's up against resistance, so I don't see much of a follow through at this point. Give me 5, 10, maybe 10 minutes. 10 minutes. Take a break. I'll be right back.
It was a $40 billion deal, but it broke down over regulatory concerns. It's interesting that ours going higher after this. I mean, I guess
chips go up, right?
Yeah, I guess so. I mean, do we know? They also it's not a shock.
Yeah, I was looking for a reason, and so you got to kind of read between the lines here. But let me outline the background. As you said, 2020 to 2022, Nvidia was trying to buy ARM. And then we just learned through a 13F filing that sometime in the fourth quarter last year, Nvidia divested all their shares. So this is real world. This is looking in the past already. What's the read through here? Nvidia, I think, is effectively saying we don't need to own ARM to benefit from ARM because they've been highlighting their partnership with ARM technology. ARM licenses their IP, their intellectual property, to the likes of Nvidia, and Nvidia has deployed this in a lot of their chips. And I think NVIDIA wants to keep that partnership alive, but ARM has also been making noise that they're going to design their own products and compete with NVIDIA on a few different fronts. And so that could be a little bit of an awkward position for NVIDIA to have this huge stock ownership in a competitor. So it could be just that it's a clean break, but clearly NVIDIA still relies on ARM in their technology.
And here's the fun one. For number 3, Madison Square Garden Sports exploring a possible spinoff that would separate the New York Knicks business and the New York Rangers business. That potential split would create 2 separate publicly traded companies. Those MSGS shares shares are up by 17%. Now, listen, we're in New York, so like we always pay a lot of attention to this. Jim Dolan, who's the owner, has always been colorful New York character, so it's always fun to talk about MSG.
Yeah, so let's kind of break down what MSG Sports is beyond the teams, and that kind of speaks as to why this split might be happening in the first place, because you got two different sports, and you might want to pursue deals that require different thought processes, different things. So MSG Sports is essentially a sports franchise holding company. You got the Knicks, and you also the Westchester Knicks, and then you got the Rangers and also the Hartford Wolfpack on the ice hockey side. Media rights are a big part of the ecosystem. In filings, MSG Sports notes that its licenses local media rights, and the Knicks and Rangers have agreements with MSG Networks. That's another enterprise for local telecasters and radio with long remaining terms. So why would they be pursuing a split here? It could be a clean sum of the parts logic that investors can value NBA versus NHL economics separately, and a split could surface different growth and rights trajectories, especially as local sports media economics keep them in tow and keep evolving.
And of course, this is not the first split of the MSG empire, because there's an MSGS, and there's an MSGE, which is the yes, I'll get to that one in a second. And MSG, what's the other ticker for the Sphere?
That's a good question there. Well,
it's Sphere, SPHR.
Okay.
Anyway, it's already been split into a bunch of different parts, and so this would be more splitting.
Yeah. Speaking of stocks, let's go to the Wi-Fi Interactive, and we'll just chart this real quickly. So MSGS here, the main ticker we're talking about, is up 17% today. And I want to show you a lot. Let's just do a max chart, and you can see it finally broke through this long-term ceiling that it's had since pre-pandemic, only a few months ago. So if I show you the 6-month chart, you can see that clean breakout right here, little consolidation, move to the upside. So 75% over the last 6 months. Stockholders seem to like this as a potential value unlock. So when you get a huge pop like that on just the announcement of the news, that's usually a good sign that you're in fact not just making, reshuffling chairs on the deck of the Titanic here, but doing something valuable.
It has underperformed the other MSG things. The Sphere has more than doubled over the past year, and the entertainment arm is up about 75% even before today. So
there you go.
Trying to unlock more value, I guess. All right, Jared, thank you so much. We'll get those tickers straight. Coming up, we're talking to eToro CEO about the company's latest results. Stay tuned. You're watching Market Catalyst.
Amica Insurance is proudly customer owned. We know what keeps you going, and we work harder to protect it. Visit amica.com today.
Autodesk Flow Studio. Take your storytelling to the next level. With AI-powered mocap, that puts incredible VFX within everyone's reach. Integrating effortlessly with the software you already use. Editable, directable, controllable, making your story unstoppable. Autodesk Flow Studio.
It's the Ringer Podcast Network.
Are y'all ready?
Let's do this. This is the best idea of all the ideas.
We always prioritize each other.
eToro strengthening its footprint as it accelerates product innovation and AI adoption. Yahoo Finance Executive Editor Brian Sazzi talked to the CEO for a closer look at what the company says is a quote, pivotal moment for financial services.
We are building now products in eToro at 5 to 50 times faster than we used to build. So when we talk about the eToro super app of being able to enable any type of financial services eventually to our customers across the globe in many different jurisdictions where financial services might be very different types of products, whether it's the savings markets in Australia or the insurance market in France or the ISA market in the UK. Suddenly we have capabilities to run faster, to develop faster for our customers, and we've done more than that. We've actually opened the platform to enable our pro investors, now 5,000 of the smartest investors in the world, I would say, and definitely on the eToro platform, to actually build their own apps and publish those apps to our customers. So it's not only about our 1,500 people in eToro being able to run faster and develop faster, it's about giving those capabilities of launching new products and innovating to our customers as well.
I'm glad you brought up the apps. I am really intrigued by this app store. I don't think enough people are focusing on this app store, what it can mean for eToro. What kind of apps do you see coming, and how might they reinvent your platform?
So first of all, there are already 800 app builders out of 5,000 pro investors. Already 800 started building apps. About 1,000 apps are in pipeline. I'll just give you a couple of examples. Somebody wrote an app called Invest with Titans. It looks at your portfolio. It brings Cathie Wood, Warren Buffett, I think Benjamin Graham, and some other titans. You can actually select the titans. They're trained on those titans' personalities and how they invest, and they start commenting about your portfolio. And they give you sort of their insights from their point of view on your portfolio. And the funny thing is, the guy who built the app actually also created a toggle between like making it polite or making it aggressive. So you have like Warren Buffett and Cathie Wood arguing about Bitcoin there, or Tesla. So, and this is an example of one app. We have others that actually created swap activities. So the ability to swap one asset to another. So why sell your Tesla and buy Google if you actually want to do the same transaction of just swapping between them? So we're unleashing a lot of these capabilities. Some of them like are, quantitative trading capabilities that I would tell you 2 years ago are unimaginable. But a year ago, I would tell you, okay, now I built my quant team because I have access to AI, so they can do it. And now suddenly our investors can build their own quantitative trading strategies. So it really expands everything you can do on eToro over time. And that was absolutely published for the rest of the customers in eToro to be able to use them.
I was a former, I think I told this before, I used to be a stock analyst for 10 years. Now, I am blown away by things you're telling me. I can't believe we've arrived at this point. I mean, how do you think this technology will, I still remember writing research reports by hand and like playing in like Excel spreadsheets. I mean, how do you think this technology changes the next decade for the retail investor?
I think over the next decade, and probably much sooner, every retail investor is going to basically have something you would compare to a hedge fund in a family office in their hands. And so they'd have quants, research analysts, all agents measuring 24/7 what's happening in the markets, understanding your interests, your personality, by the way, also your expenses, your goals. So you'll have an army of family office and hedge fund quants working for you, all driven by AI. AI will become, the best tool a retail investor can imagine. The gaps that we started bridging between institutional investor access back in 2007 to retail investors by lowering the costs, by making it simpler to access. Now that bridge is, it's not only about the access, it's the tools. A retail investor is going to have the same tools like the most sophisticated hedge funds in the world, and capabilities like what the wealthiest families in the world have in their family office. So I think that's where the market is going to consolidate all of that to be agent-led, and agents are going to be your family office.
I am truly blown away by this moment. If I'm right, I just want to switch gears to the crypto front because I think you are a level-headed person in this space. If I'm right, you got involved in crypto in 2013. You've seen a lot of different market cycles. What's your message to the retail investor out there that is concerned about they bought Bitcoin around 100,000, 90,000, 80,000, and now it's well below? Like, what do you say to them?
Hodl, never give up. I've been in this market since 2011, actually. My biggest mistake always throughout the cycles was selling too early. Luckily, I already did that mistake, I think, on Apple shares in Amazon in 2005 or 6, so at least I learned that hard lesson early on. I think crypto is a cyclical market. It is amazing, by the way, how cyclical it is. We launched Bitcoin in 2013, then in 2014 it crashed from 1,200 to 150. Then we saw another all-time high in 2017, crashing. Then again in 2018, another all-time high. In 2021, then crashing again. In 2022, another all-time high. In 2025, then crashing again. In 2026, a 4-year cycle that is on the clock. That is, in my view, a potential buying opportunity to buy the deep. I think in a world where AI manages most of the money in the world, you should, AI is going to trade crypto much more easily. He will understand crypto better. He does understand probably crypto today already better than traditional money. So I think, we've always taken a long-term view. We've seen the markets, and the markets are cyclical and volatile in crypto. But in times like these are when the opportunities arise. I think it's a Buffett statement. When there's blood in the street, is where the buying opportunities are.
Lastly, Yoni, this 24/7 trading that you mentioned on the earnings call, when does that launch, and how does that change the business?
Today. Real. Wow. Today. So we launched 24/7 Gold today. Actually, a couple of days ago. Announced it today. But what we've seen, which is I think remarkable, is stocks moving to 24/5 last year, and gradually more and more stocks being 24/5, and the entire market infrastructure in the U.S. sort of facilitating and building that. What we're seeing over the weekend is actually prices being formed in crypto markets. So prices in crypto markets now are forming gold and silver prices and other commodities and even stocks over the weekend. And if you have price for those stocks, you can trade those stocks and commodities on Saturday and Sunday as well. So, because we are and have always been both pioneers on crypto and on equities trading and securities trading, we've been able to basically copy crypto markets into capital markets to enable 24/7 trading. And I do expect to see many more assets moving 24/7 in 2026.
Always good to see you, eToro, CEO Yoni Assia. We'll look forward to talking to you and following all these AI developments, man. We'll talk to you soon.
Always a pleasure.
Para adultos con diabetes tipo 2, ¿has oído hablar de Mounjaro? Con Mounjaro, 3 de cada 4 personas alcanzaron un A1C menor al 7%. Y algunas personas también perdieron hasta 25 libras. No uses Mounjaro si eres alérgico a él o si tú o alguien de tu familia ha padecido carcinoma medular de tiroides o el síndrome de neoplasia endocrina múltiple tipo 2. Deja lo que estás haciendo y llama al médico de inmediato si tienes una reacción alérgica, un moto o hinchazón en el cuello, dolor de estómago severo o cambios en la visión. Los efectos secundarios serios podrían incluir inflamación del páncreas y problemas de la vesícula. Usar Mounjaro con una sulfonilurea o insulina podría causar un nivel bajo de azúcar en la sangre. Infórmale a tu médico si estás lactando, embarazada o planeas estarlo, o tomando pastillas anticonceptivas, y antes de someterte a procedimientos planificados con anestesia. Efectos secundarios incluyen náusea, diarrea y vómito, que podrían causar deshidratación, lo que podría causar problemas renales. Infórmate sobre Mounjaro en mounjaro.com/es. Paga tan solo $25 hasta por 3 meses. Se excluyen los beneficiarios de programas del gobierno. Se aplican términos y condiciones. Pregúntale a tu médico por un diálogo de una vez a la semana.
One of the biggest compliments I've ever received for our signature was from a beauty editor, and she said, I get so many products for free, but yet I still find myself buying Mountain Glow serum. Mountain Glow is the answer to your serum conundrum of what do I use? Why are they so expensive? Why are there so many options? This is it. It's a super serum. So it does all the things in one bottle. I call it Lazy Girl Serum, and it's my favorite.
Connecting players with past love. Cheryl?
Okay, we're back.
He's right here. Anything you want to say? Lucky Larry's Lobster Mania? That's right. Enjoy new beginnings with lots of big winnings at Double Down Casino.
Okay, S&P is trying to go here. S&P.
In January, emerging markets equity ETFs added $21 billion. That is 3 times higher than the previous monthly record. And it comes as U.S. stocks are lagging compared to their international peers. For more on what this trend means and where investors are putting their funds, let's bring in Valerie Drimba, RBC Capital Markets Director of Global ETF Strategy, for this week's ETF report brought to you by Invesco.
Okay, we're trying to push right here. S&P is trying to go.
Theme of international versus U.S. Not that U.S. is doing poorly, but there's even more demand for international. How's that manifesting for ETFs?
Yes, we're just seeing it in record fund flows, and a little bit of it has been performance chasing. We had a very strong start to the year, particularly for LATAM countries. We've seen the South Korean market go up. I think it's almost up 30% in the last few months. And so this, of course, brings investor eyeballs, but also it's following up with investor dollars. And so I think that really reinforces that investors are kind of looking outside of the U.S. and they're trying to kind of think about ways they can capitalize on this.
So are the most popular places some of those that you were talking about, Korea, LATAM? Is that where the money is going?
Exactly. And ETFs are a great way to kind of see this because they provide this excellent access. You don't need to be an expert in knowing Peruvian stocks or exactly what ones you want to buy. You can buy a single country ETF that provides investors kind of an easy access point in getting exposure to those underlying equities. And so we're seeing a really big pickup in demand here, which again kind of reinforces that investors are not only seeing these market movements and these rallies, but they want to participate in it as well. And also maybe at the expense of maybe U.S. exposure.
It's interesting too because, you know, as we're talking about big themes, international U.S. is one thing. Software is obviously another big trend we've been watching, mostly the downside, but IGV, which is one of the main proxies we've been watching for software, has actually been attracting flows. So talk me through what that's about.
Yeah, it's really interesting. And every so often we'll have this kind of market catalyst that will kind of anoint a new poster child or a new proxy. And the SaaS apocalypse has, of course, brought about IGV as this very topical way that we can measure or give a benchmark to SaaS companies. And actually, IGV had its biggest week ever from a fund flows perspective. It attracted $1.6 billion of new cash last week. So it's down, I think, 40% from its October peaks. So big move here, but investors are buying the dip or they're thinking that this looks like an attractive entry point.
And that's interesting. And also sort of confirms, you know, we've been talking with guests over the past few days. Not everyone agrees that the sell-off is really done, but most people say in that group.
Yeah, I think it's a combination of two things. One, of course, valuations looking a little bit punchy here. And then also the uncertainty of AI as a theme, AI as it unfolds throughout the economy. People are unsure at the pace at which this unrolls and changes our lives, and then how that kind of manifests itself within the stock market and the stocks that you want to have exposure to.
So even though flows have been coming into IGV, if you look overall at the S&P 500 equal weight, it's been outperforming also, and that reflects some of the rotation that we have seen into other groups aside from tech, right?
Yes, absolutely. And RSP, which is the ticker for the main equal weight ETF, has seen again incredible fund flows since the start of the year. I think the index is up something like 6.5% compared to a relatively flat S&P 500. So again, fund flows are following the performance here. The last time we saw fund flows of this magnitude is the last period when the equal weight outperformed the S&P 500. That was back in 2023.
Now, what's interesting about that period is that these fund flows came after the outperformance. So in some ways, investors were a little bit late by the time they allocated to the ETF. So
Okay, we're trying to push a bit here. S&P is trying to push a bit more.
The outperformance has only been for about 6 to 8 weeks. So it's kind of been a quicker turnaround that investors are.
Let's see if we can't pop through this area. We're going to probably run into resistance, I would think.
I know I'm not the only one who gets a random call from some number. You have no idea who it is. And they just keep on spamming you. Trying to figure it out, you go to Google, but of course they're not going to give you that information. ReversePhone.com is what you can use that will actually help you in this situation. Whether you're actually concerned that it's some utility bill that you forgot to pay, like water or gas, or it's somebody that's actually trying to steal money or information from you. ReversePhone.com is saving me from all of the hassle of these phone numbers and the stress and headaches that often come along with it. You can click the link below and check out ReversePhone.com.
You guys are really good at this website. And welcome to Darman TV. We produce emotional dramas for the whole family that are meant to uplift and entertain. Darman TV only on Samsung TV Plus.
Okay, we're still banging up against resistance. Google on the move. Google on the move. Tesla. Netflix. Google trying to go here. Google. S&P pulling back from resistance. All right, let me just grab some 6920s just in case. Let me just put this in my active trader window. 6920s, just in case we pop through this area. 0 day, not Friday, 0 day.
Oil prices are jumping amid rising tensions between the U.S. and Iran. Following talks in Geneva, Vice President J.D. Vance said Iran failed to acknowledge core U.S. demands on its nuclear program. Washington has now agreed to give Iran 2 weeks to close the gap between both sides. And in his final quarter, CEO Berkshire Hathaway, Warren Buffett, sold 75% of its Amazon stake. Berkshire's first bought the stake back in 2019. At the time, Buffett said that despite his aversion to tech stocks, he would look an idiot for not buying the company's shares sooner.
Looks like we're going to go a little bit here. Looks like we're trying to push. Okay, we're pushing through resistance right now. 6920. Zero day, 1605, 6930. All right, see if they take out some stops and reverse this.
I'm Jared Butler, your host, and with me is my co-host, Yahoo Finance senior reporter Brooke DePalma, who's here to connect the dots and to be that bridge between Wall Street and Main Street. Today, we're going to be talking about
Trying to push through resistance.
market data, and we've got one of the best in the biz as our guest today,
Our word of the day is defense, the kind you use to protect your portfolio, not your country. Why defensive stocks are surging and what that means for this 4-year bull market. And on today's market show and tell, we are looking at the recent breakout in large cap energy from a 20-year base. The longer the base, the higher in space goes the saying. So we're
Squeezing.
that might be your rocket ship. And this episode is brought to you by the number 42%. That's how much Bitcoin has sold off from its record highs recently. How it's tied to the sell-offs in gold.
5:15 and 30. 5:30 and 60 minutes are on buy signals.
With decades of experience across both the buy side and the sell side, he has held seats at places like Morgan Stanley, Diamondback Capital, and earlier in his career traded equity options on the SIBO. I followed his work for well over a decade, and I can verify he is both meticulous and prescient.
All right, we're back above the 50-day for now.
So it is great to have you back here, Martin. Thank you, Jared. And it has been a while since we've seen you. What do you think of the markets right now?
Oh boy.
Well, investors really have to come to grips with the fact that we're seeing just a massive amount of sector rotation these days, along with really an uptick in cross-asset volatility. I think it's a very different market.
Watching the volume and MACD down there.
Normally in recent years, we've just been used to seeing technology go straight up day after day, week after week. And, there's been a definite bifurcation within technology where a lot of the software stocks have been really hard hit. And meanwhile, most of the Mag 7 have now turned into Lag 7. And they're doing far, less, they're making far less robust, returns than I think we've seen in recent years. So, stocks like NVIDIA and Microsoft, and they've all been going sideways, if not down, since last July.
ExxonMobil.
These are necessarily not the areas of strength where they want to be focusing these days. And that very well could be the theme for 2026. To your point, sometimes defense is a good offense.
And let's break that all down. That is our word of the day.
ExxonMobil making new highs of the day right here.
No, we don't mean defense contractors. We mean the way investors are playing defense when the market still looks okay, but they don't fully trust the weather. Defense is when money shifts towards steadier corners of the market, like healthcare, utilities.
Our future's pulling back in after taking out the highs. ExxonMobil still pushing. Let's see what. All right, the New York Fangs are catching a bid. Google making new highs. Microsoft looks like it wants to go.
Last year was the year we finally started to see utilities and healthcare really start to perk up. That was the first signs. I would argue those really weren't signs of a real defensive market that has really just started in the last month. Really with the move in consumer staples back to new all-time highs. We've seen that not only on a cap basis, but also on equal weight basis. And just to give your listeners some perspective, I always look at an equal weighted basis. I think it's important to strip out some of these heavy names that dominate the indices and ETFs to really give yourself a fair picture of what the industry is doing. So when we saw an equal weighted move to new highs, literally in the last couple of weeks in consumer staples, looking at like RSPS, the Invesco's ETF, that was an interesting sign. Seeing Coca-Cola, McDonald's move to highs. Nobody talks about these stocks anymore. It's all about what is Palantir doing, what is NVIDIA doing, and Apple.
Palantir's not doing that well.
And so, that was part of it. And then we saw, honestly, the telecom sector start to come back to life. That's also a very defensive area with AT&T and Verizon, these dividend-rich type of stocks that really don't hardly move all that much during bull markets. And all of a sudden, when they come back to life, it means it's time to pay attention.
So are people trying to just play safe in this environment?
Everybody, today is February 18th. It's fixed expiration day, a day that is pretty stable, I have to say. Actually, market doing pretty well. And despite the fact that I will always raise my hand here, I thought we would be a little bit weaker. Volatility was sort of the first order effect we were anticipating, but we had a pretty strong move up. So we're going to break into that here. A lot of negative gamma below. Vinny, what's up with you? I got your email too, Vinny. Heads up. Pedro, what's up? Thanks for everyone joining me. If you have any questions, pop them in the chat. I believe I can see them on YouTube if you're over on there. And I think the X requests come through as well, so we can check that out. But what we're going to do today is we're going to break down what the impacts of options expiration are. The things that I'm watching for. We can talk about correlation and dispersion. correlation is something that we talk a lot about at Spot Gamma, and it kind of made front page Twitter, at least, just in the unusualness, I guess, of that kind of dispersion stuff. Justin, good ones over you, and Brad. Hey, good to see you guys. Yeah, so we will kind of get in on this. Bam, I got it. All right, here we go. Let's talk about founders notes. Let's start with what our view was today. For those of you who are new to Spot Gamma, number one, welcome. If you've been watching us for a while and you haven't tried out Spot Gamma, how dare you? But also, if you go to spotgamma.com/flowpatrol right now, you can actually dig into our new report. Well, it's not that new anymore. It's called Flow Patrol. You can see it there, spotgamma.com/flowpatrol. We'll give you 5 days of that report, and we can talk about that report today. But we send out this analysis every single morning. And we have our key levels for buying in, support, and resistance. And why this matters is because you're doing market forecasting, like me, you a lot of times want to be able to stick a flag in the ground. Like, I told you the market was going to sell off. I told you it's going to happen. I told you that was going to happen. And that feels good when you get that right. But as everybody knows here, it's hard to be right all the time. And this has nothing to do with the fact that I was giving edge to a little bit of downside today. It has to do with the fact that we have risk on levels and risk off levels. Risk on and risk off. I said that right. So why that matters is because we start off all of our notes with this pivot level. And the pivot right now, and the reason this matters is because it's at 6,900. Now, why does 6,900 matter? Keep that number in your mind, is because we look for relative market stability to come in over that level. Now, we're going to talk about this in TradingView in a second, because I was on Twitter, and Twitter's a tough place to hang out. But, 6,900 didn't matter. It doesn't matter. And so we're going to look into that. And then you had these big downside support levels, and first resistance today was at 6,900 as well. So we're right in and around that level, and those were the levels coming into the day. And the way we broke this down was pretty simple. I thought that we would get a pretty big swing related to VIX expiration, right? And I did give edge to downside. I thought we would have a little bit of a sinking. Now, today is day one of the sort of OPEX window. I have some really great stats that I just updated, so hang tight with that. We're going to show you what the actual impact of options expiration is. It's not BS like you may see on Twitter. It's real. Justin's got my back. And Rooster, I appreciate that you use the trace every day. We gotta have a lot. A giant maximum size burrito worth of updates coming for Trace here in the coming weeks. So we're super excited about that. Anyways, back to the point. This is Trace. If you're new to Trace, the screenshot is right here. Why do you care about this, or why do we look at this? Because this map is all red. What does this mean? Volatility is the name of the game for today. So what does that mean? We should expect fairly wide swings. That's what this red means. Red means market makers or dealers have negative gamma position. What does that mean? Market goes up, they in theory have to buy futures. Market goes down, they have to sell futures, right? So that expands market movement. If this map was all blue in color, you see a little bit of blue here, for example, then you would see that area as a support or resistance zone. So we get options expiration, or excuse me, VIX expiration this morning at 9:30. Many of you say, why should I care about VIX expiration? I'm going to show you in a second. It matters. Number two, we have negative gamma all over, so that infers volatility, right? And that's the order of the day. The first thing you say, okay, volatility should come in today for sure, right? That's our core view. The second one is, do I have a reason to think there's an edge one way or another? And in full transparency, I thought we would start to sink to the downside. Didn't happen. We moved to the upside. So that is the way that moves out, and I can dig into why I think that downside was there. Now we have to see. So this was all negative. Then we moved into the single stock side. The thing that I like in single stocks right now, I don't often flag single stocks or sectors to pay attention to, but I think the software sector right now is a great place for options traders in particular to play or trade. Why do I think that is? Number one, the IGV is hitting the software ETF. That's down it was down 30%. It's kind of trying to bounce now. But look at the vol in these top names right here. Into ADSK, CRM, FIG reports. I think tonight they had 11% implied move. Adobe, Snow. Some of these names already reported, or many of them are coming up to report. Why do I like these names? Because the IV rank, which is what happens here at the top of this list, right, is 100% or near 100%, which tells you that the ball is as high as it's been in the last year. You guys may remember, and gals may remember out there, that we had the whole April tariff Armageddon thing is still in the 1 year window. So we have balls that are higher than that, which is pretty wild. And you have to go back to late November of like 2022 to find similar volatility in the space. In that time, rates were jumping, right? And SAS was having a real struggle there, right? Because of that idea of increasing rates. So why do I like these? Because when earnings comes up, earnings 9 times out of 10 brings IB contraction. So there's nothing guaranteed in this world, but you're as close to guaranteed as you're going to get. That implied vol in these names is going to decline as they report earnings. And even if the earnings are bad, what I saw with like AppLovin, for example, is the vol still comes in. So if that vol can compensate you enough, the change in vol can compensate you enough for, say, a big drop in stock price, if you want to weigh the delta versus the kind of Vega component of that trade, then they can be pretty good trades. And because the whole complex has moved so much, the vol surface has lifted for longer dated expirations, which is key. A lot of times we see just vol shift in, this week's expiration or next week's expiration, and it's not significant enough to say I'm going to trade like a 3 month out straddle or something like that. But now these balls are so elevated that you can get away with that, and I think it makes them for some really interesting trades. So I like these because even if something like CRM reports on the 25th, even if they report kind of bad earnings, even if the S&P goes down farther, I think that the software stocks have already kind of paid up, and that vol can contract. So those are the ideas that I like right now. If you go to spotgamma.com, there's free tools. You can get our earnings dashboard for free. You can check out all those biggest moves. But I mentioned what names are kind of reporting today. You have Lemonade tomorrow. That's the 19th. So you can check that out. We have Walmart tomorrow as well. And then if we zoom out a little bit here, we'll be able to see some of these other names like the CRMs. We have, does anybody care about crypto anymore? Circle is going to report. And then somewhere hiding here, there's the old CRM. She's hiding right there. 9% implied move. Big, right? And Zoom too. 8% implied move, as well as NVIDIA. So there's a lot of that stuff coming up next week. Moving on. Let's take a quick look at the dashboard because I see so many trace conversations on here. Now, what do you see? The entire map is still red, but look at this area now.
Looking for a bounce. Just listen to Brent over at Spot Gamma.
This zone right here. This zone was not there.
Exxon Mobil going.
What does Trace do? Every 10 minutes, we update our proprietary positioning in the SPX index. This updates every 10 minutes. The line on the chart, the candle is S&P. The purple line is what we call Hero. But the map itself and these bars updates every 10 minutes throughout the day. So what do you see what happens? Let's zoom in just a little bit here. And as we go from 8:30, you're going to see VIX expirations at 9:30. So right here is where the VIX options for February options, they expire. They settle at 9:30 on Wednesday morning. That's today. So we see a decent move down right as that VIX expiration. There's one individual candle down. And then what you just see is we start to move up, right? And as we start to move up into the 6,900 level, see this big blue blobby area starts to get much bigger. Now, what is that? That is call selling, right? Now, who is selling those calls? Is it people selling calls for next week or 2 weeks out or whatever it is? No, it's zero DTE predominantly. And when I toggle zero DTE back and forth, what do you see? You see these blue strikes up here don't really change. You see bigger put positions, right, disappear. What does that mean? There is a position here, for example, at the 68.65s that is non-zero DTE. Now, why is that important? Because it suggests that under 6,900, if you have positions that are non-zero DTE and they're still on the books, they can still be a driver of negative gamma and volatility if we're local to that strike, right? And that strike is still setting up as 6,900. So if we pass forward through the day here, you're seeing this blue zone.
Okay, looking for a bounce, S&P.
Zero DTE strikes, all these zero DTE strikes. They came out and said 6,900.
Exxon Mobil pushing a bit higher. Exxon.
Gets to that level, you'll see how these strikes pick up. Right?
Exxon breaking out.
The market has just done nothing for the rest of the day. So you have that pretty clear line in the sand. And if you remember back to the founders zone, we say 6,900 to pivot. It's this critical level from that perspective. And you see the market move right up to that zone. and then we sort of trended sideways. The other thing that I want you to pick up on now, if I toggle this back and forth to see, arguably there's not a lot of non-zero DT positions now at 1 o'clock. The other thing I want to pay attention to here is the purple line is Hero. Now, why does Hero matter? Hero tells us how much stock has to be bought or sold to hedge out all the options that are trading in the S&P 500 in this case. So if this line is going up, it says market makers have to buy about $1 billion worth of stock. If this line is going down, it means they have to sell. So from around 10 o'clock when the S&P first hit 6,900 to about 1 o'clock or 12 o'clock, it was about $3 billion, right? Positive 1 down to -2 of stock that had to be sold. Now, why does that matter? That matters because that is pressure on the S&P to kind of keep it down. So what we're seeing here now is the S&P is holding pin, but what you got to watch out for is if this Hero value starts to rise, which suggests that positive delta flow comes in, calls being bought, puts being sold, then that means the market may start to rally, the S&P may start to rally a bit. You can see that the next biggest strike now is 69.25, and that corresponds a little bit more with this general blue area, right? So this map is dynamic and it's moving around quite a bit. And I'll be honest that one of the things that's a struggle or makes it more difficult to forecast now is how impactful zero DT options are. And, people get sick of hearing about it. But we have data now that says or suggests that markets are more jumpy now with SPX zero DTE and Spider zero DTE. Now we're getting more single stock zero DTEs. Monday, Wednesday, Friday is already listed. So these dynamics are real and you see them play out all the time. So we try to forecast not based on the current positions, but how we think zero DT is going to come in and play out during the course of the day, right? And so at this moment, you can see there's this gap in kind of positive gamma. But this blue zone is setting up to be, the solid resistance area for today. It sort of looks like if Hero starts to turn around here and we maintain 6,900, I wouldn't be surprised to see it move up into kind of 69.20-ish, which is probably around Spider 690, if I had to guess, right? If Hero here, this purple line starts to tank, then that's a suggestion that we may lose the 6,900. And it's nothing but a soft kind of underbelly to this downside, right? Because it's all just negative gamma down.
ExxonMobil still pushing.
That's a critical dynamic to watch and something to pay attention to. Now, if you go to SpotGamma.com/flow patrol, we'll give a 5 days free of our flow patrol report. I'll talk about that in a second. But when we launch our trace, we oftentimes do an open house. When we launch our trace updates, is what I meant to say. We often do an open house. We often give people little previews to new tools and things like that. So if you're curious and you want to try it out, about a month, you should start to see something about that. So go to SpotGamma.com/flow patrol. And you got it. And this is off of the S&P prices at the moment. Now, let's just talk a little bit more about Hero so we can analyze some of the flows that are taking place. I'm going to turn off, this is our Hero chart. I'm going to make it grande, as big as we can make it. And then I'm going to turn off next expiration. So what are we looking at here in this chart? This purple candlestick line is Hero for the S&P equity basket. So the purple solid line is the S&P index, smart enough. The purple candlestick line is Hero. Now this is Hero for equities. What does that mean? Any stock that's in the S&P 500, we sum their trading delta or their hedging pressure, and we portray that on the screen. We can see over the course of the day is $2 billion. That's pretty good. How can you put that into context? The range over the last 50 days, minus $4 billion to positive $3 billion. So 2 at 1 o'clock, $2 billion is not bad. Now, what do we care about? What would be the most bullish thing we can see on this screen? You want to see longer dated flow come in. Why? Because I think when people are buying March options, June options, December of next year options, Pelosi comes in, starts pounding at the money options in whatever tech stock, right? That keeps hedging obligations on the books for dealers to the upside. And so there's continuous hedging flow to the upside. That's a lot better than people slamming zero DT options or this Friday's options where they're going to come in today, they're out tomorrow, and you don't want to sort of extrapolate that flow going forward, if that makes sense. So what we do is we look at next expiration. There's a big gap here, right? About $1 billion, a little over $1 billion. That looks pretty healthy for bulls in full disclosure. And this is coming from someone who still's got that little bit of a bearish. Now, what else
just got rejected. It's S&P just got rejected.
Orange is all expiration flow for calls. So this includes all expiration. Green is just zero DT or next expiration call. So this is a pretty healthy signal overall, saying that this isn't just, there's a decent next X call component here, but it is, in all honesty, here pretty decent. And then we also see put selling. The 430 million of dark blue is all expiration put flow, and if it's positive, that means people are selling puts, right? Which is positive delta flow in this indicator. So this doesn't look too bad. If you are a bull, you have to be pretty happy about that. Now, what about the index flow? It's very quiet. What we actually see since we hit 1600, this is the flow for SPX, SPY, and ESE minis. It's negative and it's dropping pretty sharply here, as you can see. And there's a small spread between 0 DT, so stuff that expires today, and then all expiration flow. Actually, $2 billion is actually a little bit more than a small spread. So this looks objectively negative relative to what is relatively positive single stock stuff. Let's just break this down a little bit further. You see it's a lot of longer dated call selling. That is the dominant flow today. Now, this is suggesting that as the market rallies, people are selling calls into that rally, both in the 0 DT space, which is green. We saw that on Trace. Also, a little bit of non-0 DT call selling as well. But what is the dynamic? And let's just look at the S&P index. What is the dynamic that we've been seeing every time the market seems to rally into the 7,000 area? We see the rallies just get sort of stuffed. We saw a lot of positive gamma in and around the 7,000 strike. And so what we took away from this in previous, we talked about Oliver last night on his show, there was a lot of people stepping up, not in just the 0 DT space, but also longer dated options being sold at that 7K strike. Seeing calls being sold is less bearish than puts being bought. Why? Because if you sell calls and the market goes down, those calls go to 0 in value, right? And then there's no more hedging flows related to those. Whereas people are slamming into, 1 month 25 delta puts. When the market goes down, the delta of those puts pick up, the vol spikes and the vega of those puts is more impactful, and that's where you start to really get this negative downside. So even though that hero indicator reading is pretty gross, it is call selling, which is a one sort of step less bearish, right?
Low tick alert minus 800.
Low tick alert.
I put the earnings quadrant on my dashboard. You can edit it. You can edit your own dashboard here and add the earnings quadrant on orgostockgamma.com, free tools, and you can check out not only a hero indicator for Tesla, but also our earnings dashboard. And there's also a free gamma tool if you want to check that out. I'm blocking everybody over here, huh? I would say I can move it there, Lisa. Do this. There you go.
Can we make it back?
I want to move this.
6890. Can we make it back to 6890?
Okay, so I promised a couple things here. I promised some discussions on OPEX impacts, which I really want to focus on. Then we're going to take a look at Flow Patrol. I'll show you. Get that report for free. You can also go to SpotGamma.com/OPEX, and we have some OPEX data for you. And so we can check that out. Now, those of you who are into our content, you may have seen our video on excess returns. Jack and I do a great OPEX video every month. And that one's got like 14,000 views, which for us nerds in the option space, that's pretty good. It's not Kardashian. It's Kardashian of the options finance subsector, maybe. So let's talk about vols. One of the things that is an important read here as to the veracity of a rally or the stability of a rally is what is the volatility space doing? And what we saw over the last few days was there was a lift in skew in the option space, which told us that there was some put demand. People were buying puts. And so that was a sign of possible stress if the market dropped, right? Now, I want to look at how vol has changed. And the easiest way to do that here is to look at our fixed strike grid. Now, this looks a little complicated. Strikes across the x-axis, expirations on the y, and this says, okay, right now, the at the money, which is 6,900, and let's just look about a month out, so the 320 expiration. The implied vol for that option is minus 800. Easy enough to understand, right? Okay, so how did that change?
All right, we're starting to move here.
Over day. And so let me scroll back up here.
Hedge flows continue to move lower.
At the monies.
Extreme low.
All right, what do we see here? The 6,900 strike from last night's close to today. S&P's up about 1%. We've lost about a 1 vol point for stuff for next week. That's not bad in terms of change. And if you look out a little bit farther, we've lost about a half a vol point, a little less than a half a vol point. So the way that I read this is a pretty decent volatility change. If these numbers were flat,
Extreme low tick,
or they were up, then that would be a concern, right? That what is happening here is more of a flow related thing and not so much volatility is kind of contracting, right? And so there is some decent vol contraction in here. If we slide down a little bit and we look at, here's the March, roughly 25 delta option. You can see that's down about a third of a vol point. So, you know, this is a pretty decent volatility decline. So you take that volatility decline, positive equity flows. Yeah, there's some S&P call selling. You know, it's hard to want to fight that position as a decent rally. If you're going to kind of throw shade on that idea, the concerns are, number one here, you can see there's big deltas dropping now. That has the hero indicators dropped really quite strongly, and this is all negative gamma. So this is a concern that under 6,900, we still have that soft underbelly. If we can close above 6,900 and then we can show that stability with vol coming in, et cetera, then I think you can really maintain longs above 6,900. But per our founders note right now, we really want to sort of tread lightly, and we break that down right here. We really want to tread lightly. So what does that mean? I historically think the United States stock market goes up over time because of inflation and because everyone in the world trades the S&P 500 and because of whatever other passive dynamics you want to bring into the fold. And so you generally want to maintain equity exposure, right? That's been proven over time that that works because every dip in history has been bought. So if you are constantly hedging because you don't want to lose a bunch of money on some random drop, you're going to have a big drag in your portfolio, right? Buying puts, for example. So if you hedge around only when we're under these pivots, or you reduce your exposure when we're under the pivot level, you can reduce the amount of time that you are owning that downside protection. And we have some data that says that when we break these pivots or these vol triggers, we do get an onset of volatility spiking, right? So that can be an interesting time to say, okay, I'm going to add some put protection because we broke the pivot, then maybe try to monetize those puts or something like that rather than trying to sell my equity exposure. As an example, and Vin's got a put fly in there. Put flies can be had for very cheap, and lately they haven't been paying off because the market just loves to mean revert, right? When they pay, when puts pay, it's like it feels good, right? Okay, so we've covered the trace data, we've covered the OPEX data. I just want to bring up one more time. I'll be remiss to not bring it up. Go to spotgam.com. You can get Flow Patrol. I know it's white on white. I got to change that color next time. But we just added this feature into our dashboard. The reports were being sent as PDFs, and you can download this. But what does this do? What Flow Patrol does is it looks at our positioning. And this is our buy-side proprietary positioning that we keep. I think we're the only group in existence outside of some of the investment banks that has this kind of data. And what we do is we process this data and say, okay, these are the big positions that are actually shifting for hedge funds and big retail entities, right? And so you can see there's a lot of VIX flow, for example. Yesterday, Tuesday, is the last day that the February options, the February VIX options could trade.
He's talking about Flow Patrol right now.
You see a bunch of flow related to VIX positions rolling and changing. Whereas oftentimes people find the most interesting, if we break it down by every sort of possible lens, is if you go into the unusual options table. We're actually going to work on expanding this a little bit, but this tells you, and I found some personally very interesting trades, and I suspect that you all might as well. I like to look for these stocks that have large directional, unusual buying flow, for example. So it's a little bit quiet here, but what you see here is, there's a put roll in WEN. This DJT is kind of interesting because it's the 10.5 puts. Someone bought 36,000 of those, and those are maybe a little bit tough to see. And then they sold, or there was a seller of about 17,000. So on net, you had about $4 million of buying premium versus 2 of selling premium. So that's kind of interesting. A put spread here open in Chewy. You have CVX, which has been obviously such a big, the energy sector is so hot right now. So you can come in here and find names that are interesting. Today's a little bit quieter in terms of the big, interesting names. And the other reason I want to bring this up is because you want to look at sectors and big names, obviously shifting on a daily basis. And so one of the signals I thought would be important in here is finding stocks that software stocks that are getting big hedge fund buying, for example. That sector in this current report is fairly quiet, but you can go back and look at the previous reports over the last week or two, and you can find the names that are getting big inflows, right? So you can find, okay, yes, CRM is down, for example, but maybe there's big hedge fund buyers. Because all of us here, we're generally retail traders, right? And so what we want to do is we want to find out where the smart money's buying. And so that is always a big dynamic to pay attention to. All right, I'll try to get rid of that caption and we'll go back to the chat. Yeah, unusual options is, yeah, government spending and government policy. FB says, does it not make sense to hedge before the vol explosion? The hope is that you catch it before the ball really kind of goes crazy, right? And so if you go back and you're a Spot Gamma member, you can do this. You can go to the index page, you go down to history, and you can get our most basic volatility.
Okay, New York Bangs are trying to hold on to the highs. NVIDIA less so.
And what you see here in gold is that vol trigger, and then in gray is the S&P 500. And why does this matter? Because like you can see what happened here just in February, early February, vol triggers at 69.35. We breached that level and we dropped pretty sharply, right? We dropped about 200 handles or 150 handles. So
hedge flows continue to move lower. Resistance overhead.
Put before we maybe break down, well, you're just going to be always carrying the put, right? So yes, you're going to pay up a little bit more to put the put on when it starts to break, but you can put on a put spread or a put fly if you wanted, right? And that lowers that carry cost, I think, quite a bit. You know, certainly don't want to buy puts when we're in the hole, right? That's something you always really want to avoid. The hole is always a relative term, but you can use things like IB rank or looking at put skews historically, those types of things to help navigating on that point. That's what's great about the scanner tool. So if you're like, hey, what does that actually look like right now to buy protection in something like the S&P? Well, look at this, right? The risk reversal rank, which is the price of a call versus a put, 1 month, 5 balls, is 7. So that's pretty low. What does that say? People hate calls right now, and they like on a relative basis puts. Now that relative basis thing is important because we've been showing you in a bunch of different ways on our platform right now that people are selling calls, right? They've been selling calls at that 7,000 level. So that call wing or that call skew is getting smushed, and that put wing is elevated, but that 7% I think is a little bit misleading in terms of how bearish it is. And then the overall IB rank is an 18. That's very low. It's not 0, but you know, if people were buying puts like hand over fist, and that's all this was, then you would think you would see that IB rank, you know, much higher. So what does this mean? Put spreads are fine. The implied volatility overall is not all that expensive. The soft spot actually maybe calls here. Qs is the same thing. And then we have this little handy trail. So if you want to track and see how this has changed over the last 5 days or 10 days, what's interesting about this is it's just been getting more sort of bearish on the spider side. So I think this this rally today into the 6900 level maybe caught some people slightly off guard. All right. Yeah, the unusual table looks pretty good. MP Singh, you want to look at that unusual options table. I think that's kind of the one that's more interesting. And on that point, we've been sort of fleshing out an updated version of the flow control.
Okay, looking for a bounce at the moment.
Unusual flows, because that's certainly what people really like. Actually unusual whales, I think I was going to call it. All right. I told you there's some cool VIX expiration data. Let's get into it. This is hot off the Spot Gamma presses. So if you look back, and what this shows you specifically is from 2018 to 2026, the modern options era. Options volumes just kind of exploded after 2020, really. So if you look back to like 2000 and 2020, it's like, why? The options volume is nowhere near the same. What does this show you? And this is kind of relevant to today a little bit. What does this show you? If VIX expiration falls first, this matters. What happens? VIX expiration or OPEX? So in this case, if you look, VIX expiration is before OPEX. In January was the opposite, VIX expiration after January options expiration. So you've heard of this referred to as the expiration window. There's actually data that supports that the window even matters. Yeah, JT, this is too hot to share with anybody. despite where you sit in the stock gamma ecosystem. All right. And the other thing that's interesting about this is that the bounce signal is stronger, which is, again, puts us today maybe at odds against me feeling like we would be a little bit weaker. What does this mean? When VIX expiration is first, that happens 23 times, you see the S&P decline, so 90 bips. And outside of that, after we rally, generally speaking, about 2%. It's a pretty strong rally on average, right? Whereas if OPEX is first, oftentimes you'll see a little bit of a rally at OPEX, and it's 50-50 that we flip after, right? If options expiration is first. So what does this mean? If VIX expiration is first, we tend to rally out of options expiration. If OPEX is first, we tend to rally from the time between OPEX and VIX X. Does that make sense? So if you think about it in January, we tend to rally here, right? OPEX, and then we generally will not continue after VIX expiration. So that's why this is sort of says between the event versus after last event. So right now, this window, OPEX, what the implication here is, if you go off this data, we should have a pretty substantial rally continue into next week. Whereas that is not such a strong signal if OPEX is first. And why is that? Because I think VIX expiration starts to upset or change the volatility positions. That is sort of the working theory. So the volatility of the trade is a little bit stronger. Now, what about options rallies? Is there any pullback? It's 50-50 when OPEX is first, and it's a slight difference, right, when VIX expiration. So when the market is going up, the OPEX seems to have a little bit less of a strong signal, if that makes sense in terms of price direction. So it's very strong in terms of dips. But look at the price action that we've had here. Market crashes into DC expiration, we rally. We crash into Jan OPEX, and then we rally. We're crashing into Feb OPEX. We seem to be rallying at the moment. So if you just sort of emotionally set aside your thoughts and feelings about dispersion and blah, 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 then this suggests that, we should continue with the upside. So I think it's really interesting data. Does the dip last? So 5 days after the last or the later of VIX X versus OPEX generally seems to be a pretty persistent bounce. And again, that syncs with this, right? The rally sort of continues for several days. Right? And then I think that this is probably the strongest signal, but it is the hardest one to monetize, particularly as a retail trader, right? And that's the change in realized vol. There is a real state change in vol. So what does this mean? When we have a high volatility regime, VIX is elevated and we go into OPEX, vol tends to sell off after, right? And vice versa. So what you end up getting is when vol comes in and is really quiet, like we're pinning, VIX is 10, we hit OPEX, VIX will spike, and vice versa. So that change in realized vol is a very clean signal. And so you can see the shift in implied vols here. Again, you enter in a high vol regime where VIX is first. Arguably, like this could be considered a relatively high vol regime, right? We tend to lose a decent amount of realized vol in that case. And again, if we're VIX is at 10, it tends to pop after, and those are actually pretty decent and solid stats. If you've ever watched the OPEX effect, we've covered very similar stats like this before. In fact, this is the change in realized vol. So if we're quiet into 5-day realized vol is quiet into expiration, it expands outside of expiration, right? It's that sort of binary flip or state change. While we're on this topic, what is the overall size of this options expiration? If you caught our OPEX effect video, we talked a lot about the open claw and the software Armageddon. One of the favorite images I've ever made in my life is right here. It's just chef's kiss to this one. But in terms of claw sizes, this was the mini claw. This is not a very big expiration overall. Quarterly expirations tend to be much bigger, as well as these JN periods. And so here are the deltas in the single stock space. You can see this is Feb. Here's March. So March is quite a bit bigger. So, smaller options expiration. You see the data is laid out pretty clearly that dips tend to get bought statistically. Realized vol tends to mean revert. two things do line up to suggest that this market bounce could have some legs. That takes us to the final. Thanks, Luke. I'm talking well. We're doing all right, man. The final discussion, the dispersion trade. If you've heard Spot Gamma talk at all, you know that talk a lot about this signal Core 1M as an incredible, I'm going to say it, incredible risk indicator. When this thing drops to the depths here, stocks tend to wobble. There tends to be a sell-off of a pretty sizable magnitude. Correlation tells us how in sync stocks are moving together. So when markets crash, equities all tend to get sold. So it doesn't matter what stock you own, it's going down. When correlation drops, it's usually a signal of excess bullishness. Why? Because people start to say, stocks are a safe place. What I need to do is outperform the S&P by going to buy Tesla or software names or memory names or whatever it may be, right? And that creates excess bullishness. And that shows up in the volatility space, and that's when correlation starts to shift. Now, the chart that got everyone hot and bothered was, there was a Michael Backnick chart, and he had put out a chart about the fact that the underlying stocks were moving a lot and the index wasn't shifting. Historically, when you get these levels of dispersion or movements in the underlying, S&P tends to be down a lot, right? A similar chart was put out by Charlie McGilligan at Nomura. This is his chart, which showed dispersion in a similar way. Didn't get the same amount of run that it did on Twitter. Just goes to show you fake stuff or stuff that's maybe a little more simpler and easy to digest, at least gets better looks. So note to Brent's self. But this dispersion chart shows us that dispersion, which is again the same metric, right? Stocks on average move 10%. This is 99th percentile over the past 30 years. What Charlie didn't follow up with here was the bear point for flames and things, saying the market's going to go down 30%. That's how you get the engagement. Should add some flames here. Anyways, so this is significant, right? The argument here was that the S&P at some point here needs to pay up, right? So index vol was being suppressed and hadn't synced with single stock vol. Now, was it the S&P's sort of mandate to have a drop to sync with single stocks? You could make the argument. Further, you can make the argument that, do zero DTE flows suppress some of that volatility? There's actually some data that suggests that. We had a record zero DTE last week. 70.5% of SPX was zero DTE, for example. This is the software stocks kind of crashing, but also sevens and everything else were pretty weak. Like there wasn't, I might even still argue there's not necessarily this obvious sector of, places to go to. I mentioned before that generally when correlation spikes, it also spikes, right? So why does that matter? Because in this case, what's happening is correlation is spiking, right? Or it did spike, but the VIX was on a relative basis, which is the green line here, much more kind of placid. It didn't really generate that VIX to 25 or 30, which arguably, maybe what it should have done given the correlation move. Now, correlation and dispersion, the metrics are a little bit different. In fact, if you look at DSPX, you can get the SIBO's dispersion metric. It doesn't have quite the same, biblical spike maybe that some of these other metrics have. But you can see it's a pretty significant pop there, right, in that metric. So why does all this matter? You have software stocks dropping, you have all these other names dropping, but we're not getting that index drop. So the argument would be either S&P has to drop or the single stock movement has to kind of come in, right? Resync to the downside. And based on today's price action, you got to kind of look at that second piece and say, okay, maybe it is the single stock sector that's going to warm up. I'm half in on the market rally right now. It's a hard one. We can't quite capture that 6,900 area, and so you have to worry about this soft underbelly, right? It's certainly kind of this concern, and because today's VIX expiration, we know that there's these flows shifting around, and so that's why this level is so critical to sort of recapture for the bulls, right? Because it infers that we should get some stability in there. So even though we kind of got up there, what happened? All these calls got sold, and it's like, so game's not quite over yet. We'll see in terms of that. But anyways, back to the point with the data there. Everything here suggested that S&P should have some type of volatility event, right? And so when we're looking at the OPEX stats, you go, well, the stats say bounce, but there's a lot of things that are still dislocated, and I'm not sure.
S&P trying to bounce at VWAP.
Side very quickly over the next coming days and weeks. So that is the concern, and I think the way that you read this ultimately is under 6,900, you want to be sort of neutralish and tread lightly, day trades and longs, that kind of thing. Over 6,900, I think you can more hold and maybe sleep at night a little bit better. I pause there because 6,900 has in full fairness.
Chick is
offered
coming in.
The best support, and that's been our risk off level or our pivot level. You can see it right here, right? We've had some pretty decent drawdowns from that level, even though they've been reverted. And we did break 6,800, and I thought that would really trigger this final slide to the 6,600s. We broke that on yesterday morning, right? And we survived. We kind of gave that little bounce back. So what do you weigh this all out as? Mean reversion is still strong in the market, without a doubt. OPEX flows imply statistically that we should rally out of this. And if we didn't have this sort of messy, disjointed market on the single stock versus index side of things, then I think it would be easier to believe that we could rally a little bit back here. And so ultimately, if we see some of these measures come down, single stock vol relative to index vol, if we see those normalize together a little bit, then I think that infers that things are a little more stable and a little bit structurally more sound. I guess is the argument that we try to make here. Yeah, and then we also need to pay homage to NVIDIA. I don't know that NVIDIA is as important as it once was.
All right, we're starting to pop here.
Stock obviously was only a few options expirations ago. There was like NVIDIA controlled all of our futures. Our future was determined by NVIDIA. Maybe some good earnings out of NVIDIA could obviously restoke the bid into Mag 7s, which has been pretty broken. I mean, if you look at the Mag 7 index, I see the mark indicators and whatever else. We arguably broke this level. This is just a Mag 7 ETF. I don't know exactly how it's weighted, but again, it's sort of like this edge of the abyss where you're like, this is either the spot where it's like the bounce I told you so, or it's going to be like the big sell-off that you knew was marked by the fact that we broke the trend line, right? So it's a very, very, very tricky spot. And again, that's why we're surfing this 6,900 level in the S&P at the moment. Yeah, Walmart reporting as well. Did they report already? They're going to report tomorrow morning. Yeah. Look how much that thing is up. You have this drawdown, and it's not bad. And what about the idea of VIX flush? Well, let's just put this into perspective, right? What is VIX 19? Is that fair value or not? Historically, the spread between the VIX and 1 month realized volatility is 3.5 to 4 points.
All right, puts.
So if you go
puts are bid at the moment.
SPX realized volatility, and we hover over where it is right now. What you'll see is that currently the green one there says we're at 14.2. So it's 14.2% realized vol in the S&P with 5 day at a 10. So the VIX at 19, that's a 5-point spread there, right? So yeah, you can lose 1 or 2 ball points, I think, pretty easy. Or the VIX could drop 1 or 2 points pretty easily here, and that should help the S&P buoy right up into that 7,000 level. And so I think that there will be a pretty good fight put up at that level for bulls. But the thing that you can't, I mean, this is very negative, right? You go from 0 now to -5 billion. -5 billion is a lot in terms of the deltas. So this is really strong selling. It was call selling before. It seems to continue being call selling. Maybe a little bit of put buy in the dark blue line now picking up. And let's see exactly what this is. Last week there was 5 billion in calls sold in the spiders. And here, if we look at this space, we see
Puts or bid, puts or bid.
coming up out of the hole here. That blue line going down, again, it adds convexity, which is always a concern. So this is not a great look at all for the market. You see here, right? This is just sort of linear downline, like a systematic call.
Big fade, Russell.
All day.
Big fade, Russell.
Or something like that, or percentage of volume more, right? In that spider space, just selling calls. But when you kind of sum all this up,
Tick alert minus
you
800.
say, okay, Brent, what's the total here? Minus 5 billion. Okay, the range is basically plus or minus 10 billion over the last 30 days, but this rate of change is really quite negative, and that's pulling the S&P down. And again, why is that a problem? Because it's all red down here. So this is the problem with that sub 6,900 area, is it's just transient. You bounce here and then suddenly pop back up, and you kind of have that whipsaw. You know, you want to watch for that. The way that you would detect that is if Hero starts to shift, and you would expect Hero to start to shift at one of the major levels. So what is one of the major levels right now? There's not a whole lot down below this level. So you would think maybe right here, right now, 68.80, because they're the last of these kind of relatively big strikes. And then under here is just very small positions, right? And so,
Okay, hedge flows.
Belly for sure. And this negative gamma persists all the way down the map, as you can see. So if you want to bet on this thing just sort of careening to zero at the moment, I'm not so sure about that. Again, it's just very tricky. You know, I usually have a pretty strong opinion on this stuff, and right now it's hard to have that feeling. I think a lot of this because this dislocation, this dispersion, just casts a dark shadow, so to speak, over the market dynamics. So we'll watch closely right here. If we were going to get a bounce to 68.80, we're right here right now at that level. You want to see Hero, which is this purple line spike. And if that starts to spike up, then that's going to give you that sort of affirmation that, okay, a little bit of selling here, we're going to feed back into 6,900. So that is the thing you want to watch for confirmation of the dip being bought, is just to watch that little spike. Now, why would the VIX expiration, be a moment of transition? Because a lot of positions are going to roll in the VIX space, right? So in theory, if you believe in sort of a max pain scenario, even encompasses the VIX, where VIX is going to move to where a lot of volatility positions are going to expire. That's kind of the pain area and vol, and then those positions roll off, right? Now they could be bets that vol is going to drop or bets that vol is going to spike, but whatever it is, it's sort of moves. So, in theory, then you're starting to release some of the boundaries of the market, right? Some of the things that have been binding or holding the market in place. And so the VIX expiration is tied to the volatility complex that maybe allows things to start to move a little bit more freely. So, I think that's why that marks that window. So you can see here. Now, the trick admittedly is you're saying, well, is this actually a bottom in the Hero indicator? And one little bounce here doesn't mean that it's over. One of the things I found is helpful is if you do have the spot gamma Hero, you can come in here and put in an EMA. And so what I like about the EMA cross situation is that you can put this on Hero itself. And then what it allows you to do is just sort of say, okay, when is Hero actually marking that it's in, buying back territory is sort of a head fake? Someone just quickly cover for some positions. You can use the EMA or the moving average on the Hero indicator itself as just a nice sort of unemotional way to say, okay, short-term flows have now picked up because the
Watch for a turn here in hedge flows.
Across the 20-minute moving average, for example. So that's a little tip to try. Matt Bass, I'm kind of with you, man. I feel like I like volatility, big volatility. It's just easier for me to trade. I just like that better. Scalping futures back and forth. It's just painful. Just bring the VIX to 80.
VIX 80 shit.
All right, we are now reaching the top of the order. I appreciate there's a lot of people that joined us today, so I really appreciate that. Appreciate y'all taking the time. I hope that this stuff was helpful. It's 15 or 30-minute Hero kind of same as an EMA. The problem with that steel toaster is a good question because you can set a rolling window here. What the rolling window is doing is, let me think about this. I don't think it is. My mind has just been bent in a circle on that one. The argument that I would make is that the hero indicator is going to remove positions out. So I guess it's somewhat similar. Now, the problem that I have with watching just the rolling window is a lot of times people will say, oh, hero bounced, but all that happened is these negative trades rolled out of the window. So it can be very confusing and or misleading. I've gotten emails before like, hero said it was up, and it turned out that I had the wrong thing, and I read it wrong, and I shorted the market. It's like, you should have had the rolling window on, dude. Should have had the rolling window on, my guy. Yeah, and the rolling window is sort of truncating that data, right? Calling out of me, right? Appreciate it. I like big ball, and I can't lie. There's a hat in there somewhere. Walter's saying the traced blue bars have dissipated compared to their AM position. So why is that?
Watch for more downside. Hedge flow still dropping.
What you see here is number one, gamma is highs for at the money options, right? So what does that mean? S&P moves away and we get closer to the end of the day. These strikes will naturally decay, right? That's one reason. The second one is, do the positions just get closed? And so both matter, but if you go to OI, you can see the positions are still there or not. So in this case, at the 69.20, the daily max is 2,700. We currently have 2,600, so there's still a big position there. US call strike 69.50. The daily high was 6,600. We just go look at 0DT only. What you see here is there's a lot of black bars, right? Or wicks, you would call them. So like the max there was 4,000. We currently only have 2,000, right, Walter? So that means that these positions are actually getting closed, right? Or monetized, and a big swath of them actually, as you can see here. So why did that gamma decrease? Why did the gamma by strike decrease? Because the positions got closed in this case. But again, if S&P moves away, the gamma is going to naturally reduce, right? Because the gamma goes towards zero, and the closer we get to the end of the day, that gamma concentrates. And if you're outside of the kind of concentration zone, or realistic price zone, strike zone, then that gamma is going to go down as well too. Yeah, and if you want single stock information or data, if you come in here and you go into Adobe, for example, you can come in and you get all the latest positions in terms of put and call impact, and then you can break this down by open interest as well. So are people buying and selling calls? You can tick back and see yesterday versus today, for example, and see how this changed. If you see negative bars on this chart, it means hedge funds were buying calls because dealers are now short them. So you want to see short calls if you want to see a big rally. In this case, there's a big put strike here. Someone owns a bunch of puts at the 200 level, which is really quite interesting. That's a fairly sizable position. That's a short call position. These put strikes, 250, 260, 270, and this one 220. Blue is puts. So this tells you that people sold puts, right? So hedge funds and retail are short puts in Adobe, really kind of from this 290 all the way down. Those are positive gamma positions, right? So if we go back to the gamma chart, you can see this, right? Positive gamma. There should be a cushion in this area for Adobe all over this really 250 level. If we lose 250, then you have a problem. But right now, if you're holding this stock at 260, I think it's okay. This suggests that ball should kind of come in. Now, an option trader, the ball coming in is a trade in of itself. If you're owning the stock, that doesn't necessarily scream bounce, but it does scream the stock is supported, and maybe that ball can come in a little bit. All right, that's going to wrap it up for me. If you are like Mr. Singh and you want to see how stocks are changing on a daily basis in terms of big flows, if you go to stockgamma.com/flow patrol, pop your email in there and you get 5 days of Flow Patrol for free. You'll also be on the list for when we do our open houses or launch our new trace data or anything else. We got a bunch of cool stuff coming up in there. And so I think Flow Patrol is really pretty neat and has a lot of incredible data. So that free resource for the next 5 days should be value added, which is what we try to do over here. Add that value. All right, that's going to wrap it up for me. I'm going to be back at 3 o'clock with my buddy Oliver. His show you can find on YouTube as well as Oliver Redding on X. So his show's been really gaining a lot of traction. So we're grateful that he has us on. So please check that out at 3 o'clock. Any questions, email us info@SpotGamma.com. Love to see you around Spot Gamma environment, community. Trying to think of the right term is for that. So SpotGamma.com, and you can sign up for Alpha, which gets every single tool we showed up here. We have a new membership tier called.
We're right at VWAP. Do we lose VWAP and roll over?
Calculator and get a whole bunch of other.
Do we roll over here? Or do we rally back up?
Pretty great. All right. That
CDIO.
All right, that was Brent over at Spot Gamma. All right, that's always good. Okay, hedge flows. What are we going to do here? We're going to rally. We need hedge flows to shut off on the sell side and turn back up. This is what dealers are doing. They're selling stock on the way down to hedge. Let's see if they turn it back up. Let's see how we can finish up the day. It's 2 o'clock on the East Coast. I'm your host, Cousin Benny, coming to you from theclosingprint.com. FOMC minutes, I guess, are out. Let's see what they have to say over here on Bloomberg. Bloomberg. Right now, it looks like the selling is dissipating. Okay, ExxonMobil still pushing a bit higher. ExxonMobil. Just out of the money options were cheap this morning, Exxon. It dipped down to the 20-day and bounced. So we'll see if we get any more follow through here. Futures looking for more upside. All right. See if we can get a bounce here. Looking for a bounce. Okay, what is Nokia doing? Nokia.
WNTR may res in 10 seconds.
Inflation being above 2%. And it's important to give a little bit of that background, Kelly, in the sense that you know that CPI came in very well behaved at a 2.4, 2.5%, but the Fed's preferred inflation indicator, which we're going to get on Friday, is going to be up near 3%. And that's part of the debate here. That's part of what I think is animating some of those who are on the more hawkish side.
All right, Steve, thank you. Steve Leisman. Not a huge reaction in the markets, but let's home in on that a little bit. And for that, we turn to Rick Santelli. 408 still.
Further rate cuts would be appropriate.
That could, when the new chair, you got to get through the confirmation.
If inflation were to decline, further rate cuts were appropriate. Several of the governor's participants would vote for that. Let's see what Rick has to say.
We had a horrible 20-year auction, so yields were elevated. They were elevated to the highs of the session. The minutes hit. Did they move off the highs of the session? No, they did not. And add in the dollar index. Dollar index has turbo thrusters today. It's having a big update. It's had several updates in a row. So let's put all the pieces of the puzzle together.
U.S. dollar up today.
What I'm really worried about, by the clumsy way they talked about it, that disinflation is slower than it should be. That's just a weird way to say that inflation isn't coming down fast enough. And I understand that. But it certainly seems, though, the way to the labor market versus what's going on with inflation away from their target, that's the one to concentrate on. And I think that's what the markets of the dollar index are telling us here. So ultimately, whether Steve is right or not, the CPI was cool. And as Richard Fisher said, we've made great progress, basically 5-year progress on year-over-year core at 2.5, but it's still not at 2%. So if Steve's right on Friday's better, more Fed-enjoyed number, the PCE, that'll make a big difference. But I'm going to go out on the limb there and say, I don't think it's going to be as lofty near 3% as some of these calculations are, which means the market could be caught offside on higher rates.
CDIO.
Wow. Rick, really appreciate it. Thank you very much. All right, so with that in mind, why don't we turn now to the markets and your money? All the major averages right now are in the green. The NASDAQ is outperforming, as it has not done this year, but it is today. But even with this, did you know that American stocks have been lagging global markets this year? And in fact, did you also know that American stocks are off to their weakest start to the year against other markets since 1995.
MAC.
That's according to new data out of Goldman Sachs and more. And your next guest says this is all part of a broader rotation out of tech and into the cyclicals. Welcome in one of our favorite people, Liz Ann Saunders, Chief Investment Strategist at Charles Schwab. Liz Ann, first off, before we get to this, why America is not doing as well as other countries, you heard Steve Leisman say defense rate hikes if inflation were to reignite. Is there a risk of inflation reigniting?
I wouldn't rule it out. You know, there's been some survey data out recently suggesting that there had been a delay by many companies in passing along tariff-related costs to the end consumer, in part because there was so much front-running of imports in the aftermath of the 90-day delay of reciprocal tariffs. They built inventory at a low-cost basis. They've been kind of trying to suss out the health of the economy. Now it looks like in certain categories, they'll attempt to pass those prices on, not just because of increased tariff costs, but also other base costs, labor costs. So I think there is a risk that inflation not necessarily reignites to a significant degree, but ticks up enough that we have to change the outlook for Fed policy. So seeing the minutes today and actually
Hedge flow still moving lower.
wasn't a huge surprise to us.
I'll tell you what, we're talking about the Atlanta GDP now stats.
S&P rolling over here.
Maybe, Kelly, some people say 6%, 7%. I'm kidding. Percent growth. We talk about an economy where prices aren't going down. I mean, you don't have to be everybody that's watching and listening right now knows this, and yet we're talking about rate cuts. And I just wonder, Liz Ann, when you do your models and you meet with your team and talk about all this, is there a chance where you say, you know what, I just don't see rate cuts because the economy is almost too good to merit a rate cut?
Yeah, well, certainly given what we know now, I don't think the backdrop merits rate cuts here. We have priced out, you know, the second rate cut much closer to the end of the year. But would it surprise me if the Fed didn't do anything this year? No, it wouldn't surprise me. Now, the fact that they're in data dependency mode means every incoming data point is likely to change expectations there. But I think, you know, dispersion is really a key tenet of what we're dealing with here with the Fed. There's louder voices expressing their views at a pretty wide range on the spectrum. You see it in the dots plot, you see it in the summary of economic projections, you see it in increasing number of dissents. And I think that backdrop is likely to persist regardless of what ultimately the decision is on short rates.
What do you make, then, of this rotation that we've seen in the markets, you know, where energy and materials, staples are leading the way this year?
So I think I've been thinking of AI as representing sort of three phases, the three C's of AI. The first C was the create phase, the obvious creation of large language models and the hyperscalers. Then we had the catalyze phase, which was really about the build out. And that's what started that shift in rotation into more traditional cyclicals, into industrial.
Can we regain that 6,900? We're above 6,800, so that's good. We're right at VWAP, so right in the middle of the day.
As investors try to figure out not just who the beneficiaries are, and that spans across industries and sectors and companies, but who is being disrupted. And we are in a sell first, do real research later kind of backdrop, but that's just the nature of the beast, given that there's a lot of money in the market right now with time horizons or attention spans measured in nanoseconds, basically.
All right, going back to our main topic, the world. The rest of the world doing better.
ExxonMobil continues to rally. ExxonMobil energy stocks. Nice reversal on ExxonMobil. Chevron. Valero. PSX. Okay. S&P 500, Groupon, I'm sorry, Global Payments, GPN, Global Payments, buyers at the low of the day, turning back up. Cadence Design, gapping up today, having a pretty decent day, Cadence Design.
represented in those indexes of the innovation part of the economy. You shift to more traditional cyclicals, you get some bump outside the U.S. because those economies are a bit more dominated by some of those more traditional cyclicals.
5, 15, 30, 60 are all on sell signals for now.
Energy materials hit here, or Korea and emerging markets externally. It's all this idea that kind of the physical stuff, Lizanne, is what. And would you tell people to
S&P looking heavy at this point.
is and still remains? You can go there, or do you pivot that and beating down software names?
Well, I still say you want to be diversified. I think this rapid fire rotation that's happening in churn under the surface is likely to persist, and I think it's a really, really tricky environment to try to sort of pick either the next shiny new object or the next dull new object. I think, I've been saying that the momentum trade is actual rotation, and they can happen literally on a dime, and that's just the nature of the kind of money and the power of retail traders in this market. So I think you want to be diversified.
Hedge flow, they're still selling. They're still selling
Linear, and that it just continues week after week, month
into
after month.
weakness.
But yeah, I think in general, the broadening out trade, that cyclical bias does have legs.
Druckenmiller in Brazil, Tepper in South Korea, so Lizanne, thanks very much. Appreciate it. Thanks for your time today.
Good to see you both.
Lizanne
Thank you.
Saunders. With AI bubble fears and disruption risks lingering in the markets, what names did the hedge fund managers buy and sell last quarter? I double teased it. We'll have more in the latest 13F filings next.
We don't buy it because of the theme of AI and data center buildouts, but whoever wins the race for AI, it's anyone's guess. I think we kind of know right now.
I think Apple.
But all along,
I think Apple wins.
Providers of engineering and construction services. So, Jacobs Solutions has a kind of a big runway for building out manufacturing onshore.
All right, the New York Fang's hanging in there. Had a hammer yesterday, basically. Hammer yesterday, follow through. So we catching a bid in the New York Fang components. Futures are currently pulling back, but starting to catch a bid. This is good. Reversal yesterday. Everything was oversold. RSI is turning still below 50. Got a good shot at this turning back up. Continuing.
Understood. Overall, do you think there's a real wild card with the Iran story? For example, we're seeing oil up about 4.5% today. How worried are you about escalation in geopolitical events?
Yeah, it's a good question. I mean, there's so much happening just in the last 24 hours. The implications for oil are there. I mean, it's different this time just because the U.S. is such a large producer of oil. So, I think people are not as much on the edge of their seats, but it matters what's going on over there. I think that when I look out a week or a month, there are implications one way or the other, without a doubt. It introduces volatility and the risk of the unknown. When I look out even just a year or two, I don't think it ultimately matters that much. If anything, it's a net positive.
Close out, who are going to be the new winners? And I love that you went there because, Mike, it feels like the last.
Okay, we're dropping off a bit more. S&P testing that low a little while ago.
Yeah, I think a lot of people also made the other side of the call, which is to kind of upgrade small caps or the equal weighted S&P. We didn't do that. We have everything right.
MACD is still dropping.
AGIG. It's that the rest of the market's earnings are going to improve, and that's what usually drives relative performance. So it's really the spread between sort of the Mag 7 or large cap growth stock earnings growth and the other 493 stocks or the other equal weighted index, whatever you want to call it, and that spread is narrowing now. And so the areas that we have been recommending is based on where that earnings growth is accelerating the most. That would be things like consumer goods. Or financial, industrial segments.
Futures still on a sell signal, 5, 15, 30, and 60. Tick cumulative is red.
For the rest of this year, and that's really the story. It's not an anti-tech or anti-large cap growth call. It's more about support on all these parts of the economy and the market that have been under earning because of this rolling recession.
So is it fair, Mike, to say that you like the equal weighted version of the S&P 500 more than the main index?
Absolutely. That was one of our lead calls in the November outlook. And that has worked so far. So knock on wood, hopefully that continues.
RSP, last 3-4 trading days, we've had buyers at the low pushing this up. RSP, the equal weight S&P 500.
Increasing and consumer spending holding up. That's a much better environment for the average company.
Hey, Mike, two things I just real quickly I'm curious about. Do you think the White House is still a risk to financial markets, or with midterms looming, do you think that the president and his team are going to be very careful about unsettling things in the financial markets? Many have said he certainly keeps an eye on it. Maybe that's the checks and balances on the White House. And second,
This is where we bounced a couple of minutes ago.
Indeed, he does become Fed chair. Will he be an independent Fed?
Yeah, no, I think, look, I think that this administration, and the president, specifically, has shown that, he's gonna kind of operate at his speed. And so I don't anticipate that we're gonna see, for example, this administration kind of, lose momentum in what they're trying to achieve, which means more of the same, quite frankly.
WNTR may resume in less than a minute.
And that creates, periods of volatility, uncertainty, whatever you want to call it. But I think the mission, what they're trying to accomplish is now crystal clear. They're trying to rebalance.
S&P, seeing if they're going to hold in this area, will start to turn back up, or we're going to lose this low right here. A little short covering. Not a lot of volume yet. MACD still pointing lower.
As far as I can tell, the Fed independence has been sort of fading for the better part of 20 years, really since the financial crisis. And when I say independent, I don't mean they're under the thumb of the White House. I mean
Exxon turning back down.
To play ball in terms of their role to
WNTR may rise in 10 seconds.
Okay, we saw that after the financial crisis. We saw that in 2012.
Low tick alert minus 800.
All right, low tick alert.
Stress in 2023. So the Fed is obligated to, help financial markets operate. It's their third mandate. They even call it that. So
All right, we continue to show weakness at the moment.
independence has been challenged for the better part of 2 decades, and I think that's going to continue. I think the Fed and Treasury are going to work closer together.
Okay.
Similar to the post, 2000 World War II period, and that's a good thing because that means they're going to figure it out.
All right. Well, we all want you back here. So
Mike Wilson, haven't seen him in a long time.
Chief U.S. Equity Strategist, Chief Investment Officer over at Morgan Stanley, of course, for Alex Simon.
Our experience with AI matters. So does our insight across industry.
Also, with software exposure, because that will be
Okay, we're trying to bounce right here. We'll see if shorts cover or if we move lower.
so we'll see what happens with that one because of course that exposure could be painful. But these give us a window, but it's never actually up to date. You want to know what they're doing right now.
Is there a clear definition of parsing? Because Kelly said that you were parsing, and I thought I could see you across the room. There's Pippa. She's parsing. Like, is that like where you're like?
Yeah, right. It's me. It's all these
What
papers.
what is
going
parsing?
through. These are.
Maybe she asked Gemini. I'm kidding.
Like, there's a lot of parsing.
I'm Rithika Shah, Brianna, everyone on the desk. Not just Pippa parsing. Everyone.
Yeah, there's so much parsing.
That's what you do with a bunch of papers. Peter Piper. Pippa, thanks.
Pippa Stevens parsed a pack of.
I'll take it.
Coming up, Mark Zuckerberg taking the stand, testifying in a landmark social media trial. What did he say? Find out next.
All right, assume more bear flags, or we're looking pretty weak at the moment. Hedge flows continue. They're trying to turn here ever so slightly. Probably the lows for now, it looks like. Let's see if we get any kind of bounce out of this. Looking for a bounce. Okay. Kimberly Clark. ExxonMobil. All right, we're starting to bounce a little bit. All right, some shorts will cover now. Puts will lose some of their premium really quickly. Just dropped from 4 to 2 on some of these options I'm watching. Many are looking for a bounce back towards 6,900. Brent was talking about the possibility of a bounce. Let's see how far this short covering will take us.
$170 million if it were to go to zero would be the max loss. So, as I said, too, these are all opening trades. I always try to find opening trades here where the volume of the trade exceeds the open interest for that particular option here. So these are all new positions as far as I can tell. Expected move about 9.3% during this time horizon. The break even 49.66 is about 16% almost to the downside here. So this trade would need a much bigger than expected move to go awry here. As it stands, it would the max profit area is pretty much completely within that expected move area there that we can see on our screen. So another one where this was a significant portion of the day's volume here. This one was about 66% of the total volume in this symbol here. The sizzle, the activity relative to the 5-day average, 6.4. So once again,
all right, we're starting to get a little rally here. Watch for a rally back.
In a name that typically is a bit more quiet.
Yeah, and I'm looking, about the analysts, what they're saying here, and it's mostly, mostly overweights and buys. I see a few that lowered their targets, but a mixed bag. Like Stevens has a target here of $71. That's above the $58 where we are now, but Roth has $57 and a neutral rating, which is, basically exactly where we are now. So there is a bit of a mixed bag when it comes here to the analyst activity. Let's talk about Charles River Labs.
Right. Massachusetts-based company. This one is kind of interesting here. Drug discovery, research.
Hedge flows turning.
But one of the main things they do.
If we start to see this hedge flow line turn up, that'll tell you that they're buying equities to hedge.
Interesting, more unusual field of business here for this particular company. You can see our chart. They had a nice swing to the upside. Now they've pulled back to a supportive area near, kind of 140.
Still could be a bear flag, so be careful. Still could be a bear flag here. Holding this low. MACD's trying to cross over. 6,900.
So this trade was interesting. This is an unusually
6,900 is right there.
Opening trades again, plus 1,022, December 18th, 165, 230 call vertical, and it's also paired with the same quantity, the same expiration of the 140 strike.
6,900s are bid $1.50.
37 cent net kind of debit here. So the max loss here, the debit paid 37,814 seems very small compared to what we typically talk about in this segment here, but it kind of hides the potential of this trade here. The reason that the debit is so inexpensive is that they sold puts that were pretty close to being the current price level here, so they were able to defray a great deal of the cost of the spread here. So even though the debit paid up front is not that large, the max profit is $6.6 million.
No follow through yet?
To reach that short call strike of 230 there. So an interesting setup to be sure. Break even 165.37, 7.4.
MACD's trying to turn.
Versus our expected move of over 35%. So well within that boundary here. Meanwhile, keep in mind too, if this trade starts to get too far to the downside, we have that flat cushion area between 140 to 165 where the loss is only that debit paid. But if we start moving below 140, the losses would accumulate quite rapidly here, about 9.1% to the downside. A move only down to 130 would be $1 million loss for this particular trade. So this one again was the greatest proportion of the day's volume. This was about 85% or so of the day's volume in this name here. The sizzle came in around 1.4 so far.
So what's interesting here, and I thank you for that, this stock really, as you noted, has been selling off. It's down 30% just in 1 month. And I did see JP Morgan did cut the price target there to 165 from 190 with a neutral rating, but did have a double beat in the last quarter and a new CFO. So a lot going on there with Charles River. Thank you. Rick Ducat, great to see you. Thank you for Options Corner, Rick. Really appreciate it. Coming up, ready to talk investor sentiment and what money market flows really mean for the overall market and your portfolio. We'll be right back.
All right, they're running up. Do 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 do.
Kick off the morning with the data.
What am I gonna do here?
Moving markets. Morning trade live breaks down the macro moves driving the
All right, VWAP overhead. Hedge flows. Looked like they were going to could turn back down again.
Morning trade live where the markets meet the macro weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest.
Okay, we're not seeing any follow through at the moment.
Head over to schwab.com/coaching and start learning today.
Okay, looks like the Bears still have it. Tough one. Tough one.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
MSTZ.
Welcome back to the watch list. It's time for a market update. We've gone in our Fed minutes and lots of
Some selling volume here. MACD's trying to turn up.
Our folks taking a look at what the Federal Open Market Committee has said once again. Your thoughts?
Hello, Nicole. You know, this Fed minutes really highlighted a couple things, and then I'll tell you why it was the good news and the bad news. The good news is, or I'd say the bad news is that the Fed is split on which way they should go with rates. Some were more worried about the labor market, some were more worried about inflation. It looks like they were really leaning mostly towards holding.
S&P going to test the low again.
Now, here's the good news for the overall market. Since this Fed meeting, we've had an unemployment rate go down to 4.3% and a year-over-year headline inflation go to 2.4%. So the good news is there's now progress being made in both of those. Remember, the FOMC has two mandates: full employment, which you can make a case 4.3% is full employment.
S&P
Lower or 2%.
6870 is the 20 EMA.
The fight against inflation, and they're making good progress. I think Friday's PCE data will be key on that. But I think the only thing it really drove home was that the Fed is really split on where to go, the dovish and the hawkish camp. I looked, the S&P was up about 0.65 when the number came out.
All right, testing this low again. This is the third time we're here. Volume's picking up.
Okay, all right, good point. How about what
All right, we're making new lows now.
some of their earnings? I mean, we're still going. I know Walmart's tomorrow, but more this afternoon and the rest this week.
All right, making new lows.
I think Carvana has a chance to make a really big move. Remember, they put up big numbers, but there's some controversy around. Remember, a couple of the houses have put out reports on how their accounting practices and how they make so much money per car. So I think there's last time I looked, it was over a $50.
All right, we just took out some stops down here below. Let's see if we move lower. MACD's turned back down. A lot of people are looking for a rejection here at the 50-day. 21-day is just above that. All-time highs.
We'll see, if
All right, so we'll watch for that. And then tomorrow, Walmart, Klarna, Dropbox, Etsy, Deer, and then
Hedge flows still pointing lower. Okay, hedge flows are still pointing lower.
thank you. We'll have all of that here for you on Schwab Network. Appreciate it, Kevin. Let's welcome in Eric Pan, President and CEO of Investment Company Institute, to talk more about the market's big picture. Some of your thoughts. I mean, we're just mentioning a name like Walmart, which has been hovering around all-time highs and has a $1 trillion market cap. I mean, there are some parts of this
ExxonMobil, a lot of stocks pulling back from the highs of the day.
how to feel about this market going forward.
Apple, Amazon had a good run up this morning. Google, everything's pulling back. Nvidia's making a new low in the evening session. Chips look pretty strong this morning. A little profit taking end of day, last couple hours, hour and a half to go. Chips, SMH. Okay, it's hanging in there. SMH is hanging in there. XLK, Tech. XLK. That bounced. XSW, software. IGV, software. Holding. Basing.
So I think what's important is there's still a lot of money sitting on the sidelines, right? If you just look at retail investors, we see over
Bitcoin's been fading most of the day.
and so that's money where people have it ready to go. They could put it back into the market. They could keep it out.
BITX. Bitcoin been fading most of the day. Okay, that's not looking that great. We're hoping for upside.
If we see pricing behaviors adjust and recovery much stronger, we can sustain higher interest rates.
All right, S&P is trying to hold this level. There's some stops down here, most likely. MACD's gone flat.
Rebalancing is diversification, keeping in domestic equities and international equities.
Futures testing a low. Futures testing a low here. Momentum is becoming more bearish. Intraday.
Looking very carefully at their portfolio, taking gains where they have gains.
Low tick alert -800.
More low ticks. All right, tick is turned red on the 60-minute.
So I think actually American investors are actually well equipped to handle the current marketplace.
And so we see the money market funds with all this money in there. At some point, does the money come out and go to certain sectors? If so, which ones?
So I think, so first, you're absolutely right. This is money that can go back in. I think I'm never one to second guess what the American investor is going to do. And I think a lot of the, whether or not there's too much investment in AI, not enough investment in AI, I think what you're going to see are American investors being very careful, very cautious, looking for value, being ready to move their money around as they see fit. So I'm not going to predict where they're going to
Extreme low tick alert.
Extreme low tick.
Something that we all can share on.
SBIT.
Let's talk about the human element and how people are feeling, the health of the consumer, the scent.
Tell me about your feelings, Nicole. How do you feel? Okay, S&P dropping off here. Okay, we got rejected at the 50-day, basically. Nice bounce, but rejected at the 50-day.
Residential tax credit ended the back end of last year, which was one of the biggest stimulus or levers for the cash and loan market, which constituted over 7.
And I'm sorry to compress this all into such a kind of, whatever. Could you rank kind of your top 3 or top 5 in the space right now?
Totally. Let's do it. So, Generac, number 1. Number 2, I like Fix Power for not only is it going to benefit from, its strong market positioning in the U.S. market today, but it's also growing from higher growth markets, which it's expanding into today, like the South in Saudi, for example, and also non-solar growth. So they are expanding into other verticals.
Okay, looks like we're going to move lower.
For example, power generation, and they're basically offering the whole vertical suite, right, where you kind of have efficiency gains and so forth. So it's becoming a broader power story, hence next bracket to next power.
So Generac next power, if you had to pick a bronze medalist, who would it be?
Clearway.
Generac. Clearway is my third.
You have Generac as number one.
Generac's number one.
Generac gets the gold, next power gets the silver, and maybe Clearway gets
number
the
3.
bronze.
That's it.
All right.
And on Generac, I can go into that in a quick. I think it's two stories. On the first, you've got the structural tailwind. We're talking about outages that are becoming more frequent.
Yeah.
More often, you've got a grid that's
MACD's bearish.
So as last year, admittedly, was a
At the moment, MACD's continuing lower.
The truth of the matter is we've got an aging population. We're getting, more hurricanes that are frequent.
MSTZ.
The whole standby generator market, which is the core business.
Yeah, and it was fascinating to hear them say, we also do generators for data centers. They're $1.5 million each. A data center might use 100 of them, and they're diesel powered on top of it. It was just crazy. It's a whole other story. Dimple, thank you so much for joining us today. Hope to bring you back soon. Dimple, go side with Bank of America.
All right, so staying on energy, if you live in California, you got to hear this next story because you pay more for gasoline than almost any other state.
All right, so we pretty much have a shooting star now. We moved above the 50-day, pulling back. Shooting star for now on the S&P.
California also has a special blend of gasoline the state uses. But part of that gap is this growing story. California is literally running out of gas and is buying more and more gasoline from out of state and in some cases out of the country. In fact, more and more California gasoline is coming from the Bahamas. Gasoline is refined and shipped from Texas and Louisiana to the Bahamas and then sold back to California. Hard to believe. And it might even get worse from here because one of the state's few remaining refineries shut down last year, and another one, Valero's big refinery kind of near San Francisco, is also now in the process of permanently closing, which combined leaves a supply gap of nearly 400,000.
Another bear flag.
So, what might happen to gas prices in a state with more gas-powered cars than any other
All right, can we get a rally? Can we get a rally? Let's see what the hedge flows continue to drop off. Starting to turn up. A lot of support right in this area. 68.75, 68.75.
California rules and regulations today, whereas you mentioned the Phil 66 refinery in Southern California closing last August. Now Valero in Benicia, California, as you mentioned, that's outside the Bay Area, slated to shut down. And that's going to leave a massive hole, a 20% drop in California's gasoline output. To your point, it's going to have to flow from everywhere else to make ends meet. Now, the interesting thing
Gave back quite a bit of gains. We're currently trading 68.70. And starting to bounce. Can we get a rally now? People take profits.
There's still profit in that because California today, Northern California gasoline is selling for the equivalent of $111 a barrel. So that tells you that route, which takes a couple of weeks through the Panama Canal, which is not cheap, is now an option because of what you mentioned. California's jump and soaring gas prices make that possible.
And they have to do it in part because this old Jones Act shipping law with U.S. to U.S. shipping. We won't go into it. We'll have a shipping analyst on to talk more about that, Patrick. But I can tell you this much as I have reported. This out there anyways. There are, and you know this, there are going to be refineries that are going to try to build pipelines or are building pipelines from Houston.
Still looks like another bear flag, so be careful.
California's going to need that gasoline. I mean, again, not taking on my former beloved home state, but they screwed up. I mean, and why can't refineries operate there in a way that is as safe as they can be? Instead, they're shutting down. And the state, which is already in a gas crunch, is going to have more of a gas crunch because they messed up their car mix. They've got more electric cars than anybody else, but they don't have enough.
Yeah, I know clearly. I mean, to your point, the rules and regulatory environment, the special blends of gasoline, the cap and trade program that they have, it basically taught refiners, hey, this is a very...
Looks like a bear flag, smells like a bear flag.
Elsewhere, you've seen refinery expansions in areas like Texas and expansions that other states have allowed to move forward that are going to be coming to California's aid. To your point, 3 different potential pipelines now have looked to close.
All right, so much for that. We just continue this trend lower at the moment.
Bring some of that gasoline from the mid-continent and from Texas refineries all the way out to the west and running through Nevada and places like Arizona. Those 2 states, by the way, begging for more gasoline. They may finally get it because of California's onerous rules and regulations.
It's amazing to think that we're going to build. We're talking about it's 2026. Talking about building gasoline pipelines to go from Houston or near St. Louis across the desert so that California can have more gasoline. But it's exactly where we are. Patrick, do you see gas prices just going up from here in California?
Without a doubt. I mean, this is the calm before the storm. California's already at $4.50, Brian. I think we'll probably get to $5 a gallon. And any spikes now with the loss of this refining capacity, any unexpected outages that are going to happen in the next 3 months as normal maintenance is ongoing are likely to spike prices even more dramatically. Keep in mind, it's years before those pipelines could be built and operational. So for now, California's reliance on imports is going
Tesla backing off. Everything backed off on this pullback.
It's shocking, by the way. And California's suing big oil over climate-related disasters. The whole thing is... some point it's going to come to a head, but not today. Patrick DeHaan of Gas Buddy. Patrick, always appreciate your time. Thank you very much.
Thanks, Brian.
Let's get over to Steve Kovac now for the CNBC News Update. Hi, Steve.
Hey there, Kelly. The director of the National Institutes of Health will take on another big role. The New York Times reporting Jay Bhattacharya will become the director of the Centers for Disease Control and Prevention while continuing to run the NIH.
All right, tonight we have Oxy, eBay, DoorDash, Carvana. Carvana, they're looking at 13%. DoorDash, they're looking at 10%. eBay, 8%. Oxy, only 3.5%. All the New York FANGs pull back from the high of the day. Profit taking. People are quick to take profits.
And the British Broadcasting Corporation, or BBC, is asking a judge to dismiss President Trump's $10 billion lawsuit. The public broadcaster argued in court filing today the president failed to show he was defamed by its documentary broadcast that spliced together parts of a speech he gave on January 6, 2021. Brian, Kelly, back over to you.
All right, Steve, thank you very much. All right, there is a new status symbol for the ultra-wealthy, and it's not just watching Power Lunch, nor is it parked in your driveway or hanging in your closet. What it is next.
These little bounces, don't trust them. Still looks pretty weak. We're in a downtrend. Bear flags expected. MACD's trying to turn.
SNSE.
All right. If this gets something going, most I would expect is maybe this pivot right here, this pivot, a retracement back to that pivot, or VWAP, which is pretty close to the same spot if we get a follow through here. For now, we've got supply overhead at 6,900 still. Okay, hedge flows are turning up. Looks like we might actually get something going now. Looks like we might get something going. We'll see how far they take this. Mm-hmm. See, so DoorDash has earnings. They're looking at 10%, trading 172. DoorDash, it's already at the lows. DoorDash. Oxy, eBay, Dash, 10%, 11%. Carvana, 13%. Let's see what Carvana looks like. Carvana's been off, right? That was off yesterday. Yeah.
For years, the ultimate status symbol was a fast car, maybe an expensive handbag, nice pair of shoes. But now the ultra wealthy are
Yeah, this could go either way. Carvana.
health and longevity. Robert Frank joins us now with the luxury wellness move. Robert,
They're flexing their quads and their biceps is what they're trying to do to the extent that the rich have them. But look, this is a huge change that we're seeing in the shift in spending by the wealthy
Carvana.
away from goods into wellness, health, and longevity. And this is now a $10 trillion business, and a lot of it is driven by the wealthy. So I spoke to the executive chairman of Equinox, Harvey Spivak. Equinox is really the one luxury brand that has emerged in the health and wellness space.
you're talking about the chain, the
fitness chain, which is now becoming hospitality. They're going to open 12 hotels in the next 7 or 8 years. The next of which will be in the Middle East. They now have a $40,000 a year membership that's all about wellness and longevity.
All right, hedge flows have turned up.
Person wait list for that program. And so
Looks like a bear flag, though.
Harvey Spivak, this is
Looks like a bear flag in a downtrend.
by wealthy consumers. Let's take a listen to what he said.
The number one thing in the experience economy, besides travel, that the consumer wants is how do I live a high-performance lifestyle? How do I live a health lifestyle? How do I focus on not just my lifespan, the words we've heard, health span, and for us, we talk about it's more about energy and vitality. So that consumer will do almost anything within reason to different degrees.
And so they've got this partnership with Function Health, which tracks 100 biomarkers from your blood test. So they've got that. They do IV drips. Just the IV drip business they have in their hotel in New York is a multi-million-dollar business.
Can I ask a crazy question?
Yeah.
Do we know if this stuff works? Like I know we know plastics are like you can enhance the way you look at it. And we all like a massage. I mean, you can enhance.
Stocks, a little bit of profit taking at the highs. Exxon and petroleum, those are bouncing a little bit. Let's see what Chevron looks like. Chevron bouncing back up. All right, so they're catching a bid. S&P continues this ramp lower. Looks this could be ugly by the end of the day if this keeps up. We had a reversal spinning top yesterday. We moved above the 50-day, almost got to the 21-day reversed. Now we've got more of a shooting star.
It makes me think there was this.
I'm 106 years old. You don't look this good without the health biomarkers.
All right, whatever.
For the simple reason that its total addressable market in the $110 billion just in 2026 alone. And so while this is a concern, some of the sell-off after the earnings report, I think when you're looking at, okay, is Palo Alto going to be in a position to beat more of the competition? I believe they are. Quite simply, I think the earnings report showed that their platformization strategy is really paying off, and that is that they're encouraging more of their customers and clients to move away from fragmented security tool implementations and onto really a unified AI-driven platform and ecosystem. And this is going to enable a more sticky and predictable revenue stream for them, as well as diversified ones. And so I think that is evidenced by the fact that they reported a net retention rate of 100%. So these are all indicators that Palo Alto is not in a situation where anybody needs to panic.
Yeah, and I know the CEO, we're seeing some strength going forward. I mean, there was no doubt that it wasn't all bad, but the stock is down about 7.5%. Mitch, some of your thoughts?
Yeah, happy to jump in. Good to see you too, and thank you, Nicole, for having me on. Yeah, Palo Alto, as we were talking about, is a very strong company, and they had decent performance. It wasn't that they had a bad quarter. They're being punished for that. I think they're just in the mix with everything else of where is AI shaking out? What's it doing to the security market, as well as what it's doing to their customers? Are they going to need the same number of people on the SOC that are managing these tools? Is the platformization strategy really going to come through? And of course, I think that the watchword for all these companies this year is execute, execute, execute. Whether it's the companies that they're buying, the COI for agent security in the browser, or it's the platformization of bringing these things together.
Having fun?
CISOs
You gonna drive away with that like that?
They have to hire more people for.
You gonna drive away like that?
To reduce costs, some of that through staff, but also to be able to handle not just AI and more volume, but change, the rapid change that's happening as more and more software becomes agent-based instead of traditional software. And it evolves much more quickly. So they're going to have to take on much more new products, new software, new services at a faster pace, and they've got to be able to adapt. And that's what the folks, people like the Palo Alto Networks really have to step up to.
Yeah, it was interesting, Mitch, because our last guest did not think that Palo Alto was a top feed.
All right, we're still testing the lows.
Mitch, just to come back to you for one quick moment, which ones are you?
Hedge flows turning back down.
Well, I do also like CrowdStrike. They're a very solid company, they're one of the stalwarts in the security industry, and folks who really do depend on that. But the reach is very broad and wide of who's performing in the security space. I mean, because you go back to traditional players like Microsoft for their security, and they use a lot of AI within their products, of course. But then you've got Cisco along with Splunk with their observability for network operations. I think that's a key part of this.
We continue to build more bear flags.
Observability native, which is really get into the depths of how software is being built today with AI and with agents. And we can't bolt on monitoring tools at the end, and that's where observability tools like that. Another one is Dynatrace. It's gotten into the observability market for agents, for software development. I think is really attractive. You don't think of them necessarily directly as a security company, but that's part of that fabric. That's the substrate that you're monitoring, not just applications or traffic. It's what's happening inside all those agents talking with each other.
Low tick alert -8.
More low ticks.
Frankly, we want to know that they're under control.
Yeah, Ron, what do you think? I mean, which ones would be your 1 and 2, perhaps?
Excellent question, and I agree with Mitch. I think when you're looking at the competitive landscape, two that stand out for me are Zscaler and Fortinet. And yes, they are key rivals of Palo Alto Networks. And I think what's distinct here is that both companies are investing in what are called cyber deception technologies. That is, for example, being able to set up a honeypot to trap the bad guys and know more about what's going on with your network, what is really a top priority security threat and what isn't. And I think this is one area that Palo Alto Networks can actually expand upon in order to strengthen its overall portfolio. In the meantime, both companies do have, I would say, a near-term differentiator against Palo Alto, in addition to the fact that they're both competing for cloud security business, firewall business, and so forth, and that all these companies are increasingly moving toward a platformization strategy. And I think for Palo Alto Networks, it's making inroads with it. However, there is a slight trade-off in that part of that strategy means having to offer more free trials or low-cost trials in order to get people to even look at their implementation.
S&P continues lower.
The Zscaler or CrowdStrike implementation, and that can impact margins, even though their revenue streams are expanding and diversifying.
Yeah, looking at the hack ETF, that's down about 9%. in 3 months.
All right, big reversal, shooting star on the daily.
Thank you so much for being with us here on Schwab Network on the watch list. I'm Nicole Petalides. So glad you're with me every day at 9 a.m. and 2 p.m. Keep it right here. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account,
All right, let's get a bounce now. Let's get a bounce.
one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
All right, let's take a look at the NASDAQ. Let's see. NASDAQ. Still 1.5 up volume on the Qs, 1.5 up on the SPY, 1.8 on the New York Stock Exchange, 1.5 up on the NASDAQ Composite, 3-1 up volume on the Diamonds, and 1.5 on IWM. Kind of interesting. IWM, let's see, IWM. Okay, we still got an hour to go. Let's see what they're doing here.
Some of the next on Bloomberg Business Week and Daily. We have a great program. We're actually starting off talking a little bit about what's going on with Mark Zuckerberg. He's being sharply questioned on the witness stand about whether he and other leaders at Meta Platforms are aware of the volume of children under age 13 who use Instagram. There's this trial happening in Los Angeles. Kurt Wagner's going to join us with the latest.
We're seeing stuff happen around the world when it comes to kids and social media and what kind of restrictions
All right, quick market alert coming straight out of the big league. Shares of MSG Sports surging because the company reportedly exploring a spinoff of the Knicks and the Rangers. No timeline, no final decision, may not happen. But
MSG.
investors like the news. MSG Sports.
MSG Networks.
Both valuations soaring. Rangers not doing
MSGS, right? MSGS. Big gap up today. RTX, RXT rather, RXT.
Enjoy, be safe, please. No off-road skiing. And thanks for watching Power Lunch, everybody. Closing bell starts right now.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Walker, live from Post 9 here at the New York Stock Exchange. This make or breakout begins with, well, what looked like a comeback for stocks, fading a little bit as we begin the final stretch. We'll discuss all of it, what it means for the future of this rally. We'll ask our experts, including fund strategist Tom Lee, in just a moment. He's sitting right here ready to go. We'll get to him momentarily. They're the majors. As I said, we had a pretty good day going. As you look at the scorecard, we're trying to hold on to it, though. It was a good day across the board. Most sectors were pretty good. Energy, consumer discretionary, technology continue to lead the way. We do have a little bit of weakness developing, though. The mega cap names were all higher. Apple, though, gone negative, so that's dragging the Dow down a bit. NVIDIA's positive 1 week from today. 1 week from today. That is the earnings report that could save it all, according to at least some reports on the street. Palo Alto, not so much today. It is down near 8%, sinking on its guidance. More broadly, though, some of the software names are getting a much-needed lift, and that has helped the overall picture. Cadence is as well. Its guidance was better than feared. Stock's up 7.5%. All of that takes us to our top of the tape. The resumption of risk on, and whether, in fact, it can last. Let's welcome in Tom Lee. He is Fund Strats Head of Research. As I said, right there at Post 9. It's good to see you. Great to see you. So you think we're going to 7,300 on the S&P in the near term? Yeah. So are we witnessing this slow turnaround for
for stocks to get back on track? What do you think?
Yeah, I think stocks took some hits. You know, partly was a software downturn, and then this rotation out of the Mag 7 armies into the bullet makers for AI, and a general sort of risk off as gold surged. But you know, the earnings have been delivered solidly. We've been getting good economic reports, and I think positioning has gotten risk off enough that we can sort of climb maybe in a labored way towards 7,300.
Hey, how about that? Do you think, we talked about this at halftime today, are we appreciating enough how strong earnings season has been?
I think the stocks haven't reflected that because we've had a huge beat, a large percentage of companies beating. It has shown up, I guess, in small caps, but to me,
I mean, you know what I mean? It's like, if you said we were going to do double-digit earnings growth, and that would be a key pillar of the narrative as to why stocks were going to continue to go higher, and then we had all this volatile chop, and you know, we're not sure now where we're going. You just said, well, if we're going to do that kind of earnings growth, we're going to be just fine.
Yeah. I mean, there's this old adage that it takes a whole lot of E to offset PE, meaning like, you're right, the earnings have been good, but things that have affected multiples are what's causing the market to come in. You know, AI, a new Fed chair, potential war. So you're right. I think the fundamental anchoring is actually good. So that means stocks eventually kind of re-anchor to that and we go higher.
So you say there are three key trades: rotation back to the Mag 7, the IGV bottoms, that's software, and crypto bottoms. But you're not suggesting that those three items have happened, are you?
Not yet, but we're maybe 90% of the way through that because I've seen some of the positioning data. So we know on the, like for instance, prime brokerage Goldman data, software owners.
S&P, nice little bounce off the low.
And then we know that the Mag 7 have gotten cheaper than the bullet makers, which has never happened in 10 years. They 3 PE points discount. And then of course on the crypto side,
All right, rallying off the low. Some shorts are most likely covering, although I don't know if it's enough for us to get back above the 50-day. It does look, you know, today wasn't a bad day. Disappointed to see so much selling at the highs. Makes things a little bit harder to read. So that looks like a little short covering rally off the low. People that were short here just closing their positions. Let's see what the hedge, what does this look like? Okay, gonna try it one more time.
All right, well, we'll have to wait. Bear with me a minute because I did mention at the top of the show today, discretionary names are strong. And one top technician says there are multiple breakouts underway, and that's hard to be negative against. Jonathan Krinsky, he joins us now at BTIG. You know, I saw your note earlier, and I wasn't sure we focused enough on these stories where you suggest restaurants continue to work higher, casinos are breaking a downtrend, airlines are taking flight, and all of those are bullish signals.
Hey Scott, yeah, I think you know when you have the narrative, I think the narrative of the consumer is much weaker than what the consumer stocks are reflecting, and you know it's definitely important to look at consumer discretionary. I think it's important to look at every sector on an equal weight basis over time, but discretionary.
All right, so we're continuing this trend lower. Just watching this little bounce that was shorts covering. We got to get above that trend line and move back above 68.75 in order to get some sort of follow through. Right now, it just looks like more downside is going to be tested. Yeah, it's 6 minutes after 3 p.m. on the East Coast. Okay.
And again, I think what's been lost on the market as this, you know, software downturn and mega cap tech downturn has been happening.
53 minutes to go.
Some of the rotation of some of the beneficiaries of that.
Can that be enough, the strength in these different consumer markets, to offset any sort of continued weakness within tech?
I think, you know, if the tech week, if
Chevron,
software is near the bottom, and we do think
Nokia, Exxon Mobil, back up towards the highs. Palantir today, Palantir. Tesla's at the low. Tesla, Palantir. Palantir. All right, big range in Palantir today. Long-legged doji, inverted long-legged doji, so it's closing in the lower half of the daily range for Palantir. Carvana has earnings tonight. Oh, anybody's guess what's going to go on with Carvana?
Look, I mean, we've been in a trading range from 6,800 to 7,000. So a breakup from 7,000 would, in the near term, target 7,200. So I don't think 7,300 is out of the question. Again, if you get, Mag 7 kind of resuming its uptrend, and if you get a bit of a bounce from software, I think that's definitely possible.
All right, interesting note.
Looking for a bounce. Looking for a higher low. Can we get a higher low?
From you, I mean, what do you make of that? The points that he makes about these different areas of.
Yeah, and discretionary bottoming kind of does make sense because consumer confidence is so low, and as you know, it's a contrarian indicator for confidence to be that bad. So discretionary should start working, but then you do start to get more things working, and it could help push the index higher.
All right, well, let's welcome in our panel to continue the conversation. CNBC contributor, Hightower Stephanie Link, New Edge Wealth's Cameron Dawson, Tom Lee, of course, as you see on your picture, is still with us. How about that, Steph? You continue to talk about the consumer, and now Jonathan Krinsky has some really good data, at least technical factors within the market, to suggest that we're about to see a pickup in a lot of areas.
Well, the consumer is extremely important to the economy. It's about 70% of GDP, and services piece, which has held up remarkably well, is 75% of consumption. So that's what we root for. And I always watch the labor market, and the labor market is cooled down, but it's still pretty good. There's one job available per one unemployed person in the country. That's not so bad. And weekly jobless claims on a 4-week average is about 227,000, so still pretty low. Of course, wages are still around 3-4%. Inflation has come down, but I think the real reason that the consumer is doing better, discretionary as a whole, is because interest rates are coming down. Look at the 10-year. It peaked last year at the 10-year at 4.6%. You're at 4.8% right now. Look at the 30-year mortgage rate. It peaked a year and a half ago, closer to 8, and it is now 6.17. It's the best number since 2022, and that is leading to a broadening out within discretionary to include not only services, but the home builders. Anything tied to housing has done really well. And then, of course, there are other special situations. Jonathan mentioned restaurants. I like Starbucks. McDonald's acts really well. Estee Lauder has made a major comeback from its 30% drop earlier this month. And then you can pick and choose a lot of different names. And I think that that's very, very healthy. And I also believe that while NVIDIA is important next week, if NVIDIA is good enough, Scott, it will drag through the pipeline better results for the power and the grid and the data center companies, and that is really healthy. And at the same time, if you can see the software sector stabilize and see this broadening out continue, I think it's pretty healthy for the overall market.
Yet, Cameron, the market feels a little dicey, doesn't it?
Yeah, well, not to rain on the consumer parade, but if there's one thing to push back on this optimism about consumer growth, is that if you look at the equal weight consumer discretionary, which, yes, it's about to break out on an absolute basis, but if you put it next to the consumer staples, you actually see that it's really underperformed to start the year. And this has been the most important ratio, we think, for the bull market over the course of the last 3 years. The fact that discretionary has outperformed staples means that every time you've had a headline about bad consumer sentiment, the equity market was arguing that you should give the consumer the benefit of the doubt. So this ratio is still in an uptrend, but if it starts to bleed lower, making lower highs and lower lows, then that's when we would grow more cautious about the consumer. We grow more cautious about the U.S. economy, U.S. risk assets. That's not the call we're making, but given the underperformance to start the year, it's certainly a yellow flag to watch.
Tom, what do you think about that?
Well, I mean, to me, I think Cameron's not really raining on a parade because consumer staples is a defensive trade, and it kind of makes sense. Gold rising and tech not doing well, and I think a lot of de-risking in portfolios. So I think that's why staples and healthcare and defensives have been working. But
why is that all happening against a backdrop, as you heard Stephanie Link articulate,
has so many different reasons to be positive about this market. So why are staples outperforming, you know, at a time when, if you believe what Steph is saying, that they should be outperforming discretionary names?
I mean, I think a simple explanation is, we had 3 years of big gains for the market, and now markets are testing whether we can do a fourth year, so they want to catch their breath. That's almost also why energy materials, I think, have done so well this year, because when we looked at the end of last year, they underperformed so much over the past 5 years that they almost always snap back, and that's why it was a top sector. I think this is a lot of mean reversion, and then when the dust settles, the bull market resumes. But I think it is a bit of congestion.
Cameron, you want to address NVIDIA 1 week from today and what you think is really hanging on that report? If anything, maybe we're making too much of it, but given the recent upset around AI and the whole narrative being questioned and the spending, et cetera, feels like an especially important time to hear from this company, if nothing else.
It is important for the AI infrastructure trade, and that's really important to differentiate infrastructure versus the application. So the infrastructure side of things has been very good for a lot of different portions of the market. Power generation, industrials doing better, semiconductors, of course, but the application of the AI is what certainly has dinged the software names. So I don't know if a good result from NVIDIA could help lift and boost the software names. It really will come to the first quarter earnings season for those names to come out and say, look, we're not seeing AI eat our lunch. And if they do say that, of course, you could see further downside. So for that bullishness on AI infrastructure to continue, NVIDIA certainly has to blow it out of the water.
And Steph, we just don't seem to have that much conviction behind the mega cap trade. What looked really good earlier today, a focal point of how we were going to open our show today, now kind of is ho-hum. I mean, okay, NVIDIA's still positive and Microsoft is as well. And Amazon is too, but now Meta's gone negative, Alphabet's gone negative, Apple's gone negative.
They're really over-owned, Scott, and there's no question about that. Like 75% of institutions own all of these names. So who is your incremental buyer, and why would they do it right now? I think you can pick and choose a couple. I'm behind Meta. I'm a smaller owner of Amazon, but for the most part, I mean, I'm not sure what the catalyst is, because you talked about it all last week. We've talked about it. The free cash flow story has totally evaporated at some of the companies, not all of the companies. Certainly not Apple, certainly not Microsoft, but they're all getting clustered into one. And I think that there's just so many other places that people have been taking their profits and going elsewhere, because you are seeing better results in terms of earnings. And it's across the spectrum. It's been a very broad-based earnings recovery, and I think the ones that have lagged for the last 3 years to the Mag 7 are now starting to get their day, as they should, especially because the economy is hanging in at 3.5–4% growth.
Guys, we'll leave it there. Appreciate it, Steph. Thank you, Cam, as well. Tom, we'll see you back here at the post sometime soon. Another story we're watching today. Speaking of Meta, Facebook founder and CEO Mark Zuckerberg facing a crush of reporters today as he entered a courthouse in Los Angeles to take the stand in that social media safety trial. Our Julia Borston, been there all day long, joins us now with what's happening inside. Julia.
Well, Scott, inside they just broke for lunch, but before that, Mark Zuckerberg has been questioned for the past 3 or so hours, and the past hour has been focused on kids under 13. Zuckerberg pressed on whether Meta worked to attract them to Instagram and keep them engaged,
New lows.
and whether Meta has been taking adequate steps to remove them from the platform. Zuckerberg said, when questioned, he said it's difficult to identify kids under 13. He said it would be helpful if the phone makers could use their data to identify kids, trying to shift the conversation towards the role that those phone makers play. Now, when the plaintiff's attorney asked if Meta aimed to design addictive apps, Zuckerberg said he does not want to build a bad experience, and he wants to build something sustainable for the long run. We did see Zuckerberg walking into the courthouse this morning for this landmark case on companies' liability for product design rather than the content shared on the platform, for which Section 230 shields them from liability. And one interesting note here, Scott, the judge threatened to hold anyone recording with AI glasses in contempt of court. And we saw some of Zuckerberg's team wearing those Meta AI glasses when they were heading in to the courthouse. So I wonder if they were still wearing them when they were sitting down. No cameras allowed inside.
Wow, that's an interesting little twist. You'll keep us up to date. on that. Julia, thanks so much. Julia Borston. Finally, another story we want to tell you about. The Fed minutes out within the last hour, revealing just how divided the central bank's board truly is. Our Steve Leisman is here with that. And Steve, as you framed it earlier, rather than coming together, they seem to be growing ever more apart.
Yeah, these minutes, Scott, are showing a sharp divergence in the policy outlook here. You got the senators on one side saying policy rate is still meaningfully restrictive. They're more concerned about downside risk to the job market. Supporters, on the other hand, of the decision to hold, they saw policy in that range of neutral, and several even wanted the Fed to mention the possibility of rate hikes in the statement if inflation didn't start declining. I want to give you the exact language just so you make sure you know what to do with it. Quote, several participants indicated they would have supported a two-sided description of the committee's future interest rate decisions, reflecting the possibility that upward adjustments to the target range for the federal funds rate could be appropriate if inflation remains above target levels. We could not immediately find
Looking for a bounce, just hasn't happened yet.
rate hikes in recent minutes, but it's worth noting the context here is the desire to show two-sided risk and a commitment to the 2% target, not necessarily to hike rates. Just a couple of things. Several saw further rate cuts appropriate if inflation declined in line with expectations. Some said it was appropriate to hold policy steady for some time. A number said further cuts were not appropriate until quote, disinflation was firmly back on track, and there was that concern that further cuts could show a lack of commitment to the 2% target. Overall, Scott, the way I put it is this: the doves about as dovish as they were before. The hawks, maybe a little more frustration with inflation not coming down the target and not so confident it's going to get there. Hawks sound a little more hawkish, Scott.
Yeah, as you put it, three camps, which is all the more interesting. I wanted to ask you one more question before I let you go. And it's reacting to what Kevin Hassett said about that Fed study related to the tariffs. It just seems as though that this administration is going to continue to attack this Fed whenever it sees fit. The latest being that Fed survey that was out that said companies and consumers absorbed nearly 90% of the economic burden of the tariffs in 2025. To which Mr. Hassett sort of scoffed at that and said that the folks who did that, I think he said they should be investigated.
Disciplined,
excuse me. Yes, disciplined, not investigated.
I'm going to take a little pass on this, Scott. I'll mention two things. One is I have not studied the New York Fed study carefully, in part because I think there are three other studies that say the same thing. So I didn't dig deeply into the New York Fed study. And I'm not 100% sure what Kevin Hassett's problem is with it. You cannot look at the import price index and say that the foreign exporters are paying the tariffs. It's not in the data. Perhaps Kevin has another explanation. I think I'm underscoring what you're saying, Scott, which is that words like disciplining the researchers is pretty heavy-handed. And
yes, my bad. Disciplining is the right word to use.
Yeah, but it's still a heavy-handed word to say about a couple of researchers who probably, meant well. And the way these things are done.
Still a lot of bearish flow in this.
What's the right word?
Haven't seen a bounce yet.
Write a thing saying why the research is wrong and where it's wrong, rather than saying discipline the researchers.
All right, Steve, thank you very much. Steve Leisman, our senior economics reporter. We're just getting started here. Coming up next, take it to the hoop. Our next guests are behind a smart basketball system. They're looking to shake up the at-home gaming landscape. They'll join us after the break. Of course, keeping a close eye on the markets, too, as we had a really good day going. Now, not so much, but we have some time to get things going again. We're back after this.
Cohorts of employment, those numbers are materially higher. Anecdotal evidence that AI might actually be influencing labor. And at the end of the day, we think inflation is really tied to two things: wages and purchasing power. And if fewer people are employed and productivity is higher, that's going to be a big deflationary factor.
I suppose we have to wait a few more months also to strip out some of the distortion caused around the partial government shutdown and also what we've seen previously with the full government shutdown in the back end of last year. We'll have to wait and see if we see a material trend, I suppose, in the next couple of months to decide, which course of action the Fed takes. But just for now, as far as the markets and getting back to that AI disruption type fear and some of the capex bender that these companies are on, how are you looking at both of these stories, as to the sell-off we've seen and,
Keep anticipating a bounce, but it's not happening yet. Still pretty weak.
questions later type of trade in the markets? I mean,
We got 37 minutes to go. 37 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, February 18th. We're looking for a quick bounce. Not happening yet. We could close at the low of the day. Shooting star really starting to look like a gravestone doji on the daily now. Okay, almost a gravestone doji. So we open higher. We come all the way back down. Big range like we did yesterday.
It's when they walked into the year is they were trading at very thick multiples, and so it's price for perfection. And when you get a chink in that armor like AI, then you can see the price action as you're seeing.
Absolutely. And, you know, obviously the markets have been responding with this degree of rotation into sort of more industrial, cyclical type names as well. I mean, materials have been benefiting. How are you thinking about that broadening out with all of the AI disruption fears and some of the capex cycle digestion in mind as to, you know, the trickle-down effects of all of that?
So I'll kind of talk out of both sides of my mouth on this one. One is the broadening, I think, is really healthy for the overall market. We can't continue to rely on 7 stocks to lift the S&P. Right. So I think that's actually healthy, and it makes for a great stock pickers market. On the flip side, though, as we look at, you know, some of the rotation, it seems to be more of a fear trade. I don't know what AI will do, and therefore I will go to things that are less AI-able. Mm-hmm. Physical, industrial, materials, energy, right? So that seems more knee-jerk reaction than it does kind of a healthy, thoughtful material rotation.
Okay. What kind of questions are you fielding about this sort of the capex benders, as I like to call them, that we're seeing from the hyperscalers? Because some of the conversation that I'm hearing emerging in the market this week is, given the reaction that we've seen, and I mean, look at Amazon stock, I mean, a 9-day slide, would there be a point where they tap the brake a bit and we don't see as much spending? And then that has sort of knock-on effects broadly. I mean, even places out in Asia where we've seen these memory stocks rally.
You know, markets have a great way of perhaps letting CEOs know if they've gone too far. Right. I don't know that we're there yet. It's pretty clear that the hyperscalers have said, we will do anything to win this race. You know, Alphabet has come out with $175 to $185 billion. They're saying, we will do anything to make sure we are at the top of the stack at the end of the race. Whether that ends up being the, you know, kind of the best use of capital, right? The weighing machine, the market will help figure that out. Where we are picking up more conversations, though, is, you know, thus far it's really been fueled by cash flow. And these are productive assets. Amazon, Alphabet, others are spending a lot of money because they make a lot of money. As they start to tap the debt markets and that becomes more speculative, that's a very different story, and it takes us into a whole new realm.
Right, yeah, it's that debt to equity ratio type story that seems to be emerging with the likes of Oracle, etc. But let's wait and see. Hey, Brad, we're going to have to leave it there. We've completely run out of time, but thanks for stopping by. I really appreciate it. Thanks for that. All right, Brad Long.
Trying to bounce. 34 minutes to go.
Sam, coming up next, we will discuss how investment managers are using AI and how individuals can incorporate it into their day-to-day work. Market on Close. We'll be right back.
GOBX.
Running out of time for any kind of bounce. MACD is set up. Volume is starting to come in. Maybe they bounce this a little bit. Shorts are covering most likely.
opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Shares of Western Digital on the rise after announced plans to sell shares of SanDisk in a secondary offering. Western Digital is pricing the offering at $545 per share. SanDisk is not selling any shares and will not receive any proceeds from this offering. Western Digital is expected to exchange the shares for certain debt held by affiliates of JP Morgan Securities and BofA Securities. Taking a look at the memory stocks today and how they're going, Western Digital trading higher, up about 3 3/4%. SanDisk slightly higher on the day. Micron getting a really nice boost, in part from Appaloosa increasing its stake, though Lamb Research also trading higher on the day, over 1.5%. I do want to welcome in our next guest, though. Joining us here in our Chicago studios is Jack Lynch.
No relief rally yet.
Ridgeline. Jack, great to have you in person. We were just talking off camera how much I love having people in studio. So thank you for taking the time to come be with us in person. For our viewers who aren't as familiar with Ridgeline, would you mind just starting and telling us a little bit about your company?
Well, Marley, thanks so much for having me. It's so great to be here in person. Ridgeline is the industry's first front-to-back system of record for asset and wealth managers. We were founded by software legend Dave Duffield, who started PeopleSoft and Workday. You could think of Ridgeline as essentially intersecting the things that make Dave's companies great with his talent network, his long-term patient capital, and the needs of asset and wealth managers to build for them the system that they've been waiting for. It's a system that's helping them grow their businesses without additional work, manual headcount, or cost. And we're excited that we now have over $650 billion in assets cumulatively committed to Ridgeline, and that hopefully will crest $1 trillion later this year.
So if it's helping investment managers, what specific problems is it addressing for them and helping to take care of?
Well, right now we are talking to our customers a lot about AI, and they are cautiously optimistic. Perhaps they're a little bit skeptical, but they're asking us that exact same question, which is, how is this technology going to create business value for me? And it reminds us of an old adage, which is people don't want to buy a drill. They want to buy a hole in the wall. And if you were to take that even further, you'd say, well, we'd like to hang a picture and admire that. And if the picture falls off the wall, we'd like you to come back and fix that. It reminds us that buyers want you to help them achieve outcomes. And so we work backwards from what the outcomes are our customers are looking to achieve with Ridgeline to really define the right AI strategy for where we should build. And we focused in areas with our first AI agents such as reconciliation, electronic communication with the bank, or trade compliance, or reviewing thousands.
Let's see how far we bounce with this. All right, shorts are covering. The dealers have to close positions. Getting a bounce.
As a software company, our system has historically given you the tools to do these things, but what's different with AI is that now the tools can actually do the job. And so our customers are really excited to partner with us to achieve those outcomes using Ridgeline.
I love this. You start with the photo hanging on the wall and work backwards with how best to get us to the picture on the wall. Part of that is, I know you sent over some notes before our talk, that you've just introduced this intelligent operations. Explain for us what exactly that means in practice for an investment manager.
Well, exactly what I've been talking about. In fact, it may be intelligent outcomes, because that's what AI makes possible now. Software as a service companies like Ridgeline are actually equally so going to be service as software companies, whereby because of AI, we can train AI agents that have skills like their human labor equivalents to work on service
Nice little bounce.
roles. And our customers are
So far,
about that potential
nice
because
bounce.
as they grow their businesses, whether it's through launching new vehicles such as ETFs, accessing global markets, accessing exposure to privates and alternatives, they're acquiring complexity in their business, and they don't want that complexity to create an operational drag.
That's a little short covering. It looks like dealers closing positions, pushing markets back up off the low.
And Ridgeline Intelligent Outcomes is designed to help them do that.
So you mentioned that they're excited, but you also said that cautiously optimistic skepticism when it comes to AI. So as far as Ridgeline's approach and its offerings, where does human oversight fit into this loop alongside the use of AI in investment management?
Well, CEOs are saying we want to use this technology, but we want to use it responsibly. We want to speak to our investors and our regulators confidently, and trust and transparency are non-negotiables. And so that's led us down a path to working with our customers to create the Ridgeline Responsible AI Framework. Now, this includes acceptable use policies, governance by design, risk monitoring, and third-party oversight. It includes our deep relationships with model providers like OpenAI and Anthropic, and it really sets the stage for our customers feeling like we have a strong sense of trust and transparency in how we're using AI. And from there, we've built our first two major applications. The first are these AI agents, which you could think of as essentially digital coworkers that have skills like their human labor equivalents, and also the Ridgeline Assistant, which is a natural language-based voice and text way to use our system, not too dissimilar from how we are using ChatGPT in our personal lives. And I think this is the future of how you're going to use software through voice and text. So it's a pretty exciting time.
And how autonomous are these systems? You've mentioned that they have oversight involved, but how agentic are they? How much agentic workflow is happening underneath them?
Well, right now, our customers want to achieve the outcome. They want to do it faster. They want to do it better. They want to be more in compliance. And the technology plays an important role. But technology is a means, not a purpose. And so how agentic the system is an exciting thing that AI makes possible. But we've got to have the right human oversight, and we've got to have the right system of record with permissions, entitlements, controls, access, and governance that bring it all together to focus on achieving those outcomes.
So to achieve these outcomes, what needs to happen either technologically or even culturally, I guess, for AI to truly transform?
Let's see if we can't rally here a bit.
Well, we're going to have to embrace change. And change is historically something in financial services that is not very easy to achieve. In fact, really common enemy number one is our industry's desire to sort of resist change. And what we find is there are these agents of change.
25 minutes to rally back up towards VWAP.
Organizations through that change curve, they're championing, then using the technology themselves. I think there is so much alpha in being early right now and being curious and being the person that knows how to use this technology. Just a couple of weeks ago, I myself was working on a personal project, our weekly Friday note we call Reading Ambitiously, which you can get at readingambitiously.com. And I was working with Claude Code to add some enhancements to this newsletter, which is something I previously could have.
All right, shorts covering, dealers closing.
And we went to the Anthropic marketplace, and we started to use one of the plugins that Anthropic provides.
All right, VWAP is overhead. We got dealers. Dealers need to close their positions.
And I thought my toilet paper we bought on Amazon has been reviewed more times than that. And it made me just realize how early we really are. And when one of these technology revolutions avails itself, the world does tend to reorder itself. And I think that if you're early and you're curious, you're going to benefit on the other side of that reordering as being the person who knows how to use this stuff.
And so I have to ask, with talking about the changes we're seeing and trying to get ahead of them and those who are willing to change and those who aren't, and tie into the software sell-off that we're seeing as a software company.
All right, looking for a move back towards VWAP maybe. Be nice to get back to the 50-day.
What's your take on that? Is it overblown? Will there be clear winners and losers? And who are they? And where does Ridgeline sit in it?
Well, right now, that is the number one conversation in boardrooms across the world right now of software companies and public markets. There's been a repricing of over $2 trillion worth of assets. And I think right now, investors are thinking very seriously about the threat that AI poses. And what I would say is that...
All right, so the closing position is looking for a move back up towards VWAP.
And we are going to go through sort of a category...
ExxonMobil moving back towards the high of the day.
exercise to think about software in different buckets. And
Microsoft bouncing with 23 minutes to go. 23 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're looking for a bounce. These late evening bounces. What I have noticed also is that if we get days where we have Notice all the gamma. The total screen is red. If we go back to, what, Tuesday? I don't know why it's doing that. Or let's see, Friday. Friday, this is too garish. Let me change this real quick. Okay, there was more purple during the day. Okay, see all that purple? Telling you to look for choppy price action for the most part. Whereas today, towards the end of the day, it got red, obviously. But like today, very red day today. Just got very, very red. So bigger moves expected. See how far we go with this. How far can we get up there? We're 9 points away from 68.80. So all that red's telling you to look for big moves. Okay, whereas when it's really purple on the screen, a lot of positive gamma. Prices tend to stay pretty much sticky, more sticky, less smaller moves compared to like we're seeing today, big moves today from high to low and low to high. Okay, we're starting to see more covering.
Trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand.
Come on, keep going. Keep going. Dealers closing positions. I would think we could get back to VWAP at a minimum. Middle of the range. Okay, so we're going to break this trend. We're breaking that trend there.
Trading
6,900 is up here. 6,900.
Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals.
See how close we can get to this.
And more time learning. Trade brilliantly with Schwab.
More upside. More. 19 minutes to go. 19 minutes to go.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is
Okay, can we get a little bit more out of this? Get a little bit more out of this. MACD, nice full on turn there. See that? Look at that turn in MACD. The volume came in. Everything's set up pretty nicely. Okay, what do we say is earnings again tonight? We've got Carvana. I don't have a good feel for Carvana. Let me just take a look at Carvana. Carvana. Carvana's over there by Broadcom. Let's see. Let me get rid of Broadcom so I can see. Carvana. Carvana, Rosanna, Donna. Carvana. Okay. Selling put spreads on Carvana, huh? Implied volatility. Implied volatility 98%. Realized vol is 81%. Carvana, what are they looking for again? Carvana, 13%. So if you go 20%, what does that get you? 20% will be about $70 from here. All right, so 450. That's up here. I don't see us getting to 450. 450. Can we get something going here? Let's see how far we go with this.
Earnings were overstated by $1 billion. So a pretty serious allegation there. And that Carvana was far more dependent on undisclosed deals with related parties to artificially inflate its earnings. So a very difficult piece of news for the bulls there were these allegations. 14% one day drop. So now it'll be very interesting to see if earnings can be the redeemer for this recent plunge that we've seen.
Yeah, it certainly will be, and it absolutely will be a focus, at least on the call. I don't know if management will address it, at least in the report, but certainly will be questions asked on the call. As we look at the
Nice rally so far. S&P. Hey, I'm not going to take any iron condors for earnings. I was looking at Carvana. You might want to sell like a 10 delta put. 10 delta puts. I didn't see a whole lot of open interest. That's the only thing here. Carvana. 2 days. Let's see. 20 deltas, 15 deltas, 305. 305. 300s. 280s are a 7 delta. That's still got a lot of premium.
And then 285 was a floor that stands out here as rather extreme low points where the bulls held the line. So from there, we can look at our averages that we follow. We can see that we have bounced off our orange 250 day exponential, which is our
285 is a 9 delta. 290 is a 10 delta. 290. What about 290? 290. 285. What does that look like? 285. What do we got left? We got 15 minutes left. Okay, S&P still moving higher here.
The 251 EMA comes in near about 339. Finally, when we look at our volume profile study, we can see that the point of control, the heaviest trading area, came in near 340, so that's about where we bounced. We're starting to test the upper edges of this volume concentration. Not really a ton of activity again until things pick up here near 450. To the downside, things start to fall off pretty significantly around.
Yeah. Let's see. 10 delta. 10 deltas would be a 290. 290.
As far as the options action that we're seeing today, Rick, are we seeing an uptick in trading? Is it more?
Yeah, I don't like it. 15 delta would be, you get a little bit more premium for a 15 delta 305. 300. I see we could probably get to 300. Okay, nice little move here. S&P still climbing towards VWAP. Okay, 6880s. We're getting close to the money. 6880s on the S&P.
We did see a couple trades too, some closing trades though. It seemed like in the February 20th series,
a lot of volume coming in.
340 puts. They do seem like they were losers though, unfortunately.
Yeah, unfortunately, right now with us at 363.44 is.
Okay, dealers buying shares as this rises to hedge. Okay, we can see that hedge flow turned up. Okay, so far so good. All right, almost at VWAP now. Almost at VWAP. Okay, 6880s. Those ran pretty nicely here. 6880s. Okay, big go. Oh man, look at this thing go. 6900s. Okay, what do we got here? 12 minutes to go. Wow, that was a pretty nice move.
It's interactive learning at its finest. Tune in live or watch on demand.
All right, nice end of day run. Back to VWAP. That was a good day to 50 cents to almost 5.
This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going?
It looks good. Good, good, good. Still going here. Okay, let's see what we're going to do here. Okay, let's see. What do we got? What do we got? Trades looking good. Okay, still going here. Very nice retracement. 6900s. 6900s. Let's see what those are going for. 6900.
And see a full service wealth management and anything in between. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab.
Stay connected to the markets with Schwab Network.
Okay, 6900.
Days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free. Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me.
Nice retracement. Back to VWAP.
College educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop.
All right, nice move off the low. This is really good.
Platforms to your unique needs with nearly endless customization and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Market on Close. I'm Sam Barnes, live from the floor of the New York Stock Exchange.
Hey, Sam Bardis with your Australian accent.
Now to preview DoorDash. We are just minutes away from that earnings report. So let's bring in our next guest, Francis Newton, the CIO of Tuttle Wealth Partners. Francis, so nice to see you as always. So given we've already had 2 reads into this industry with Uber and Instacart,
All right, we're back through VWAP.
metric to look out for DoorDash, do you think?
It's going to be gross order value because that really represents market share, and it's supposed to be up 16.68%. So we'll see if that's consistent.
Today,
That's the
VWAP
challenge they have.
today.
They've got Amazon on their tail, Instacart on their tail, Uber Eats, Grubhub.
Yep, looks pretty good.
Has done a lot of strategic partnerships with household names, and they purchased Deliveroo in the UK to obviously expand themselves globally. And it's just going to be that race to see who can, contain that market share because they've got all the competitors on their heels. I really like the chart, though. We have held the higher low from April 7th of last year, and that was at 155.40. And I think the recent low was about 158 yesterday. So that's a nice double bottom setup for anybody that wants to trade this stock.
All right, what do we got? 8 minutes to go. Still got plenty of time. Yeah, interesting.
To come in with inline results, to exceed results? Are you looking for a downside surprise? I know you said the chart looks good, but what's your expectation for the quarterly report?
I mean, I have no reason to expect anything other than the inline results.
Okay, that's February 3rd. I don't want that.
Any surprises obviously will be punished price-wise. This is a beaten-up sector. I mean, if you just look at the other charts of the competitors, and you've got a lot of bifurcation in the economy with the consumer. You've got, consumer confidence is down. Consumer sentiment from UMISH is recovering in January. You've got delinquencies up. You've got the lower end of the echelon of society not spending as much, and then the upper echelon is totally spending. Now, grocery prices have been elevated for so long. This sort of becomes a deal for an eating option that's more convenient. So I expect it to be in line.
Nice rally in today, 330.
Unless there are any really negative surprises.
Okay, back to VWAP.
What are you expecting to hear, Francis, on investments versus margin protection?
Well, so much of that has to do with liquidity in the overall system and what the overall markets are doing. I think that possibly they've got some new operational efficiencies. They've got ads coming in that are, being effective. And so really all of those things are part of keeping up with the competition. But they do have right now the largest market share, so they just have to do whatever they can to keep that.
Okay, nice rally.
And they keep those orders high.
Can we keep going? Get back to 6,900. Look at this market go. Okay, we've got 6 minutes to go. 6 minutes 30. S&P.
Share, but how much do these rivals pose to them maintaining that, particularly as DoorDash expands globally?
Yeah, hard to say, and I have to admit to you, I'm not a user of any of these services. I just stayed with somebody in Las Vegas who is on Uber Eats, and I don't know what makes it more convenient, if you already have an Uber account or what restaurants, but they just have to keep increasing that market share. I think what they're doing as far as partnering with tons of household names like 7-Eleven and Kroger, and they've got all these companies that they're partnering with, is they're trying to kind of hold on to that advantage. And so their ability to do that is going to be huge. And it's hard to predict that. And the thing about it is when I look at these stocks where, I'm following so many stocks, right? I'm not just following.
Okay, still going.
I know that the pricing is very efficient in the chart. And so I just watch those technicals.
Yeah, blocking and tackling, it seems like with this name. But as far as a competitive edge, very much the view out there is that it has been quite successful with respect to its diversification, outside of the US market into places like Europe, obviously with what it's doing around Deliveroo, etc. Also diversification of risk.
Okay, we're still going here. We got a nice lift, S&P. Wow, I'm very impressed with this. Back to the 50-day. 6,900 is definitely doable. Okay, we got 5 minutes to go. 5 minutes to go.
Yeah, any efficiencies, right? Like my Grubhub, when I looked into this a little while ago, the Grubhub was kind of hooked to my Amazon account. So the thing that users like is they like less clicks. Like anytime I can use Apple Pay, I don't have to type in my credit card or shop or whatever it is that makes it's just less clicks and more options. And so they're really trying to be on the forefront of that. I just want them to be able to somehow airlift or airship or teleport Indian food from London to my place in Florida, and then I will be a lifelong customer.
Okay, almost $10 now. Almost $10 on those options.
I would also like to get in on that. There's a few London restaurants that I would like delivered to my house. But, I know you like to study the charts and the technicals here, and I'm looking, and they're down, close to 18% in the last 52 weeks. But despite that, most of the analyst notes I read today remain largely positive. How are you reconciling the market caution we seem to be seeing with the long-term bullish view?
Yeah, it's just the sector, right? And everybody's looking for these. So the market has gone through a major rotation, as we know, from big tech into other companies. And anytime you have a massive shift like that, you're going to have winners and losers all over the place. And when you look at weaker retail sales and you look at stress and consumption and you look at some of the delinquencies moving up, but then you look at something popping and then the labor market's deteriorating and then it's improving a little bit, then it's really tech.
Come on, keep going, keep going.
They're only 2% of the market. So you try to marry all of those numbers, you get increased volatility in some of these sectors. I just think as long as people have money to spend and the credit card data.
Oh, nice. Nice little rally. Nice little rally.
I just think DoorDash is not going away. I think we've had a cultural change. It's just like we don't go to movie theaters anymore. We watch everything on Netflix. I personally get everything delivered by Amazon because that's just the simplest thing for me. And I don't go to grocery stores very often anymore. And so I think we've had that cultural shift. So as long as you have people continuing to spend, I think DoorDash and its competitors will do well. And DoorDash will do well well to the extent that it can keep its big market share.
I suppose we'll find out in a few minutes. Francis, thank you so much. Thank you so much for making us so hungry as well. I could really go for some dal and some naan bread right now, but appreciate it. We'll speak to you next time. Francis Newton there, Tahoe Wealth Partners. Okay, we are nearing the end of this market session. We'll bring in George Phillips to break down today's action, and we'll have earnings from Carvana, DoorDash, and eBay coming up next to the market. Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free.
Okay. Well, all right. So we're done. Looks like we're done here. Okay. What do we got? 1 minute, 1 minute, 30 seconds to go. 1 minute, 30. That was a nice little rally there. Mondo, I don't know if you were paying attention there, what you were doing. I wasn't paying attention in the room. I was just eyeballing these trades.
No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey. And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking
375 calls. I like that idea. You got a minute left on Carvana. Be nice to see them beat.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers bring traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network. Stay connected to what moves markets.
Okay, 10 seconds.
The Schwab Network app and
10 seconds.
coverage wherever you are.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series.
All right. That was fun. That was fun. All right, I got a hard stop. I'll be here. I'll be watching the Carvana earnings, but got to run. Have a good one. Nice little bounce there. Hopefully you were able to trade this little bounce. MACD turned over. Looked good. All right, folks. We'll see you in the morning. Ciao.